Very good morning, everyone. Welcome back to CA Foundation Marathon Revision. We are on day 2. On day 1, we have done chapter 1, 2, 3, 4, and 5. So day 2, we should do the rest of the chapter, starting with chapter 6. So we'll start with bills of exchange, going in the same order, so that even when it comes up on YouTube and people are watching, they know how much to scroll forward or how much to scroll backward. Because we are not rearranging the chapters, we're going in the exact same order in which it is there in the syllabus material. Okay. Chapter 6, bills of exchange. Let's start with bills of exchange. Tell me, what do you mean by bill of exchange? So before we start bill of exchange, let's understand how does a simple cash transaction. So you sell goods to a customer and the customer gives you the money instantly. This is called a cash transaction. This is called. So there is no problem, there is no requirement of bill of exchange, there is no bills receivable, there is no bills payable, there is no promissory note in this kind of transaction. But there's a kind of transaction where you sell the goods to your customer and your customer will say that he would pay the money to you later. We would say that he would pay the money to you. There's a small problem here. What if the customer cheats on you and then says that he doesn't have to pay you money? What if he denies to make the payment later? What if he doesn't even acknowledge that he has purchased the goods from you at the first place? Then there is a problem. You are now not proving that he should give you money. Now you should prove that you know him. Now you should prove that he actually purchased goods from you. To take old CCTV footage and all out now. It's a terrible mistake that you did by trusting him. So the next time when someone asks for goods and they say that they would pay the money to you later, you would not accept such credit transaction with ease. What would you do? You would tell them that you need to acknowledge the fact that you have borrowed money from me or you owe me money. So along with the goods, we'll also send him a paper. And inside this paper, we would write stating that I unconditionally order you to pay me or my order a sum of rupees 10,000 after 30 days. And I would tell my customer that you can touch the goods only after you sign on this paper. So after they sign on this paper and they send it back to me, see here the same paper with the signature. What is the name of the buyer? Right, that's his name. So after he signs and sends the paper back to me, he can keep the goods. One fine day, when I ask him for money, he cannot say I don't know you. Because if he says that he doesn't know me, I'll show the paper and then say, you don't know me, but do you know this person who signed it? It's you. You owe me money, I have ordered you and you accepted. Now shut up and pay. So we can ask him for money. If he doesn't pay us money in spite of we showing the paper, we can sue him. We can basically sue him in the court of law, stating that he has signed the document, he has purchased the goods, but is not paid the money to us. Get what I'm trying to tell? So that paper, what I prepare and send to my buyer, is bill of exchange. Is a bill. Bill literally in English means paper. Bill means what? Paper. And this bill is arising for exchange of goods and services between two parties. For exchange of goods and services, if it is not cash settled, if it is not cash settled, that will be marked by way of a paper or a document stating that it is not cash settled, and that, my friend, is of exchange. Bill meaning a paper representing the exchange transaction which is due for settlement but not yet settled is bill of exchange. Hope you all understood. Now observe the meaning of the word bill of exchange by looking at that paper. What is a bill of exchange? It is an unconditional order. What is it? Come back here, have a look at it. Here, I unconditionally order you. So the moment the drawer prepares this, drawee has only one thing to sign. Can drawee change the date, change the amount, change the period? No. Drawee, meaning the buyer, cannot change anything on that paper. Only place where he can keep his pen on the paper is for signing. So you understood that is an unconditional order. Who makes this order? Made by seller. Seller is the general name, but his proper noun is drawer. What's his name? Very good. So that person's name is drawer, and this person buyer, what is his name? Drawee. So this is made by the drawer, accepted by drawee. How does the drawee accept it? By signing. I'll show it to you that he has signed. Have a look at this document. Do you see the signature here on the paper? His name is drawee. So it's a document prepared by the drawer, accepted by the drawee. What is it for? To pay a specified sum of money. To pay a specified sum of money. We cannot have a bill of exchange without specifically mentioning the amount. Can the drawer tell the drawee, you'd have to give me how much ever I ask? No, you'd have to tell how much? 10,000. 15,000, 20,000. You should mention. You cannot tell ishtu kodbeku, ishtu ashtu alla. How much? You should specify the amount. Without that, it is an invalid bill of exchange. As per Negotiable Instrument Act 1881, it's mandatory to specify the amount in the bill. You getting it? Yes. So it has to be for a specific amount. If you observe there, 10,000 is there for a specific amount. So repeat, what is a bill of exchange? It is an unconditional order paid by drawer, accepted by drawee to pay a specific amount. To pay a specific amount. So when should the drawee pay? So drawee should pay at the end of a specific period or on a specific date, either to drawer or to his order. Read this, either on a specific date or at the end of a specific. Very good. Come back to the bill of exchange here. Here do you see, is it mentioned after 30 days? So this is a bill with specific period. This is a bill with specific. So in this bill, the maturity will happen at the end of 30 days. Instead of mentioning 30 days, we could have also mentioned, I unconditionally order you to pay me a sum of rupees 10,000 after, on 31st of December 2023. I can mention the date, or I can tell after 30 days. That's my choice. That's my, do you get this? So either on a specific date or at the end of a specific period to drawer or his order. So when I prepare that bill to you, you owe money to me, or if I am not in a position to collect, let's say I am not available on 31st of December, what do? I'll ask you to pay to somebody on my behalf, and you are supposed to pay that person. You cannot tell, no, I'll pay to drawer only. It's okay if it is 1 week late. No, I instruct you to pay to a specific person. You are supposed to pay to that person. Are you getting it? That is what gives me an option to discount the bill or endorse the bill. That is what is not available in the case of a promissory. Promissory note cannot be endorsed. Promissory note cannot be discounted because promissory note is not a bearer instrument. It is a specific person instrument. Are you getting it? Let's see this. See here. Here I mentioned at 30 days. Before that I mentioned to pay me or my order. So every sentence in a bill of exchange is there because it is given to fulfill the definition criteria. If certain parts of that statement is not given, that will not be bill of exchange. Are you guys getting it? Come on, for one last time, please read what do we mean by bill of exchange. Bill of exchange is an, very good, made by, to drawer. If you observe here, the roles taken by that seller is also called as drawer. Another name is payee. Payee is the person who pays the money. Sorry, pay is the person who receives the money. Buyer is the person who pays the money. So buyer is the one who's bought the goods. Buyer is the one who's received the bill of exchange. Buyer is the one who should pay the money. Now, the one who has the word EE in their name is the one who's receiving it. Now, this bill of exchange is prepared by whom? Drawer is the one who draws the bill. Drawer. And the one who's receiving is called EE will be there. This guy will receive, so there is EE. This guy has to pay money, payer. Who's supposed to receive money? Seller is payee, but it's given in italic and red. Why? Because seller can be payee, seller need not be payee. Seller has the option to endorse the bill to another person or discount the bill with the banker. If he endorses it or discounts it, then the banker or the endorsee will become the payee. They receive the money on behalf of the drawer. So drawer is a seller, but drawer need not be payee. Payee can be a person other than drawer. You all get it? Yeah. Very nice. So after this, what we discussed is the dates involved in bill of exchange. There are various dates involved. Shall we discuss them? The first one is date of drawing. What is date of drawing? The date on which bill is drawn by drawer. The date on which bill is drawn by drawer. So date on which bill is drawn by, if you see the bill of exchange, in this that 1st of December is there, no, that is date of drawing. That is date of, this is very different from date of acceptance. This date of acceptance, no, date of acceptance is the date on which drawee will sign the bill. What is date of acceptance? Date on which the bill is accepted or signed by drawee. We have to go to our example. 1st of December the bill was drawn, date of drawing. 3rd of December bill is accepted by drawee. He has signed it. So date of drawing is 1st of December. Date of acceptance is 3rd of December. You get the difference? Everyone, is it fast? It has to be, okay. Then after the date of acceptance, next comes bill date. What is bill date? Bill date is the date from which the bill period starts. Bill date is the date from which bill period starts. Now, the date from which bill period starts, andre, should I count it from date of drawing or should I count it from date of acceptance? Depends upon the type of the bill. So, bill can be bill after date or bill after sight. Observe, bill after date, bill after sight. If it is bill after date, then the bill period starts from date of drawing. If it is bill after sight, bill period starts from date of acceptance. So let's see the bill after date. So if you see this specific bill, see the heading of the bill. What does it say? Bill after date. Bill after date. And what is the bill period? 30 days. So here 30 days will start counting from 1st of December. What if the drawee signs the bill on 3rd of December? See here, drawee has signed the bill on what date? 3rd of December. But the bill period of 30 days counts from 1st of December. Why? Because it is bill after date. Because it is bill after date, irrespective of the date on which drawee signs, it will be counted from the date of drawing. Because it is bill after date, it becomes a bill of exchange from the date of drawing. The next one is bill after sight. In bill after sight, bill period starts from the date of acceptance. Bill period starts from the date of, so that 30 days is there, no, that will be counted not from 1st of December, but it will be counted from 3rd of December. Did everyone understand this? Pakka? Very good. Sir, how do we get to know whether it is bill after date or bill after sight? Should be mentioned. Should be nothing mentioned, it is bill after date. Nothing is mentioned, it is bill after date. I start counting from the date on which I draw the bill, not from the date on which drawee accepts the bill. Why? What if the drawee keeps the bill till 30th December and doesn't sign? Smart alva. 30th December sign madare, then the payment will become 30 days from 30th December. So it has to be clearly negotiated that it is bill after sight. If it is not negotiated to be bill after sight, by default every bill is bill after date. Got it? So these are the two types of bill dates, depending upon date of drawing and depending upon date of acceptance. Next one, what is due date? What is due date? Due date is the date on which bill is due for settlement. Bill is due for settlement, meaning the date on which the drawee has to pay and the date on which drawer has to receive money. Now, this due date again depends upon the type of the bill. Due date again depends upon the, see, there are two types of bill. What are the two types? Bill after date and bill after sight is for bill date. For due date, there are two types of bill. Bill with specific date, bill with specific period. Bill with specific date. Oh my god, I understand last 5-10 minutes of the class you throw things threatening. Beginning of the class only is little serious. Breakfast break, Bika. Okay. One is bill with specific date, other one is bill with specific period. Bill with specific date means in the bill of exchange, you mention a specific date on which the bill has to be settled. You mention a specific date on which the bill has to be settled. Bill with specific period means the one that we saw till now. In the bill, they mention a period at the end of which the bill has to be settled. Is there a remote somewhere? No one has it. Sentinel ಇಟ್ಟಿದ್ದಾರೆ ಬೆಂಗಳೂರವರು 17 ಮೀಟರ್ ಬದುಕಕ್ಕಾಗತ್ತಾ 16. Okay. Listen. So it depends upon the type of the bill. I told you two types. One is bill with specific date. Second one is bill with specific period. The example that we saw till now, we had mentioned 30 days. So at the end of 30 days period, bill will mature. It is bill with specific period. So for bill with specific period, like this, see here, they mentioned 30 days. What do? We take 1st of December add 30 days. Or sometimes we take 3rd of December, depending whether it is bill after date or bill after sight. So basically we take bill date. What do we take? We don't take date of drawing, we don't take date of acceptance. We take bill date. Bill date can be date of drawing, bill date can be date of acceptance. It depends upon time. So we take bill date. To bill date we add bill period, we get due date. Take bill date, we add bill period, we get due date. This is bill with specific period. How much is the period? 30 days. So add 30 days to 1st of December. What do we get? 31st of December. So in this case, it is 1st of December plus 30 days, 31st of December, like you just mentioned. Bill date plus bill period is equal to due date. Bill date plus bill period is equal to, everyone got it? Very nice, yeah. After this, what you would have to know is bill with specific date. Bill with, in this category of bills, what you do is, you see bill here, in that bill specifically you mentioned 31st December. Specifically you mentioned, what does that date mean? That is the date on which it has to be settled. Why? I wrote 31st December. You saw 31st December. After reading that only you signed? No. You have to pay the money to me on 31st of December. No 30 days, no 31 days, no 1 month. When should you pay? 31st of December. Did you understand this? That is bill with specific date. So you tell me, what is due date? The date on which bill is due for settlement. The date on which bill is due for, this due date can be, this due date depends upon the type of the bill. So it can be bill with specific period, it can be bill with specific date. So how do we find due date in bill with specific period? Bill date plus bill period. If it is bill with specific date, that specific date itself will become due date. Did you understand? The last date is the very easy one, maturity date. Is the last one. What is maturity date? Last day to settle the bill without interest. Last day to settle the bill without. Remember, the settlement need not happen on maturity date. The bill is due for settlement on due date. The bill is due for settlement on due date. So the due date you would have to pay. But for some reasons, if you are not able to pay, I will not be very rude with you. Are you getting it? So it will be not like, okay, you're supposed to pay on 31st December. If you pay 1st of December, I will be 1st of January, I will be angry at you. No. Give you some grace time. And see, give you some, for some genuine reason, you might not be able to pay. So how much of grace time will be given? 3 days. How much of grace time? Beyond those 3 days, if you further delay, I will charge interest. I won't charge interest for very next day of delay. Lot of bills, whenever you would have to pay electricity bill or water bill and everything, there will be last date. After that, 1 day, 2 days, if you pay late, it should be still okay. Beyond that, if you pay late, they charge interest. Start charging interest. Am I right? So exactly the same here also. But that maturity date is 3 grace days time given only if in case there was some confusion. Only if there was some. When will that confusion come? See, we have not agreed upon the date. Both have not agreed upon the date. I have given you a bill with specific period. I have given you a bill with specific, I told you 30 days. So 1st of December we signed, we told 30 days. In your mind, you have 1st of December, you have 30 days. You don't have 31st December anywhere written. You have to count 30 days to arrive at 31st December. So there is a possibility that on 31st of December, you are not aware that it has to be settled. So I will give you 3 grace days time. However, if I and you enter into a bill, and in the bill I have mentioned that you have to pay me money on 31st December, and you have signed it, then you have to pay the money to me on 31st December only. There is no grace days. Grace days of 3 is allowed only if it is bill with specific. Very good. If it is bill with specific date, due date is equal to maturity. Due date is equal to, read this, bill with specific period. Maturity date is equal to due date plus 3 grace days. Bill with specific date, maturity date is equal to last day. Do you understand? You know what is bill with specific date and what is bill with specific period? Akka? Very nice, yeah. So what if maturity date falls on a holiday? Depends upon the type of holiday. Depends upon the two types, okay? Known holiday, unknown holiday. See, what is a known holiday? A holiday which is mentioned in the Schedule to Negotiable Instrument Act 1881 is a known holiday. A holiday which is not mentioned in the Schedule to Negotiable Instrument Act 1881 is unknown holiday. or it's also called as unforeseen holiday. What is it called as? See, public holiday, national holiday is different from scheduled holiday. A public holiday can be a scheduled holiday. A public holiday need not be a scheduled holiday. Are you getting it? Now, Holi, Dasara, Deepavali, Christmas, Gandhi Jayanti, all of these can be public holidays, can be national holidays, but these are not scheduled holidays. When are they scheduled holidays? If that is mentioned in the Schedule to Negotiable Instrument Act, it's a scheduled holiday. If it is not mentioned, it is not a scheduled holiday. Let's say there is some festival which is not a national holiday. Mahalaya Amavasya, it is not a public holiday. It's a state holiday. It is not a national holiday. But let us say that is mentioned in Schedule to Negotiable Instrument Act 1881. Then it is a holiday, known holiday. We know that that day is a holiday. That day the bank is not working, the settlement might not be possible. Payment might not be possible. So then what do? We know it before, no, that that day is a holiday. Pay it one day before. So when the maturity date falls on a known holiday, settlement is supposed to happen on the day before the known holiday. And there are only 5 known holidays that you should remember. How many known holidays that you should remember? Beyond these 5, there can be many other known holidays. I am not telling you only 5 of them are known holidays. 5 fixed known holidays. Other than 5, there can be many more known holidays. But they will be taken as a known holiday only if the question mentions. Don't take Christmas, New Year, Gandhi Jayanti, and February 14th and all as known holidays. No, they are not. Can they be? Oh, they can definitely be. When? If it is mentioned in the schedule. We cannot refer the schedule. If they give in the question that this particular day is a known holiday, we will take. If they don't tell, we will not take. How many things do we take? We'll take 26th January, Republic Day, 15th of August, Independence Day, 1st of April, not because it is full day, beginning of financial year. 30th of September, because it is half yearly closing, and all Sundays. And all Sundays. These 5 holidays will be considered as known holidays. Other than this, can there be any other known holidays? Answer is yes. But how do we get to know? They will tell in the question. If they don't tell in the question and it falls on 2nd of October, what will you do? Don't consider it a holiday. That is it. That is the maturity date. That will remain to be the maturity. What if it falls on 25th of December? Merry Christmas, but that is maturity date. Don't take it as 24th of December. Are you getting what I'm trying to do? It falls on January 14th. You know January 14th is Makara Sankranti. Till 14th of January, happy Makara Sankranti and maturity date to you. There is no going to be 13th of January. Don't take it the previous day. Did you understand? And Sundays. Sir, should we mug up all the Sundays and go? No. They will give in the question that it is a Sunday. Only then it is a Sunday. If they don't mention in the question, it is not a Sunday. What if it falls on, let's say, someday? Let's say it falls on 12th of November. And you know 12th of November is Sunday. How? Sir, that day I can never forget, sir. The way she treated me that day was so bad. But don't take that as Sunday. Don't. If the question tells, it is Sunday. If the question doesn't tell, it is not a Sunday. What if the question tells 13th of November as Sunday, but you 100% know that it is not Sunday? You can prove it with calendar. Still take it as Sunday because the question tells it is Sunday. Don't use your common sense. Like they tell it is Sunday, take that as Sunday. If they don't tell it is Sunday, then it is not a Sunday. Clear? So if it falls on a known holiday, what do we do? The day before. The day before. If it falls on an unknown holiday, like any ban, the strike, unforeseen situation happened, which is not mentioned in the schedule, but it turned out to be holiday, the next one. Get this? The next working day. The next working day. There can be another question here. Asking, okay, sir, what is it? Something's wrong here. You understood the known holiday and the unknown holiday part. The question is, sir, how did they know in 1881 that Republic will come in 26th of January and Independence will come on 15th of August? No, this schedule is issued every year. Yeah, this schedule is not what was. Act is in 1881. The schedule is issued in every year. Schedule list of holidays will be issued every year. Are you getting it? Okay, fine. Let's go to the next part. So it is the day before, and this is the next working day. Okay. Any creative situation that you should ask? Like what if yesterday is maturity day, yesterday was a known holiday, today is an unknown holiday, tomorrow is Sunday. Do you have any such circumstance which you think is cornered and has no answer? It always has an answer. Yeah, if it falls on a known holiday the day before. What if the day before is a unknown holiday, then the next working day. Sir, what if that next day is Sunday? After that, one day you work, no? Still, have they told what is it? 12th Jan 2025 is maturity date? Don't at all use it. Only question is Sunday and the kotre matra Sunday. If they don't give it is Sunday, it is not a Sunday. Are you getting it? And remember to take 365 days if it is a leap year. Okay, yeah. Summarizing all the types of bill at one place. Shall we? Very good. Observe types of bill based on date of drawing and based on the due date and maturity date. Based on the bill date. Based on the bill date. It is bill after date, bill after site. Bill after date. What is bill after date? Bill period starts after the date of after the date of drawing. What is bill after site? Bill period starts from the date of acceptance. What is the types of bill based on maturity date? Three types. One, bill with specific period, where there is a period mentioned. That period will be added to bill date to arrive at due date. Am I right? For this bill with specific period, due date and maturity date are not same. You give 3 grace days after the bill due. After the bill is due. Next one is bill with specific date. In bill with specific date, what do you do? Due date is equal to maturity date. There is no 3 grace days. Understood? Then comes the last one, bill on site, bill on demand, bill on present. In this bill, it is on good faith, meaning I draw a bill, you accept the bill. We neither agree upon a specific date nor do we agree upon a specific period. I will say, whenever you have money, you ask, I will that day present the bill and then you accept and give me the money. Or whenever I want money, I will tell, that day I will send the bill, you give me the money. So we are very good friends. In that case, we go with bill on site, bill on demand, or bill on present. The moment I see you with someone else, and then I feel like you are not my friend, you are best friend with somebody anymore. That day our friendship is upset, so that day I will send the bill to you, ask for you to send. You will say, I don't have money. Avella gottilla, bill on site. You should have thought before you went with him for lunch or dinner. And you didn't call me, no? You both only went. Oh, no, pay me the money. I don't know. I want now only. If you pay tomorrow, I will charge interest. Why? I've lost interest. So that is bill on site, bill on demand, and bill on present. For this kind of bill, they will mention the date. That date is the date of that is the due date. That is the maturity date. Again, in that case, there is no grace days. Where do we give grace days? Only in one situation. It is bill with specific period. And important to remember, listen, when it is bill with specific period, remember 30 days means 30 days. 30 days doesn't mean 1 month. 1 month means 1 month. 1 month doesn't mean 30 days. If they tell month, write like this: date, month, year column, you'll write no, add in month column. If they tell date, add in date column. And when you take that, whatever the date and month you arrive, you take that. If that arrival, whatever is there, that is not there, then take the last date of that. Let's say 31st of January. 31st of is the date of drawing. 1 month from 31st of January is 31st of February. But 31st is not there. No. Take 28th of February. Last date. Don't take 3rd of March. You get this? If it is leap year, take 29. Are you getting what I'm trying to tell? Everyone, from 31st of January, if the bill is due in 1 month, what is the due date? 28th of February in non-leap year, 29th of February in leap. Let's say from 28th of February, that is the end of the month, okay, it's a non-leap year. From 28th of February, let us say the bill is due in 1 month. 31st of March, no, 28th of March. Why? From 28th of February, 1 month when you count, 28th is there, no, in March, take 28th only. If it is not there, then you take the last date. Are you getting it? Okay. From 31st of July, 1 month. 30th August, 31st August. 31st August. Why? August has 31 days. Forgot, no? August has July and August. Both have 31 days. Why? See, knuckles come together. Yeah, July and August. Julius and Augustus were friends. So it's named after two friends who ruled the land of Rome. And they gave equal number of days in upholding their friendship. And as an extension, first Sunday in the month of August, we celebrate friendship. You always like, yeah, prati sati friendship day Sunday ne barate. Prati sati Sunday barala. First Sunday is called friendship day. You remember, no? Monday you used to take friendship band to school. You understand? Let's say next one. Shh. Listen, yeah. Listen, yeah. What if the bill is due for 30 days? For how many days? 30 days from 15th of February. What to do? Literally add 30 to 15. It will become 45th of February. 45th of February is not there. Deduct 28 days and then add 2 months. You deduct 28 days you convert to 1 month. So add 1. Instead of adding 28 days here, you add 1. It will become 3rd. And then 45 minus 28 will become 17th of March will become the due date. And because this bill with specific date, we give 3 grace days to identify maturity. Did you understand how to count? Literally do addition. Okay, and that part you can handle, not very difficult, and I know that you can do it. So this is done. So what do we have to do next? We have to know the accounting. What is it that we should do next? Accounting. So to learn the accounting, it depends upon what the drawer does. Drawer is the seller who sells the goods and then receives the bill. This drawer has an option. Drawer has an option. What options does the drawer have? Drawer has the option to hold the bill till maturity. Drawer has the option to discount the bill with banker. Drawer has the option to endorse the bill to supplier. You tell me how many options does the drawer have? 3. Number 1, holding the bill till maturity. Number 2, discounting the bill with banker. Number 3, endorsing the bill to supplier. Depending upon what option the drawer will choose, the accounting has to be done. Let us say the drawer chooses the option to hold the bill till maturity. He's like, na kaitini. I will wait. If he decides to wait, then what is the accounting entry? I'm going to show you the accounting in the books of drawer or seller as well as drawee or buyer, both simultaneously. Shall we? At the beginning, for the purchase and sale transaction, see, the seller sends the goods to buyer. What is the entry in the books of seller? Debtor account debit to sales. Here the debtor's name is buyer or another name is drawee. So what is the entry that the drawer or the seller should write? Drawee account debit to sales account. Did you understand? For drawee, it is purchase. Yes, right. Purchase account debit to cash, but this is a credit transaction. See, if it is cash transaction, bill of exchange only will not come. So purchase account debit to creditor. Here the creditor's name is. So what is the entry you should write? Purchase account debit to drawer. Everyone understood? Drawer is the single person. Drawee can be many. Okay. Just to differentiate, I've given that icon. Can you see the icon there? Very good, yeah. So after the seller gives the goods to buyer, seller also gives the bill to buyer. Buyer will sign it and then buyer will give it back. So when the bill is given by seller to buyer, there is no entry. When the buyer signs it and then returns it back, then it has become a bill of exchange. Till then it is not a bill of exchange. Once he signs it, it becomes a bill of exchange. Then what is the entry that drawer or the seller should write? That bill is received. Bill is received. Bill is an asset. So it should be welcomed by debiting it. Be welcomed by debiting it. One second. This graphic should come later. It's for settlement. But I'm sorry. So when the bill is drawn and the acceptance is received, entry will be bills receivable account debit. Bills receivable account credit will be given to drawee. Bills receivable account debit because that's the asset coming in. Drawee account credit because here drawee was debited as an asset. Here drawee was debited as an asset. We are crediting drawee closing that asset. We are crediting drawee closing that asset. Everyone understood? Now in the books of drawee or buyer, what would be the entry? Drawee now has a liability. What is the name of the liability? So he will credit bills payable. Previously he had a liability by name drawer. That liability will decrease. Yesterday we discussed, you remember, decrease in one liability, increase in another liability. Example is this. Drawer account, which is a liability, will reduce. Bills payable account is a liability which will increase. For which the journal entry is drawer account debit to bills payable. Got it? On the maturity date, what will happen? I'll show it to you here. See, on the maturity date, seller has the bill with him. Seller will send the bill to buyer and buyer will send cash to but sometimes buyer will become bad boy. He will say, I won't give cash. Yeah, dishonor. Yeah, honor means manamaradi. Dishonor means manamaradi is not there. So we'll write the entry here. for maturity date. On the maturity date, like I mentioned, two things can happen. One, honored. Two, dishonored. When it is honored, drawer will receive money. Entry will be cash or bank account debit. Credit, we give the bill to him. No, credit, bills received. And bills payable is decreasing to drawee. He is giving money. Cash is reducing. He will credit cash. His bills payable is reducing. He will debit bills payable. He will write the entry bills payable account debit to cash account. Bills payable account debit to. Everyone understood this? Fantastic. By this we are done with maturity date accounting. It is honored. What if it is dishonored? In dishonored, what will happen? This money is coming. No, green color. It will not come. Yeah. So that money will not come. See, money will not come. Email into mark. I think I should make the into mark. Let's do that. On the maturity date, if the bill is dishonored, here we debited cash. Now we cannot debit cash. Are you getting it? So I will write his name. Why? If he gives cash, I'll write that cash in my asset side. I'll remember the cash. If he doesn't give cash, I will write his name in the asset side. Why? You have to give money. You are my asset, not your cash. If you give cash, I'll receive cash. If you don't give cash, I'll write your name. Are you getting it? So I'll write his name. What's his name? Rai. Okay, before that, I would have to prove that he has to pay money and that bill got dishonored. In the process, I will pay some noting charges. So noting charges, when I pay, it is my expense. I would write noting charges account debit to cash. Now, why would I pay noting charges? He told he will not pay. Now, I would have to go to court and then sue him. When I go to court and then sue him, the judge will call and then say, hey, Yenappa Drai, you are not paying money to drawer. Drai will tell, nothing like that, sir. I will pay money. Hey, please take care. Then judge will be like, am I a joke to you guys? He filed a case that you are not paying money. Here, when I call you are paying money. Like I'll say, hey, are you a joker? Like, why did you tell that he did not give money? Drawer will tell, sir, mother promised, sir, that guy told, mother promised, sir, that guy told he will not pay money. So only I called to court. Then this drawer will tell, sir, he is lying, sir. My mother promised, sir. I told, he never asked me money only. If I would have asked, I would have given money. You get what I'm trying to tell? He is telling lies, like mother promise. Then this judge is willing, like, what's wrong with you all? Don't waste court time. So it is drawer's responsibility to prove that drawee has failed to pay the money before you sue him. So what should drawer do? Drawer will go to notary. Notary public would have seen, no. So you go to notary public, give the bill and then say, sir, this guy has not paid money. So notary will take that. He will send one notice saying that, okay, here your drawer has come. He's saying that you have not paid money. If you pay the money, good. If not, we will send legal notice. We will see you in court. Then the drawee should come pay the money. If he doesn't pay the money, that notary will put a seal and signature saying that, yes, I issued a notice to the drawee to pay money. He denied the payment. This will become an evidence with which the drawer can go to court of law. Without that, he cannot go to court of law. You getting what I'm trying to tell? In that, if drawee tell, sir, I was about to pay, then your notice was sent. Why did you not pay? That has a point to ask. Get it? So that notary public, whoever puts the seal, sign, sends the notice, he doesn't do it free. Thing happens free in our country. You're getting? So you would have to pay money. That money, what you pay is expense. So drawer, when I pay, I'll write expense account debit to cash or bank. That is noting charges account debit to cash. Understood? Then I would write his name, drawee account debit. I'll throw the bill back on his face. You keep your bill. And then I'll give him the bill and I'm asking him for money. Are you getting it? This noting charges is not my expense. Whose expense? Own expense. I have paid. So when I recover from him, I won't just recover the bill amount. I'll recover noting charges also. Why? Whoever does the mistake, they only should pay the fine. Then make him pay noting charges at the beginning. No. He's not paying principal only. Why will he pay noting charges? Avun male case file madake avune band fees pay martana. Think yeah. Why will he pay? He will not. So you will pay and you will recover that from him. Okay. So when you recover that from him, you will also credit noting charges. Saying that drawee, you should pay me not just for bill money, you should also pay me for noting charges. Okay, na mane hatra kalasbidu. Then that guy, no, drawee has to write the entry as bills payable debit. Liability is decreasing. Noting charges expense debit. Expense is increasing. Credit will be drawer. He has to pay both the monies to drawer. Are you getting it? Then settlement entry. This guy will write cash to drawee. That guy will write drawer to cash. How much ever paid, they will write not paid, bad debts or deficiency. Okay. Everyone. So this is the accounting that should be done in the case of bill held till maturity. Everyone understood this? Is something fantastic. Yeah. Then after this, that noting charges, whatever is there, has to be transferred to P&L account by drawing. This expense, no, you will charge it to where? P&L. Aita. Shall we see the next case? Next case is discounting with banker. What is the next case? Discounting with banker. Our drawer discounts it with banker, meaning he gives it to banker. Banker gives the money to drawer instantly. Banker will keep the bill with him till maturity date. On the maturity date, banker will go and collect the money from the drawer. Till that time, banker will wait patient. So drawer will get the money immediately. Banker will wait till maturity date. To seller, actually, this doesn't have any impact. Seller is there, no drawee. To him, this doesn't have any impact. Whether the bill is discounted or the bill is kept till maturity date with drawer. In his books, entries will be same to same like what we discussed previously. Understood? Now, as a drawer, I'm supposed to receive the money after 3 months. For how many months? If I go to the banker, banker will give the money to me instantly right now. The banker is giving the money to me instantly right now. I'm getting money instantly. No, I'm at an advantageous situation. Banker is at disadvantage. Why? Banker has to wait for 3 months to collect. Why would banker do so? Banker would not do it just like that. Banker will charge me for. Banker will charge me for the money that the banker will charge is called as discounting charge. Money that the banker will charge is called. This varies upon the bill amount, percentage of discounting charges, and the period. Your charge is based on the period. If the period remaining is 3 months, you would charge more money. The period is 2 months, slightly lesser. It is only 1 month, it is even lesser. So it actually depends upon the period for which the bill is still due. The date of discounting to the date of maturity is there, no? For that difference, he actually charges the discounting charges as a specific percentage of bill amount. Shall we see this? Let's see the entries. Now, purchase entry, sale entry will be same. Sorry, I'm yet to animate it further. I'll do it by the time we do next marathon. Okay. So when the sale or purchase is made, entries are same. When the bill is drawn, acceptance received, same entry. Then happens bill discounted with banker. Our drawer exists, no? The drawer will discount the bill with banker. When drawer discounts the bill with banker, he writes the entry bank account debit. He writes the entry because he receives the money from the banker, but not full money. He is giving the bill of 10,000. Let's say he is giving the bill of rupees 10,000. He receives the money only to the extent of 9,800. The 200 what he doesn't receive will become discounting charges expense. So as a drawer, when I discount the bill with banker, I will write the journal entry bank account debit, discounting charges account debit to bills receivable. Bank debit because money is coming in, discounting charges because it is expense, bills receivable credit because it is asset decrease. Got it? And in this exact point, drawee will write no entry. Why? He is least bothered. He is not affected by this transaction. Is he affected by this transaction? No. Whether you discount it or you don't discount it, farak nahi padta. On the maturity date, if in case the bill is honored, drawer will write no entry. Why? On the maturity date, banker collects money from drawee. What will drawer do? Nothing. So I won't write any entry. Drawee will write the same entry what you would have written otherwise. If the bill was with me, bills payable to cash. If the bill is with banker, bills payable to cash. If the bill was endorsed, bills payable to cash. Honored entry same, no difference. What if the bill is dishonored? Now, first the banker will give the bill back to me. Then I will give the bill back to my drawee. Are you getting it? So when the banker gives the bill back to me, I have to pay money to my banker. I have to pay money to my banker. When I pay money to my banker, I pay full bill value. I don't pay discounted amount. I pay full bill value. Entry will be bills receivable account debit full 10,000 value of the bill that is giving to me. If he has paid noting charges, I will pay him. If he has not paid noting charges, I will pay it separately. Either ways, it is payment expense. Noting charges also you debit. The money that is paid to the banker full 10,000 and the money that is paid towards noting charges, both of them credit together. Understood? Let's say I paid 10,000 to banker and 200 rupees towards noting charges. What is my accounting entry? Bills receivable account debit 10,000, Noting charges account debit 200 to bank account 10,200. Total payment that I made is 10,200. And entire 10,200 I'll pass it to my drawing. This entry you've done in the past. Have you done this second entry in the past? Same entry that you have done, yeah. What is that same entry? Drawee account debit 10,200 to bills receivable 10 to noting charges 20. And in this guy's books, may again same entry. He'll receive the bill, bills payable debit, noting charges expense he'll accept. He has to pay 10,200 to drawer. Then he'll write P&L account debit to noting charges, passing the 200 rupees noting charges to P&L. Same entries. Anything new? Anything difficult? Okay. Everyone? Very good. One in the last. Are you writing down something? Last. What are you doing? No, not you. Noting down. Interesting. Can you write at this speed? Okay, done. Are you guys done with this? You guys have any doubt? Hell yeah. Very good. Shall we see the last case? What is the last case? Endorsement. What is the last case? What do you mean by endorsement? See, I have a customer. I also have a supplier. I have a customer. I also have a supplier. I have a receivable from you. I also have a payable to somebody. So when I also have a payable to somebody, what would I do? I raised a bill on you, which you accepted. I become drawer, you become drawee. My supplier to whom I owe money, he is drawing a bill on me. I'll say, hey, wait, don't draw a bill. He'll ask why. I'll say, wait, 1 second. You will draw a bill on me. That is my bills receivable. I will give my bills receivable to him. And then I'll say him, see, I should collect money from him and I should pay money to you. Instead, you collect money from him directly. And I am out. Instead of having asset and liability, I'll remove asset, I'll remove liability. I'll ask them to say settle it directly and I will stay out of it. That is endorsement. That is, I am seller, you are buyer, he is supplier. Who am I? Seller. Hey, everyone, open your mouth. Who am I? Who are you? Who's he? Supplier. Who am I? Who are you? Who's he? I draw a bill on you. I become drawer. You accept that bill. You become drawee. Why? You are re-schooling the bill. I take the bill back from you. Now I am endorsing. What am I doing? In endorsement, I give the bill to him. He is receiving the bill on endorsement. He becomes endorsee. His colorally E irutte. The one who is receiving will have the letters E in their name. He is endorsee. I am endorser. Why? I give the bill. So I am seller, drawer, endorser. You are buyer and drawee. He is supplier and endorsee. You become payer. I am not paying. He is paying. He is endorsee, payee, supplier. You get it? Now, sale. Basically, supplier or endorsee, this guy, he is selling goods to me. So in his books, drawer account debit to sales. He has sold goods to me. My name is drawer. Drawer to sales, he will write. Purchase to supplier, I will write. Am I right? After that, I sell these goods to you. To me, it is sales. Drawee to sales. To you, it is purchase. Purchase to drawer. Is it too fast? Then after that, I will draw a bill on you. I will write the entry bills receivable to drawee. You accept it. You write drawer to bills payable. For this, he doesn't write entry. Why? He is not affected. I will pass the bill what you accepted to him. I will write the entry supplier account debit to bills receivable. That is my endorsement entry. For that, he will write the entry. What will he write? Bills receivable account debit to drawer account. That's what I gave the bill to him. On the maturity date, two things can happen. Bill is honored, dishonored. If the bill is honored, he receives the money. He pays the money. I will not write entry. He will write cash to bills receivable. He will write bills payable. If it is dishonored, he will give it to me. I will give it to him. I should collect cash from my customer and I should pay to my supplier. Same game. Easy? Okay. So these are the three different options. What is there with the drawer? Based on these three different options, we will do accounting. Then we have to learn two simple concepts. One is retirement. One is renewal. After that, accommodation. Once you do this, this topic is over. What is retirement? What is renewal? See, there is a specific date on which the bill has to be settled. There is a specific date on which the bill has to be. You have to pay me money, I have to accept money. If you choose to pay the money before that date, it becomes retirement. If you choose to give me the money before the date, basically you stop working before you die, retirement. Renewal, it is due for settlement. You ask like, please, another 1 month time kodi, please, tumba kelsa ide madake. I will die after 1 month. So you take that 1 month extension, renewal. The bill has expired, but you renewed it for another month. So listen to me. I am drawer, I am seller. You are buyer, you are drawee. You are supposed to pay the money to me on 30th of January. You are paying money to me on 15th of January. I am happy paying money in advance. You agree with me? When you're paying the money in advance to me, I am happy. I give you discount. I give you discount is expense to drawer, income to drawee. Expense to income to discount is given as a percentage of the bill. Depending upon how much time early you pay, so much discount you get. You pay 3 months early, you get more discount. You pay 1 month early, less discount. So depending upon the period. So it is bill amount multiplied by discount percentage multiplied by the period, date of settlement to the date of due. Between that period, you get discount. Are you getting it? If in case the bill is due for settlement on 30th, you say that you will pay on 28th of February. 1 month extension you're taking. For 1 month, I will ask you to pay interest. So that interest is expense to you, income to me. Understood? That renewal can be for full amount, can be for interest to be cash settled and only old bill amount, or part of the bill can be settled in cash, part of the bill can be renewed. Interest is computed only to the extent new bill is signed. Interest is computed only to the extent new bill is signed, not for the amount which is immediately settled. Let's say the bill is 10,000. You are ready to pay 4,000 rupees instantly. 6,000 you are going to ask for new bill. Interest is computed only on 6,000 at a specific percentage for the period of delay. It won't be computed for 4,000. Got it? Yeah. That's it. Last part is accommodation of bill. What will we do? We'll do a question or two first on what we've discussed so far. Then I'll teach you the accommodation. Not too much of theory one shot. Okay. Now we can do one question definitely from our RTP. Other than that, can we do more questions? Oh yes, we can. That you should tell me which one do you want to do. Type. For now, let's do question from our RTP. Which RTP? January 25 RTP. One question is there. I don't know what is it on. So this is on bills for collection. Problem martha explain martin. Bills for collection. Or should I explain once? Understand. Bills for collection means I have to collect money from my drawing. So there are two problems with this bill. When I have this bill with me, what if I forget the due date? Like I have the bill with me, bill will mature on 17th of December. I forgot that its bill maturity date is 17th of December. I have the bills in locker. Then in February sometime I realize. Then that day I'll send it to you for payment. I wasted 2 months. No, I could have asked money 2 months ago only. So there is a very good possibility that you might not track the days. Second possibility, that bill was there, it got lost, it got fire, or it got stolen. So there are two things that can happen. One, might not be able to track the maturity date. Second one, might just displace the bill or lose it. To counterfeit these two problems, I go to bank. Remember, this is not discounting. Discounting means what? Bill will mature on 30th of January. Today I go to bank will give money today. Bank will collect on 30th of January. Bank will wait till that date. That is bill discounting. This is bills for collection. Bills for collection only. Banker will not wait to collect the money. Banker will not pay the money to you instantly. You go to banker today. You give the bill to banker today. You will tell banker, I want your help in two things. One, I want you to keep this bill safely. If I keep it with me, I might lose it. Second one, I forget things. Yeah, someone told that you should soak badam in the water and then have it in the morning to get good memory. But I forget to soak it only. Why? Bad memory. So what will happen? I forget to collect the money on maturity date. So what would I do? I'll give the bill to you. You collect it on 30th of January and you give it to me 30th of January. 30th of January when you collect, then you give me money. You don't have to give me money now. This discounting, this is bill sent for collection. Are you getting it? So when I send the bill for collection, I'll write the entry bills for collection account debit. That's my asset now. To bills receivable because my bill is going. On the maturity date, when the banker collects the bill, he will deposit the money into my bank account. My bank balance will increase. Bank account debit to bills for collection that date. If the bill is dishonored, banker will give the bill back to me. I will write bills receivable account debit to bills for collection and then give it back to my drawee and settle. Everyone's got this? Tell ya. Very good. Come on, let's do Jan 2025 RTP. Adana. This question is on 8th one. See what is it on. This issue question is nice in Jan 25 RTP. There is 3 different forfeitures. One guy doesn't pay on allotment stage, one guy doesn't pay on call stage, another guy doesn't pay on second call stage. And 3 times we do forfeiture. And all the shares are reissued at once. No, not the kind of question that you would have done it. It is slightly different. Easy, but different. This is one of its kind. There's none of the questions of that type in any of the material. Company account start ಮಾಡಿದ್ರೆ. Yeah, answer is yes actually. You can individually. Forfeiture, they don't do it once year. They're doing it 4 times. Allotment ಆದ್ಮೇಲೆ ಒಂದ್ಸತಿ forfeiture, first call ಆದ್ಮೇಲೆ ಒಂದ್ಸತಿ forfeiture. You can. Whenever they see what is the trigger for forfeiture, they don't pay money. Whenever they don't pay money, you do forfeiture. How can we know when will not they not pay money? Question number 8. Okay, are you ready? GST is also there in this one. Yeah, good question. One moment. Take a sip of water. Can I have your attention? Come on, guys. Let's now solve question number 8 from our January 2025 RTP. This question is on bills of exchange. Let's come to the end of the question to see in whose books do they want us to pass journal entries. They're asking us to pass journal entries in the books of X with narration. Okay, with narration. So who are we representing? We are representing Mr. X or Miss X. Doesn't matter. So we are X. Who are we? Let's see what's happening in the books of X. On 1st of April 2024, X sell goods to Y. Y, sir? Yeah, Y. For rupees 25,000, there is IGST 18%. Oh, long distance in a different state. So we are charging 18% GST also on the same. So first shall we write the sale entry? We will write Y account debit because Y has to pay us money. We have sold him goods or we have sold her goods. 2. Sales. How much is the value of the goods sold? 25,000. But what I'm supposed to collect from Y is not limited to 25. I have to collect much more than 25,000 from Y. What is it that I should collect? IGST. It's called output IGST. Why? I have the responsibility to collect that IGST and pay it to government. Understood? Come on, 225,000 into 18%. Sir, why is it 18%? That's giving you a hint that this goods what I've sold to Y is luxury goods, not a necessity. GST rate is high, 4,500. Can I say put it together? Y has to give me 29,500 rupees. Yeah, being goods sold to Y. Why? Yeah, why? It's not a question. It's an answer. Yeah, you are not a question in my life. You are the answer to many. First off, if no, X is telling to Y. Yeah, but why Papa did not know that he or she is X and then did business. Then what happened? Okay. Exchange on him. Oh, him. First bill for rupees 15,000 for 2 months, second bill for the balance for 3 months. So we are drawing 2 bills on him and he accepts both the bills. To us it is bills receivable. To Y it is bills payable. We don't care about Y. Get it? We care only about us. We are selfish. In my perspective, this is bills receivable. So I would write bills receivable number 1, which is for 2 months, and bills receivable number 2, which is for 3 months. Bills receivable number 1 amount is given in the question to be 15,000. Bills receivable number 2 amount is not given. They have told balance. Balance will be 29,500 minus 15,000. Why has to give us 29,500? No. In that 15,000 is first bill. Second bill is for the balance of the amount, which is 14,500. Y had to give me money 29,500. He has accepted bills, so I will credit Y account by 29,500. You get this? So the journal entry will be bills receivable account debit. Number 1, 15,000. Bills receivable number 2 account debit 14,500 to Y account 29,500. Did everyone understand this? What is after this? After this, remember that one bill is 2 months, one bill is 3 months. We have to compute due dates and maturity dates separately. Y accepts and returns these bills. Both the bills are sent to bank for collection. Okay, we send these bills to bank for collection on the same date, 1st of April. So on the 1st of April, I will credit these bills. Bills receivable number 1 credit, bills receivable number 2 credit. So 15,000, 14,500. Both the bills are with banker. The name of the asset that is now created is called bills for collection. Bills for collection. How much? 29,500. On the maturity date, banker collects the money and deposits into my account. I'll write bank to bills for collection. If it is dishonored, I would reverse this. Bills receivable to bills for collection. Let's see what's happening. In the due course, X receives the information from the bank on the due date of the respective bill that the bill for 15,000 has been duly met. Yay! It's been duly met. So the money has been received by the banker. They have not told the due date. You have to take the due date. Come on here. 1st of April in the 2 months. Add 2 to the months column. Month is 4, no? For 4 you add 2. It will become 6. 1, 6, 2024. 1st of June. Can I write 1st of June? Please don't write maturity date. It can be settled up till maturity date, not always on maturity date. 3 grace days are allowed. It doesn't mean always you take grace days. You're getting it? You can stand till, see, I can keep it till here. Doesn't mean I always keep it till here from where it doesn't fall, but it can just balance. It doesn't mean I should keep it like this. See, this is the maturity date. I can keep it here also, no? That is the last date for settlement. That is not the date of settlement. You get it? Here they have told it is settled on the due date. Are you getting it? So I'll write on that date, bank account debit. My bank balance has increased. By how much? 7 crore. No, 15,000 rupees. Credit will be given to no more bills receivable number 1. You should write bills for collection. That was the asset that was created. Okay, first bill engo bachao. Second bill, don't know. Yeah, wait. And the other bill has been dishonored. Obviously, no. In a movie, if there are 2 sons to the mom, one of them should be hero, other has to be villain. Correct? So other bill has been dishonored. So other bill, you would have to write it after 3 months from 1st of April. 3 months from 1st of April is 3 you add to 4, it will become 7. Tala for a reason. 1 number of runs scored. So 1st of July 2024. So what happens on 1st of July 2024? Dishonored. Mana maradi yenilla. Take hand kodalenu hange ottogtane. So we will write the entry. I am not talking about 2024. So what do we write on this date? If we would have received money, we would have written bank account debit to bills for collection. Yeah, money was not received, so they got eliminated. Sorry, money was not received. So what do we write? We will receive the bill back from the bank. Bills receivable number 2, account debit to bills for collection. 14,500, 14,500. What happens after this? 2 years back. No, what happens after this is we will send the bill back to our drawee and collect money from him. Before that, there is noting charges of 500. Hey, sorry, all of you are feeling bad. I'll give break on time. Feeling bad that you are not getting break. Done. So noting charges, it is expense to me. I will write noting charges account debit to bank account. How much did I pay? 500. Whatever money I paid, no, I will recover. Nothing we will leave. Everything we will recover. TV charges ಸೇರಿಸ್ಕೊಂಡು. ಚಿನ್ನ ಸಮಯ ಬಂದು TV ಹೊಡೆದಾಕಿದ್ರೆ. So what do we do? Here, I have to collect 14,500 from my drawee. I will credit bills receivable account, which I am giving back to my drawee, 14,500, along with 500 rupees of noting charges. Putting it together, I need to collect from my Y, which is drawee. How much money? 15,000 rupees. Got it? Fantastic. This is the money that is supposed to be recovered along with noting charge. Got this? Fantastic. This is the answer for the question in our Jan 2025 RTP. Question number 8. Okay. Any doubts? Now, to do another question, maybe if you need on this topic, I can show you the index. You tell me what topic do you want question on. I will show the topics. You pick the topic and we'll do one because we can't do everything. I will show you what has come so far in the exam. So far in the exam and bills of exchange, these many questions have come. You want to do one on accommodation? Okay. Okay. You won't get scared? No. Okay. Shall we do December 2023 exam question 10 marks? Shall we? Okay. December 2023 question number 3A on accommodation for 10 marks. What was it about? Didn't know it's for 10 marks. That's the reason I told. There is no need to mug up how many marks will this chapter come for. Comes, it comes. If it doesn't, it doesn't. Okay, what time are we taking break? Shall we take break around 10 o'clock? 10 o'clock is actually too early, no? Slightly later. After this question, we'll do little more of subject final accounts ಮಾಡಿ break. ಅಮ್ಮ ಹೇಳಿದ್ದಾರೆ ಸರ್ ಟೈಮ್ಗೆ ತಿನ್ಬಿಡ್ಬೇಕು ಬೇರೆ ಎಲ್ಲ ಆಮೇಲೆ ನೋಡ್ಕೊಬಹುದು ಏನು ಆಗಲ್ಲ ನಾವು ನಾಳೆ ಬದುಕಿರ್ತೀವೋ ಇಲ್ವೋ ಗೊತ್ತಿಲ್ಲ ಅಲ್ವಾ ಆಮೇಲೆ ಸತ್ತೋದ್ಮೇಲೆ ತಿನ್ನಕ್ ಆಗೋದಿಲ್ಲ ಅವರೆಲ್ಲ ಇಡ್ತಾರೆ ಅಲ್ಲಿ ಪಿಂಡ ಬಟ್ ಯು ಕಾಂಟ್ ಈಟ್ ಕಾಗೆ ತಿಂದ್ರೆ ನಾವೇ ತಿಂದಿದ್ದು ಅಂತ ಹೇಳ್ತಾರೆ you can copy this along with me when I'm solving or you can just observe. However, you will see the YouTube video later to take screenshot to write down if you want. But what I would surely want you to do is, please make a note at least somewhere in your notebook stating that the question that we did is PYQ December 23 question. Previous year question paper. PYQ. Q? I don't know Q, but it's called previous year question paper. Sir, what are you doing? I'm opening the question paper. How do I solve? You want me to show the answer and then underline and explain? Question paper bekalva. I don't know how you people learn. PDF ಅಲ್ಲಿ ಆನ್ಸರ್ ತೆಗೆದ್ಬಿಟ್ಟು ಮೊಟ್ಟೆ ಹಾಕಿ ಮೊಟ್ಟೆ ಮೇಲೆ ಮೊಟ್ಟೆ. All the answer are there. You circle and learn. It will be clean when the explanation starts. It will become dirty by the time explanation ends. I tried that for some time. I found it very disgusting. Yakka. ರಾತ್ರಿ ಕನ್ಸಲ್ ಅದೇ ಬರ್ತಿತ್ತು. Yesterday in the night I had a nightmare, man. Virat Kohli playing the ball outside off stump again in second innings. I like then I told dream. 3A. Can you see the question or is it too difficult to see? Difficult to see? I can make it nicer. How, sir? I look for the suggested answer. There it will be printed, no? Like PDF, better print. December 23, alva. Okay, is this better? Oh, did you people pray today? Second innings follow on batting attack ಬಂದಾಗ ವಿರಾಟ್ ಕೊಹ್ಲಿ ಔಟ್ಸೈಡ್ ಆಫ್ ಸ್ಟಂಪ್ ಹೊಡಿಬಾರ್ದು ಅಂತ Last time India took a follow on was 2011. Record will be broken today. And 2011, when we had taken follow on, we had won the game. Yeah. Are you ready? Yeah. Can I have some silence? Can I? Ali, I don't know what are you saying. Are you constantly looking at something? What are you doing? Your attention towards the board is slightly questionable. What are you doing? What are you reading from there? You have December 23 question paper and then Jan 25 RTP there. I want you to look here. You get it? Or if you find it like class too slow, you can go home and then watch on YouTube at 1.5x speed. But you're in the class. Can you please bring your hands down? Yeah. I want you to look at the board. You get it? Attention span is slightly questionable. I might be upset. Don't upset me. I'm already upset. You lost a match. You're on the verge of losing another. Yeah. Already disturb. Don't disturb. Food sari illa sir. ಬೇಜಾರಾಗ್ತಿದೆ. Can we go to question number 3? Can we? Okay. Come on. Let's now solve question number 3 from our December 2023 examination paper. This question was on accommodation of bills from bills of exchange. There are two parties, R and P. First read the last line to see in whose books are we trying to do accounting. Give the journal entries in the books of P. Also show R's account in P's book. Wow. You're also asking one ledger account. First we'll focus only on P. We'll try to focus on P. Control. We should focus that we are P. We are P. We are P. We are Mr. P. And should do accounting from the perspective of Mr. P. Okay. R draws a bill of exchange. So we are drawing. Who are we? Drawee. Understood? The bill amount is how much? 2 lakh. The bill value is 2 lakh. And it was drawn on 1st of July 2022 for 4 months. P accepted the bill. P andre, hey, we are only P. P accepted the bill and we sent it to R. But they have not told anywhere here that he sold goods to me and I received the goods. So there is no trade. A transaction of raising the bill and accepting the bill with no trade below it is called accommodation of a bill. Why did I accept the bill? We'll discount the bill and then share part of that proceeds with me. Oh, nice. It's actually a financial arrangement. Both of them want loan, bank is not giving loan. What to do? You raise a bill on me, I will accept it, we will discount, share the discounted proceeds. We get money from the bank. A bank will assume that there is a trade relationship and there is inventory. But nice. So bill value is 2 lakh. What is the bill value? 2 lakh. Observe here, bill amount is rupees 2 lakh. This is the amount that you would have to repay to the bank on the date of maturity. Who has to repay? P. Who has to pay the money to the bank on maturity? P. Why? I am drawee. I am the one who has signed. The banker will come to me and ask me for 2 lakh. Then R discounts the bill with the banker for 1 lakh 88. So banker has given us 1 lakh 88,000. What is this 1 lakh 88? This is the money that I and P will share. So it will be shared between R and P. It will be shared between R and P, not X and Y. What's after that? And R immediately remits 75,200 to P. I am P. How much did I receive? 75,200 rupees out of this 1 lakh 88. Please do 75,200 divided by 1 lakh 88,000 to identify what percentage of money have I got. 40%. 40%. Can I say 40% as what number? 4 by 10. 2 by 5. Get it? So I have how much? 40% or 2 by 5 if you want to write in fractions. Do you like fraction or percentage? Both are same. Why? When you write 40%, no. There you see one circle slash one circle. That one circle slash one circle is fraction. The first circle is numerator, second circle is denominator. That first circle is 40. Second circle per cent means what? Per century, 100. It is nothing but 40 by 100. Okay. Done. So if he gives me 75,200, he has received from bank 1 lakh 88,000. Can I count how much money is there in his hand? Yeah. How much he received from bank minus how much he gave me. I'll do 1,88,000 minus 75,200. So Mr. R, who received 1,88,000 from bank, kept 1,12,800 with him, and he gave me balance 75,000. He kept 1,12,800 with him, and he gave me the balance 75,200. You all agree with me? So when he gave me 40%, he has kept with him 60%. On the maturity date, banker will ask me for 2 lakh. Why should I give full 2 lakh? I would have given full 2 lakh. If would have given me full 1,88,000. He gave me 40% of 1,88,000. I will give him 40% of 2 lakh only. If banker asks me for 2 lakh, I will say, banker, whatever money you gave to draw, he is given me only 40% of it. I will give you only 40% of 2 lakh to collect the balance money from Mr. R. Can I tell that? Hey, this is all secret. You should not tell to bank. So what should I do? I will put 40% from my pocket, which is how much? 80,000. And before I open the door and pay the money to bank, I will call R. Hey R, are you there? Give me balance 60%. How much is balance 60? 1,20,000. He will come from the back door and then he'll give me 1,20,000. R gave 1,20,000. I have 80,000. Put it together. 2 lakh I'll give it to banker. Sir, please take your money. So who should pay the money to banker on maturity date? P. Who should pay the money to banker on maturity date? P. How much should we pay? 2 lakh. In that, how much is my contribution? 40%, which is 80,000. Tell in rupees. How much is my contribution? How much should I collect from R? 1,20,000. Did you understand? Now think from my perspective. Yeah. How much money did R give me after discounting? 75,200. How much money am I giving the bank? 80,000. I received 75,200. I am paying 80,000. Difference of 4,800 is there. No, that is my discounting charge. So how did you get this? 80,000 minus 75,200. Shall I show magic? Now you see me too. See the magic. Bill amount is 2 lakh. Discounted proceeds is 1,88,000. Can I say total discounting charges 12,000? To 12,000 into 40%. Oh. So of the total bank charges of discounting charges of 12,000, I, Mr. P, will bear 4,800. Mr. R will bear 60%, which is 7,200. So everything 60-40. 16 inge, 14 inge. 16 inge, 14 inge. Did you understand this? This is their arrangement. One quick round of revision. Shall we? Now, who is drawer? Who is drawee? Very good. Who draws the bill? R. Who accepts the bill? Who discounts the bill with banker? Very good. Who receives the money from banker? Now amounts. Okay. Tell in amounts. How much money will R receive from banker? 1,88,000. Look at the table when you answer. How much money will R give to P? How much money will P receive from R? On maturity date, banker will ask money from whom? Very good. On maturity date, banker will ask money from whom? Who's the best batsman? Virat Kohli. It's okay. Till Virat Kohli. And on the maturity date, how much is the money that P should pay to banker? 2 lakh. How much should P pay to banker? 2 lakh rupees. In that, how much is P's contribution? 80,000. How much should P collect from R? How much should R give? 1,20,000 plus 80. Will Virat Kohli score century today? Very good. Andre, Ivat India all out. What's wrong with you? So then we'd have to give 2 lakh rupees to banker. Banker will collect money. How much money did the banker give us? 1,88,200. How much money is the banker going to collect on the maturity date? 2 lakh. How much is discounting charges in total? 12,000. This 12,000 should be borne by P and Q in what ratio? 60:40 ratio. How much is borne by R? 60%, which is 7,200. How much is borne by P? 4,800. Everyone is clear till here? Now this entire accounting in this question, journal entries are to be passed from whose perspective? Who am I? Who am I? P. I am Mr. P. I will pass entry from P's perspective. Tell me. P is drawee. P is understood? Very good. Then what have they told? On the due date. We will not go to due date. Shall we write the entries before due date? Till the due date, we'll write the entries. But before that, remember what is happening here. Whatever I just told you. Y has to pay the bank 4,000 on maturity. No. Y has to pay the bank how much on maturity? See, this is not Y. Yeah. Y has to, see, P has to pay the bank 2 lakh on maturity. He has to collect 1 lakh 20 from R, 80,000 from his pocket. We will write the entry straight. In the books of P, I am P. So what is the entry that I should pass? The first entry. I have received the bill. I've been raised the bill. ID card. I'm under arrest. Okay. It's like ID card. Yeah, we have a warrant. We need to confiscate your bag and inspect your home. Okay. Now, to me, I am accepting the bill. No, to what? To me, what is it? Is it bills receivable or bills payable? Bills, pakka, no doubt. Okay, give me one moment. So I would write 1 second. Yeah. Hey, stop talking. Yeah, pop. ಏನ್ ಮಾತಾಡ್ತೀರಾ ಗೊತ್ತಾ ನೀವು? If you are there in the army, no, with the enemy you will not fight. Like ಮತ್ತೆ ಸಮಾಚಾರ. You will talk and kill them. Bills payable account. How much is the bill value? 2 lakhs. Debit. Debit will be R, no. R has to pay me money now. I'll write R's account. Sir, our account, no, R. R ಬರೀತಾರೆ OUR ಅಂತ ಓದ್ತಾರೆ. R's account. Yeah, being bill raised by R on accommodation accepted. Being bill raised by R on accommodation accepted. Correct? Yes. After this, what happens? This is happening on what date? Have they given the date of this? 1st of July. Oh, 7, 2022. What is happening after 1st of July 2022? Then we have accepted this. So amount I have missed out. What time are you coming? Don't tell me that you did not know. Huh? You did not? I told you, don't tell me that you don't know. Are you there in the class yesterday? Yesterday? Bye ಮಾಡ್ಕೊಂಡಿದ್ದೀನಿ. ನಾಳೆ 8 ಗಂಟೆ ಕ್ಲಾಸ್ ಅಂತ. Did not hear or what? I told you no class at 8 o'clock. Huh? I didn't hear you. You didn't? Group ಅಲ್ಲಿ? I did not send the message. You did not see the message. Na class ಅಲ್ಲಿ ಹೇಳಿದ್ದು. Did not hear. You go home. I'll send the message today. You see it and come tomorrow. 12th of January. Exam at 2 o'clock. Please don't go late. Don't tell I say didn't send me message. You never slided into my DMs. How do you expect me to respond? Yeah, it's not Pookie anymore. Yeah, come on, guys. Sound a little more matured than what you guys are right now. Okay, now no entry for bill discounted by R with banker. So when R discounts the bill with banker, R will pass the entry. I will not pass any journal entry. Why? It doesn't affect me. It doesn't affect me. Everyone is clear? After this, he will share the proceeds with me on 1st of July 2022. That day I will write the entry. He is sharing the proceeds with me. That day I would write the entry. How much money is he giving me? I would write bank account debit. They have told no amount, 75,200. Observe here. How much money is he giving me? 75,200. It's clearly mentioned. Have you copied this table? Hey, this table is mandatory. Don't skip this table. Don't try to find shortcuts. Shortcuts are the longest ways that you ever take. Write this table. It will help you in all the journal entries. Trust me. One table for this, and second will draw one more table. 2 tables. You can write journal entry from both the people's perspective very comfortably. You skip the table, then the game starts at a different level. 75,200 rupees is received. You will write 75,200. The reality is you not just received the bill amount, you also received discounting charges. You share no some amount. Alva, I'll tell you how to know that discounting charges is shared. You received 75,200. Am I right? But on maturity, how much are you supposed to pay? Correct, Alva. I'll write R's account. You are supposed to pay on maturity. How much? 80. He will pay 1,20,000. Am I right? Hell yeah. So basically, this is like he has given you 80,000 rupees type. He took a bill of 2 lakh rupees from you. So you have debited his account by 2 lakh. Now, when you credit his account by 80, balance in our account is 1,20,000. That is the money that he should pay to you. So whatever is there in the table should be represented in entries also. Our account is debited by 2 lakh. Our account will credit by 80. What will be remaining in our account? 1,20,000. That is the money that he should pay. Moment he pays that, we'll write cash account debit to our 1,20,000. Our account will get settled. So he has to write 80,000 credit. When you write 80,000 credit, 75,200 debit, there is difference no here. How much? 4,800. That is your share of discounting charges. You have not understood, see here, 4,800 is P's share of discounting charge. Did everyone understand this? Please tell. So what is the narration for this one? Being share in discounted proceeds and discounting charges received. I have received share in discounted proceeds and discounting charge. Can we go to the next transaction? Next transaction happens on what date? On the maturity date. On the maturity date. On the maturity date, I am Mr. P. I have to collect money from R and I have to pay to bank. Am I right? I have to collect how much from R? 1,20,000. ಈಗ ನೋಡಿ ಮಜಾ ಬರುತ್ತೆ. On the due date, R being unable to remit the amount. This guy did not pay the money. By quota. R gave and so now what should I do? I should basically pay the bank. I cannot tell the bank. Actually, banker, what happened? No, I and R are friends. Okay. And R wanted money, I wanted money. He raised a bill on me. I accepted 2 lakh rupees. He came to you, got discounted. He gave me money. Now he's giving it. You can't explain this to banker. You have to shut up and pay full money to banker. So now listen here. What is the period of the bill? 4 months. From 1st of July, 4 months. 1/11/2022. Yeah. R had to pay money. R had to pay how much? 80,000. No, 1,20,000. R had to pay 1,20,000 for as his share of maturity amount for settlement. But did he pay? They will use the same word. He was unable to remit. So no entry. If it have given me money, I would have written the entry. Because it did not give me money, I will write no entry. But I should still pay. I should still pay. On 1st of November 2022, I will pay the banker. I will pay the banker. My bills payable will decrease. Am I right? I'll write bills payable account. Debit. How much money will I pay the banker? 2 lakh. 2 lakh. What is this? Being bill honored. Being bill honored by payment. Not just our share, okay? We paid his share also. How much is the money that we are supposed to recover from him now? 1,20,000. 1,20,000 rupees R was supposed to pay. R has not paid. So read the question as to what are we trying to do. To remit the amount due, accepts a bill for 2,50,000. Now who's become the drawer? ER drawer. P is drawer. And then R becomes drawee. R becomes drawee. Okay, let's write that here. Observe, for this bill number 1, I would write some data now. Shall I write some data? drawer. Who is drawer in this case? Mr. Mr. Beda. Mr. R. Mr. R. Then who is drawee? For today, Mr. P. Then two things. Then bill details. What are the bill details? Bill is for 2 lakh, no? 2 lakh for how many months? Bill is 2 lakh for 4 months. Did you understand this? Now he did not pay, so we're going for bill number 2. And very important to write this for bill number 2. I would write it here. Observe bill number 2. Drawer is now Mr. P. Sorry. And drawee becomes R. Now new bill amount is how much? 1,20,000 is the money that he owed. I drove the bill for how much? 2,36,250 is discounted amount. 2,50,000 is the bill amount. So bill amount is 2,50,000 for how many months? For 4 months. What is the date on which bill number 2 is drawn? Yeah, 1st of November 2022. First bill was drawn on 1st of July 2022. From there 4 months it became November. Artha ಆಗ್ತಿದ್ಯಾ? 7 plus 4 11. 1 plus 1 2 years. 2016 and 17 ban ಆಗಿದ್ರು. So now what should we do? We'll write the entries in the books of P. Mr. P and Mr. R. Are you getting it? So now bill amount is how much? 2,50,000. This bill amount. $2,50,000. Discounted proceeds is how much? 2,36,250. 2,36,250. Am I right? After this, how much is the discount in this? They have not told. Can I find discount? Yeah, very easily. 2,50,000 minus 2,36,250. 13,000. 13,750 rupees discounting charges. Now P has to recover how much money from R? 1,80,000. That we have not forgotten. We have to cover from him 1,20,000. I give him 56,700. I have to collect from him 1,20,000. When I give him 56,700, it is like I am actually giving him 1,76,700. We have to collect 120 from him. In return, we are giving 56,700. Andre, that old money is recovered from him and then we are giving him 56,700. So it's like this. I got 2,36,250. I gave him 1,20,000 and 56,750. In that 1,20,000, I took it back from him. By old money due. So how much money did I give to R in this case? 1,20,000 old due plus 56,750. Alarm to. Alarm no? Pakka doubt ಇಲ್ಲ alarm. ಕಾಲ್ಗೂ ಅಲಾರಾಮ್ ಇಡ್ಬೇಕಾ? ಅಂದ್ರೆ ಇಷ್ಟೊತ್ತಿಗೆ ಓದೋದು ಮುಗಿಸ್ಬೇಕಾ ಸ್ಟಾರ್ಟ್ ಮಾಡ್ಬೇಕು? ಇಲ್ಲಿವರೆಗೂ ಪೂಜೆ. Second session of study. Okay. Tell me how much to get. Leave me, okay? Exclude me. None of them in the class also believe this. No, not problem of you. Just the problem, like usually people don't believe when they say they're studying. Okay, sorry, no offense. This is amount shared between, 1 second, P and R. Just now alarm udide, just edidini. 700. 236, 250, no? Allapa. 236, 250. 236, 250 plus 1 lakh 20. Oh, shit. 56, 700. Sorry, yeah. Just got up, no. So 1 lakh 20,000 plus 56, 700, 176, 700. What happened? What happened? No talking. No. You're angry on someone? Don't be. You have to be angry on me, not anybody else in the class. Anyway, Ingela start. Okay, 176, 750. Now tell me how much is the discounted proceeds? Sorry, how much is the discounted proceeds that I will keep basically? Oh, 700 inna ಮಾಡಿ 700 ಮಾಡಿದೆ ಅಲ್ವಾ? ಸರಿ ಹೋಯ್ತಾ? ಸರ್ ಯೂಟ್ಯೂಬ್ ಹೋಗುತ್ತಾ ಇದೆ. I'll turn the camera, you do it. ಪಾಪ ಒಳ್ಳೆ ಹುಡುಗಿನ ರೇಗಿಸ್ತೀರಾ ನೀವು. 59,550 is what P keeps. 176, 700 is what R gets. Do me a favor, take your calculator, do 176, 700 divided by 236, 250. Do you get the same 60%, 40%? No? It can be same, but it need not be same. 74.79. So basically, it should have been actually 75%. Something is wrong. No. 236, 250, we've taken correctly. Old balance is 1 lakh 20 correctly. Yeah, he sends 56, 700. One day was check money 120 plus 56, 700. 176, 700. Very good. 176, 700 is how much percentage according to what you got? 176, 700 divided by 2,36,250. 74.87980 ಬರೆಯೋದಾ? Are you happy? 74.80%. ಒಂದ್ಸತಿ ಚೆಕ್ ಮಾಡ್ಬಿಡಿ. 59,550 by 236, 250. 25.20%. Are you happy? Actually, percentages are not required. Just know the amounts you have done the table, that will be more than sufficient. Okay, Henry. Now, this 2,50,000 also on the maturity date, it should be borne by them in the same ratio. Do you agree with me? On the maturity date, who is supposed to pay the money to the bank? Banker will ask money from whom? R. R is supposed to pay how much to bank? 2,50,000. But how much will be his contribution in that 2,50,000? Can I say 74.80%? 1 lakh? One lakh 87,000. If only 1,87,000 comes from R's pocket, he's supposed to collect some money from P. How much money will he collect from P? 2,50,000 into 25.20%, which is 63,000. So on the maturity date, R will put 1,87,000 from his pocket. R will collect 63,000 from P, mix it up together to make it 2,50,000 and pay it to banker. Got it? Yeah. Very nice. And this 13,750 is also shared in the same ratio. 13,750 multiplied by 25.20, 30,750 multiplied by 74.80. Correct? Anybody has any doubt? Leave what will happen on the maturity date, whether it will be honored or not. If you have understood this table, first rate entries for this table. Discounting, raising the bill, sharing the discounting proceeds. Shall I write entries for these? Shall I? Doubt? Really, sir. Discounting charges. Total is not coming to 13,750. Not coming. How much is the difference? 63,000 minus 59,550 ಮಾಡಿದ್ರೆ 3,450 ಬರುತ್ತೆ. 1 second, you check this total. That comes, that is because it's not 25.20, it's 74.19. Whatever you're telling, no, 3,450. Difference is how much? 15 rupees. It is fine. You want me to write 3,450 and then this? Oh, okay. I2 3450. You understood why there is difference also? That is exactly because of that 0.1.779 you took as 80. No, 79 number is, they take that 4 digits and multiply by 2 lakh. It will come to 15 rupees. That is that same 15 rupees. You won't get 15 rupees exact. You will get 14 rupees something. Why? That's still recurring. That doesn't end at 2 decimal points. Okay. ಇದರಲ್ಲೆಲ್ಲ ತುಂಬಾ particular. Okay, done. Shall we write the entries for this bill? Everyone understood this? Pakka. Have you copied this table also? Come on, let's write the entries in the books of P. On 1st of July 2022, P will receive the bill. Sorry, P will raise the bill. Am I right? Okay, math kelistha ide. Whoever talks should talk only to me. Breakfast break alla, lunch break matte evening break ಕೊಡ್ತೀನಿ ಈಗ ಮಾತಾಡಿದ್ರೆ. I can see you using phone. Visible. ಕಾಲ್ ಬಂದ್ರೆ ಮತ್ತೆ ಕೈಯಲ್ಲಿ ಯೂಸ್ ಮಾಡ್ತಿದ್ಯಾ? Not accepted. Either you guys are talking or using, but don't make me do all of this. Stop talking, listen to me, don't use phone, focus, listen, answer. No, not worth it. If you still want to do, then go home. No, you pick the call, you text the message, and you watch the class at home at 1.5x speed. YouTube will load. Here or out? Here. No using phone. Before coming, drop a message to Narendra Modi, Nirmala Sitaraman, Sidramaya, everyone. I am not reachable for today. Please handle the country without me for one day. Just I know it's very difficult. You are a very important part of the country, but drop one message and they will handle it for one day. And you can, evening when you go back, you can take over the power from them. Okay, come here. So I'll write the entry: bills receivable account debit. We've drawn a bill. No, he accepted it. What is the value of that bill that we drew? 2,50,000. Credit should be given to whose account? Very good. R's account. What amount? Full, same 2,50,000. I would write here, being bill drawn on R for accommodation and acceptance received. Clear? Then what do? I will discount this bill on the same date with the banker. When I discount the same bill with the banker, entry is bank account debit, because the banker is going to pay me money. Am I right? Bank account debit by how much? 2,36,250. Is that the money what the banker pays? Hell yeah. Very good. Banker will give me 2,36,250, and whatever the banker doesn't pay will become my discounting charges account debit. How much is discounting charges? 13,750. Credit will be given to bills receivable account 2,50,000. Is this? Being bill discounted with banker and received. We don't keep this complete money with us, do we? No pa, ashtella selfish illa. So what are we doing? We are sharing it with R. So on 1st of November 2022 only, I am going to give money to R. I'll write R's account debit. How much is the money that I gave him in cash? 56,700 matra entry baribeku. Don't write for the full amount. Full amount we are not giving him cash. How much cash are we giving him? 56,700. So debit R account by 56,700 write to cash account. Or you can write bank account if you want. You want me to write bank account? Being discounted proceeds and discounting charges. 1 second. Discounting charges. Entries will not come like this. No, it will take little time. I will add. And discounting charges. That only, no. Shared with R. I didn't forget intentionally. And I was not testing you also. I won't tell. ನಾನು ಮರ್ತೋಗ್ಲಿಲ್ಲ ನಿಮ್ಮ ಟೆಸ್ಟ್ ಆ ಥರ ಎಲ್ಲ ಸುಳ್ಳು ಹೇಳೋದು. ಓಕೆ, ಐ ಲುಕ್ ಲೈಕ್ ಡ್ರೋನ್ ಪ್ರತಾಪ್. ಐ ಆಮ್ ನಾಟ್. ಇದ್ದಿದ್ರೆ ತಗೊಂಡ್ಬರ್ತಾ ಇದ್ದೆ. ಅಷ್ಟು ಪೊಟ್ಯಾಷಿಯಂ ತಂದು ತಲೆ ಮೇಲೆ ಹಾಕ್ತಾ ಇದ್ದೆ. ಅಮ್ಮ ಸಿ ವಾಟ್ ಎನ್ ಎಕ್ಸ್ಪೆರಿಮೆಂಟ್. ಓ ಮೈ ಗಾಡ್, ಎಷ್ಟು ದೊಡ್ಡ ಎಕ್ಸ್ಪ್ಲೋಷನ್. ಗ್ಯಾರಂಟಿ ನಿಮ್ಮ ತಲೆ ಮೇಲೆ. Discounting charges account debit. Discounting charges will be debited. How much is the discounting charges that I'm sharing with him? Oh, sorry, credit. We are sharing it to him. How much is the amount that I'm sharing to him? 3,000, sorry, 10,300. I would credit 10,300 because I booked full expense to me. Say, I've already booked entire 13,750, no? So now I'll credit 10,300 so that only my portion will go to my PN. Understood? Now we will wait till maturity date. Kayana, how many months? 4 months from November. December, January, February, March. Whatever has to happen should happen on 1st of March 2023. Sometimes things can happen before that also. So this amount is wrong, no? First I thought I'll write separate entry. But it's okay. 67,000 done. Tell ya. Now, what is happening after that? 236, 250, 56, 700 is sent. Before the bill is due for repayment, R becomes insolvent and his estate is paying only 50 paise in a rupee. Okay. So, we don't have to go till this date. In fact, they have not told the date. What will we do? The bill is dishonored and we only have to pay his share also. Banker will go to him. He will not pay. So banker will come back to me and I have to pay the bank full money. How much money will the banker asks? 2,50,000 full money. I will pay full money to banker. The journal entry is, I have discounted the bill with the banker. No, banker will give the bill back to me. I'll write bills receivable account debit. How much is bills receivable account debit? 2,50,000. I'm going to pay the full money to bank. I'll write to bank account. How much? So being bill dishonored, being discounted bill dishonored and fully paid. We are supposed to recover this from whom? R. Am I right? Yeah. So we don't know the date here for this one. And our account only, whatever balance is there will remain like that only. This bill is there, no, that with us, that we will cancel it. How do we cancel it? We will cancel it to our account. Shall we write it to our account? Hell yeah. Entry will be our account debit to bills receivable. Does it give part remittance? No, it doesn't remit. It is recoverable on insolvency. Bills receivable account 2,50,000. 2,50,000. Being bill dishonored. Transfer to drawee. Now what will I do? Final settlement entry. Shall we write the final settlement entry? Whatever money is supposed to be received from R, he will give 50%. Balance 50%. Venkatram Sampada Goinda Goinda. Okay. Shall we write bank account debit? How much money? We don't know. We will compute the balance in our account. 50% will receive. balance will become bad debts account. Credit will be to R's account. Being R declared. Okay, yeah, observe. Being R declared insolvent, what did we do? We can only recover 50% of it. Being R declared insolvent and only 50 paise in a rupee recovered and balance recorded as bad debt. So complete narration is also done. How much money should we credit R? See, by this R account should get closed. So we should take it from all the journal entries together and then compute. Shall we do it? I'll teach it to you mathematically and I'll also teach it to you logically, one step at a time. First, let's take calculator. Take your calculator. R account debit 2 lakh. Take in your calculator plus 2 lakh. What will you take? Plus 2 lakh. After you take plus 2 lakh, second entry R idya. Credit 80,000. So you do minus 80. Debit plus credit minus. Did you do minus 80,000? Come to the entry after that. Here you have no. Illi? Yes. Minus 2 lakh 50. Minus 2 lakh 50. After that, plus 67,000. After that, plus 2 lakh 50. So you tell me what is left in the calculator. 1,87,000. Debit or credit? Sorry, plus or minus? Plus. So we should make it 0. So I should credit it by 1,87,000. That is the money that is supposed to pay us. Are you getting it? I'll tell you how is this mathematically correct. Sorry, mathematically we found this. No. Now let's go by logic. Come here. On the maturity date, banker will ask money from whom? R. R has to pay how much to bank? 2 lakh 50. In that, how much is my contribution? 63. I will give 63. He'll put 1 lakh 87 from his pocket and he will pay 2 lakh 50 to bank. But on the maturity date, he did not pay the bank the money. The banker came to me. When banker came to me, how much money did I pay to banker? 2 lakh 50. In 2 lakh 50, 63,000 is mine. That my share 63,000 what I pay, I don't have any regret paying it. But the pain I'm feeling is for the remaining 1,87,000 what R was supposed to pay. So how much of R's money did I pay? 1 lakh. Very good. I paid 1,87,000 rupees which belongs to R. So here 1,87,000 was recoverable from R. In that, how much will be recovered? 50%. So I would write 1,87,000 into 50%. 93,500. And the balance of 50% what will be not recovered will become bad. Understood this? Hell yeah. So this is what has been asked. This is not easy. This is not difficult. This is what it is. This is how it will be. In a way, it is much different than the other questions that you do on accommodation. Usually what happens, I can hear you people talk and I'm actually not happy about it. Usually what happens is, here the ratio of sharing is 60-40. Usually here also it will be 60-40, usually. But in this case it is not. So that is much different from the rest of the questions that you would have usually done in the class. But still, till the time you are drawing this table, it doesn't matter whether the second bill is shared in the same ratio, second bill is shared in different ratio. None of that matters. Always draw these two tables and rest of the problem will become a cakewalk. Am I right? They've asked you to prepare one ledger account also. Shall I do it? This is asked in the other parties' books. Whose books? In the books of R, P account. Okay, we can do that. Shall I? Oh, in the books of P only. Ah, the books of P only. Journal yaar book al madodu our book alle. Then easy. But shall we still do? Shall we still do it? Debit side, particulars, amount. Guys, this is not the place for your problem practice. Please have to stay quiet. You would have to listen. By you people talking, no, others will get annoyed. They would get frustrated if they are not getting the answer. No, they choose to be quiet. The books of Mr. P. Have you written the journal entries along or no? Okay. If you have written along, you can't help me. If not, I'll do it myself. R account debit to bills payable. That is R account. What would I write there? 2 bills payable, 2 lakh. So this entry will be completely posted to that account. Shall I write 2 bills payable, 2 lakh? Very good. Come here. I would write here 2 bills payable account, 2 lakh. Understood the first posting? Come to the second entry. What's happening in the second entry? No entry. This will have no impact in the ledger. Then we have bank account debit, discounting charges account debit, 2R. So what should I write in R account? By bank 75,200, by discounting charges 4,800. So let me write here, by bank, by discounting charges. How much is by bank? 75,200. How much is discounting charges? 4,800. That entry is also done. Can I go to the next one? Yes. What's after that entry? Then we have one entry which is no entry. That will have no impact. Bills payable to bank, no impact, but I can still make it yellow. Bills receivable to R. So in R books, what should I write? By bills receivable 2 lakh 50. Shall I write? Let's write by bills receivable 2 lakh 50. This is second bill. How much is this for? 2 lakh 50,000. After I write by bills receivable 2 lakh 50, for this, come here. Do you have R account in this? No. So this will have no impact. R account debit to discounting charges to bank. So what should I write in R account? To discounting charges 10,300, to bank account 56,700. Shall I? To discounting charges 10,300, to bank account 56,700. Shall I? To discounting charges. And to bank account. How much discounting charges? 10,300. How much is bank? 56,000. What is after that? To discounting charges and bank. Next one, bills receivable to bank. This will have no impact. Khatam. R account debit to bills receivable. This does. In R account, I'll write 2 bills receivable, 2 lakh 50. Shall I write? In R account, I'll write 2. This is dishonor entry. Yeah. Bills receivable account, how much? 2 lakh 50,000. Karthik, been telling. I won't lie. I don't want to take names when I'm talking something not nice. So I thought you were wise enough to understand. Yeah, bank account debit, bad debt account debit to R. In R account, what should I write? By bank, by bad debt. And by this, observe here, or I can post this also up here. See, this is bill number 1. So I wrote it here. This is bill number 2. So I'm writing it with some gap so that you understand what amount is for what. So what do I write here? By bank account and by bad debt account. How much is it by bank? 19,500. 93,500. 93,500. 90,500 rupees. Yeah, see, it will tally. Meaning the amount receivable from R is closed. Are you getting this? Yeah, doable one, very comfortably doable one. If you have done a little bit of practice on accommodation, can we say that difficulty, whatever you had with bills of exchange, is now entailed with little more practice? You can definitely be able to do. If you would want, I tell you one more question on accommodation. If you want to do, please do question from September 2024 exam. September 2024 exam is there, no? In that question number 2B is on accommodation. If you want one more, do question number 3A, 3A ಈಗ ಆಯ್ತಲ್ಲ. Do question 3C from November 2020. Question 3C from November 2020 and September 24 question 2B. If you want, you ask. I'll share the solution of those two questions to you. Drop a message asking which one exactly do you need, and I would share that. Okay. Very good, friends. So can I say this topic of bills of exchange is done, or would you want me to do any other question on a specific topic? Okay, one last thing to know, promissory note. How is it different from bill of exchange? Bills of exchange is like this. I am a seller, you are a buyer. I place an order unconditionally, you accept that order. I become drawer, you become drawee. Understood? And you can keep that bill with you, or you can give that bill to banker for discounting, or your supplier on endorsement, or you can direct me to pay somebody else. If it is promissory note, I cannot place an order on you. Before I place an order on you, you will draw the document yourself, not accepting the order, but making a promise. You will promise that you will pay the money and give it to me. So you become maker. Become maker. You become promiser. I become promisee. I am receiving the promise from you. You are giving the promise to me. And promise whatever you give it to me, it's only to me. I cannot pass somebody that promise to somebody else. Because our currency note is also a promissory note. RBI makes a promise. No, I promise to pay the bearer of this note certain amount of money. So as per RBI Act, no, the bearer promissory note can be issued only by RBI. Nobody else in the country can issue bearer promissory note. You getting it? So the document that you give as a promissory note should be specifically to a specific person, and only that person can use it. Nobody else can use it. You cannot pass it on to somebody else. Are you getting it? Elia, that's it. We are done with question number 3 from our December 23 RTP, as well as the topic of bills of exchange. Let's take a break here. On the other side of the break, let's start and we'll finish final accounts and incomplete records in one shot. Final accounts, incomplete records, and NPO should be our target before we take lunch break. Hopefully, we'll be able to do that. It is 10:50. Take a break. See you all back in the class by 11:20. 30 minutes. When you come back at 11:20, we'll go about 3 hours, 2.5, 3 hours, and then take our lunch break. So 2.5 to 3 hours should be the target. Next break in the Muncha. 1 hour for one chapter. We'll do 3 chapters. Okay, take a break, guys. Take a break. Take a break. See you all on the other side. Come on, guys. Let's start with chapter 7, which starts with talks about final accounts of sole proprietor. Shall we? See, the objective of preparation of financial statements is to evaluate two things. 1, financial performance. 2, financial position. Financial performance and position is evaluated with an objective of taking decision based on this information. What's our ultimate objective? Decision making. In order to evaluate performance, we prepare trading and P&L account. If you are a trader, however, if you are a manufacturer, you prepare manufacturing account, trading account, and P&L account. In this chapter 7, no, unit 1 is non-manufacturing entity, unit 2 is manufacturing entity. However, we'll do manufacturing first and then do non-manufacturing. That's how the flow goes good. So usually this topic of final accounts would include manufacturing account, trading account, P&L account, and balance sheet. P&L appropriation and cash flow statement are financial statements, but not part of chapter 7. If you are a trader, you only prepare trading account. If you are a manufacturer, you prepare manufacturing account and trading account. Because when you are a trader, you buy finished goods, you sell finished goods. However, if you are a manufacturer, You buy raw material, you convert it into finished goods and then sell. The process of conversion of raw material to finished goods is called as manufacturing. And in the manufacturing process, whatever expenses incurred, whatever material moves, everything is written in an account called as manufacturing account. And the difference between manufacturing entity and non-manufacturing entity would be somewhat like this. When you prepare your trading account, in your trading account on the debit side, you write purchases. We did this in valuation of inventory also. You write opening stock, purchases, direct expenses, sale, closing stock, GP. These purchases will be written only if you are a trader. If you are a manufacturer, you won't buy finished goods. What do you buy? Raw material. That raw material bought will be prepared in or written in manufacturing account. In the manufacturing account, we determine the cost of finished goods manufactured. And in manufacturing account on the credit side, I'll write by trading, transferring the goods which is manufactured during the year. And in trading account, I'll write debit side. What do you write on trading account debit side? To manufacturing account. This is the extent to which goods are manufactured during the current year. Understood? So inventory is 3 variants. How many variants? 3. Raw material, work in progress, finished goods. In our trading account, what appears is only finished goods. In trading account, you will never write raw material, you will never write work in progress. What do you write in trading account always? Only finished goods, not raw material, not work in progress. Raw material and work in progress will be written in manufacturing account. Where do you write raw material and work in progress? In manufacturing account. How exactly do you do the accounting? It is similar to trading account, but it has its own uniqueness. See, in the manufacturing account, debit side, credit side, what you write is not raw material opening balance. You write work in progress opening and work in progress closing. Manufacturing account is like factory. Just imagine manufacturing account is like factory. You go to the factory, open the door. What do you see? WIP, semi-finished goods everywhere. So on the debit side, you'll write opening WIP. On the credit side, you'll write closing WIP. Raw material would not be written as opening, purchase, closing. We won't write like that. Raw material is not bought for sale. Raw material is bought for consumption. So in every manufacturing account, on the debit side, we determine and write consumption of raw material. What do we determine and write? Consumption of. How do we determine consumption of raw material? Very simple. Consumption of raw material is opening raw material plus purchase of raw material during the year minus closing raw material. I'll repeat, opening raw material plus purchase of raw material minus closing raw material. At the beginning of the year, you had 10,000 rupees worth of raw material. During the year, you purchased 20,000 worth of raw material. Closing should be how much? 30. If the closing is 5, what does it mean? 25,000 you consumed in the breakfast. So the 25,000 is the expense. Are you getting it? So tell me, what do you write in manufacturing account debit side? Consumption of raw material. How do we determine consumption of raw material? Opening plus purchase minus closing. Opening plus purchase minus closing is consumption. Are you getting it? This opening raw material will appear only here. It will not appear in trading or anywhere else. However, this closing raw material will appear in balance sheet asset side. The balance sheet asset side, when you write inventory, it is what inventory? Is it raw material or work in progress? Raw material, work in progress, and finished goods. Got it? So opening WIP, consumption of raw material, which is opening plus purchase minus closing, closing work in progress here. And raw material, if you keep and then do om chin patak dum dum, it doesn't become finished goods. You have to incur expenditure to make it finished. That manufacturing expenses, labor paid, lighting, heating, office, factory rent, depreciation on plant, repairs to plant, all of this will appear in the debit side of your manufacturing account. Very, very important thing. Whenever the accounting is done for a manufacturing entity, when they give depreciation on plant and machinery, you might get the tendency to take it to P&L account. Remember to take it to manufacturing. Second point, whenever there is salaries and wages given together, you need to identify manufacturing wages separately to be returned to trading, and salaries will go to P&L. That split, sometimes they will give, sometimes they don't. If they give, do it as they say. If they don't give, what to do? Salaries and wages andre P&L. Wages and salaries andre yaar helodu this is not right. Always split it. The manufacturing, sorry, wages and salaries and wages are not different. You should split them and then take it. Please don't use second basic common sense here. So in that case, you have to make a bold assumption and then take it. If you make an assumption and take it completely to be manufacturing, it is right. If you alternatively take it completely to P&L, then your assumption is that salaries is paying the major part in it. which is absolutely actually incorrect. You should split, but we don't have information what to do. You have to write it either here or there. Either ways is accepted. It is not like salaries and wages is P&L, wages and salaries is manufacturing, again villa. But usually we take it in manufacturing. The reason is wages will be more than salaries. Number of workers will be more than number of employees. Are you getting the reason? Whenever they say lighting, heating, power and all, that also they should give split. How much manufacturing and how much P&L. Based on the data they give for splitting, we'll split them between manufacturing and P&L. Are you getting it? After that, expenses. Then whatever the goods which are manufactured will be transferred to trading. So in manufacturing account, I'll write by trading. In trading account, I'll write to manufacturing. And if there is any scrap sold, that will appear in the credit. Shall you quickly revise this? Once again, tell me. Manufacturing account, how does it look? Debit side, opening WIP. Credit side, closing WIP. Here, we won't write purchase. It will be consumption of raw material, which is opening plus purchase minus closing of what? Raw material. Manufacturing expenses, sale of scrap. Balancing figure will be goods manufactured during the year transferred to trading. In trading account, debit side, credit side. Then what to do? In trading account, you write the same thing what we discussed previously in our evaluation of inventory. Opening stock, purchases, direct expenses, sales, closing stock, GP or GL, gross profit or gross loss. Opening stock के बाद we write purchase now. These purchases can be replaced with manufacturing account. If the goods were manufactured during the year, that will be transferred from manufacturing account to trading account. Understood that? When we write purchases, it is always purchase less return. When we write sales, it's always sales less return. Write it in the inner column, adjust the returns part, and then only post it to outer column. And I hope you are aware of COGS formula. We discussed in inventory yesterday, and you also know how to deal with it when they give profit as a percentage of cost and profit as a percentage of sale. Very simple. Cost plus profit is equal to sales. Cost plus profit is equal to sales. When they say profit on cost, taking profit divided by cost. When they say profit on sales, you're taking profit divided by sales. Profit divided by sales is nothing but cost plus profit. Profit divided by sales is nothing but cost plus profit. So always remember to do it like this. Very simple math, but let me touch it upon so that nothing goes missing. Still, and then here I'll write profit on cost, profit on. We'll write the fractions also simultaneously. Shall we do that? Yes. Imagine, yeah. Let's say the statement goes like this. I'll give you one statement also. Let's say it is 20% on cost. What does the statement go like? 20% on cost. 20% on cost means like this. Profit is how much? Let's say this is profit. Profit is 20% on cost. How much is profit? 20. Cost is 100. Sales will become 120. Then profit on cost will be how much? 20%. No, it is 20 by 100. That is 1 by 5. Here it is not 1 by 5 plus 1. It is 20 by 120. What is 120? This 100 rupees cost plus profit of 20. 120. So that is nothing but 1 by 6. Are you getting it? Then what if I give profit is 25% on sale? Then what should you write? Profit is 25, right? Sale is 100. Then how much will be cost? 75. Cost has to be logic. No, it is 25% on sale means profit is 20. Sale is 100. Sir, why not cost 100? They have told 25% on sale. So if this is 25, sale is 100, not cost. And 25 rupees profit, 100 rupees sale price. How much is cost? Do you know how? Because cost plus profit is equal to sales. Sales minus profit is equal to cost. 7th standard. Now, how much will be the margin here? It will be on cost, it is 25 by 75, 1 by 3. Correct? On sale, how much is it? It is 25 by 100. It is 1 by 4, no? 8. Yeah. The logic is not 1 by x and 1 by x plus 1. It is profit by cost and profit by cost plus profit. Is if you have to find profit on sale, how do we find? Profit on sale is equal to profit divided by sale alva. So this sale I would write differently. I would write here profit divided by cost plus profit. Cost plus. So whenever you say 1 is the profit, 4 is the sale, when you do 1 by 4 plus 1, you are not adding 1 to denominator. You are adding profit to the cost to make that cost as sale. Are you getting it? Tell ya. Sir, why is this important to know? This is important to know because what if they give profit as 2 and cost as 3? 2 by 3 on cost. How much on sale? Then you will be like, sir, I know 1 by x and 1 by x plus 1. I don't know 2 by some number. It is same. 2 is profit, 3 is cost. On sale, it will become 2 by 5. You add numerator to denominator. You don't add 1 to denominator. Don't remember like 1 should be added to denominator. Remember like numerator should be added to denominator. Numerator is profit, denominator is cost. So you add, so the light off it. Won't touch any of the switch. Okay, if you add the profit to the denominator, denominator cost will become sale. Ta-da! Understood this? Any doubts on this part? Pakka clear? Come on. So do you also know the trading account part now? No hiccups, no problem with trading account. P&L account is the simplest thing. Write all the expenses on the debit side, write all the incomes on the credit side, and balance sheet, assets on the asset side, liabilities on the liability side, and capital. Let's do one thing. We'll take up a problem and then solve it. Eventually, if you get any doubts, we'll discuss it separately. Shall we take one question from RTP Jan 2025? You guys are lucky. In RTP Jan 25, they've given manufacturing based account. So you can do that only and then revise everything. Usually they give non-manufacturing entity. Then you still feel like you have not done manufacturing entity. So if you do this RTP question, you get good hold on manufacturing, trading, P&L and balance sheet. Okay. Come on, yeah. Let's do this. Have you seen this RTP before or no, you didn't see? That we have so much work to do. Do you think we are jobless like you said? ನಮಗೆ ತುಂಬಾ ಕೆಲಸ ಇದೆ. ಏನಂತೀರಾ? Should be so excited that the day RTP comes, that day only should solve and then sleep. Like when new web series comes, you binge watch it all night and then sleep in the morning. Hange. The moment RTP comes, MTP comes, you should be so happy, so excited. Shall we solve this? Question number 9. The heading says and rectification of errors. There is no rectification in this one. But however, if you would want, I'll share one question with rectification in final accounts for you to practice. One of the past exam questions. Can we start? Come on, guys. Let's now solve question number 9 from Jan 2025 examination. This, sorry. We're now solving question number 9 from RTP January 2025. And this question is on manufacturing entity. Shall we start? Mr. Robin gives you the trial balance for 31st of March 2024. Don't read the trial balance. Quickly come to the adjustments. See the adjustments. Identify the items with adjustments. Make a marking next to them in the trial balance and then start solving the answer. Or remember it. So they've given closing stock. Raw material closing stock will come in manufacturing. in consumption of raw material minus. Finished goods will come in trading account, and work in progress will come in manufacturing account credit side. All three of them together will come in balance sheet on the asset side. Salaries and wages, there is an adjustment. So remember, salaries and wages, there is some outstanding amount. We have to write them in the inner column, adjust for that outstanding. To the extent it is outstanding, it will appear in balance sheet as liability. And it will also be added to the salary and wages in manufacturing or P&L. Then machinery should be depreciated. Very important. Depreciation on machinery will go to manufacturing account, not to P&L. So we'll keep machinery anyways in the inner column in balance sheet. Same with furniture. And provision should be created on debtors at 1% of sales. So after we close our trading account, once we find our total sales, on that 1% I'll determine the provision, and that's the provision to be maintained. If you have to create further provision over and above the provision in trial balance, we'll debit it to P&L account. And if you have to write off, then we'll credit it to P&L account. New provision will be deducted from debtors. We'll do that. Then rent has to be split between factory and office. Lighting should be split between factory and office. So let's split rent and lighting between factory and office. Is that fine with all of you? Fantastic. So we know what are the adjustments that possibly can come in the solution. When we start with the solution, always remember not to finish one account at a time. Always open all of them simultaneously. Keep your manufacturing account, trading and P&L account, and balance sheet. All of them open. Read the adjustments and read the trial balance from the beginning. In the order you read them, and in the same order you post them. Shall we do it? To begin with, stock of raw material 6,30,000. Stock of raw material 6,30,000 will appear in consumption of material in my manufacturing account on the debit side. In my manufacturing account, on the debit, I would be writing consumption of raw material. Here I would write opening raw material plus purchase of raw material minus closing raw material. In this, now I know opening raw material to be 6,30,000. This will remain in my inner column. After I write opening raw material of 6,30,000 in my inner column, what do I have next? I have WIP opening of 2,85,000. WIP opening of 2,85,000 will appear in manufacturing account on the debit side. So in my manufacturing account on the debit side, I would write to work in progress opening balance 2,85,000. After this, I have finished goods opening balance. Opening balance of finished goods will not appear in manufacturing. It will appear in trading account. So in the trading account on the debit side, I would write 4,65,000 as balance brought down, opening balance of finished. Shall I? Very good. Come to trading account. On the debit side, I would write opening stock of finished goods 4,65,000. Got it? What's after that? Then we have sundry debtors. How much is sundry debtors? 7,20,000. Sundry debtors of 7,20,000 being my asset, I would write in the balance sheet on the asset side. So trading P&L is done. Come to balance sheet. On the asset side, please write sundry debtors and write it in the inner column 7,20,000. Why? There is provision to be maintained against it. After I deduct the provision, I'll write it on the outer column. Remember, for provision being deducted from debtors, there is no journal entry. Debtors is an asset. Provision is a liability. You need to write debtors on asset side, provision on liability side. However, as this provision is a specific provision created against an asset, it would not be shown separately. Instead, it will be charged against the asset. Alternatively, if it was a separate liability not connected to the asset, that provision will appear on the liability side. Provision for depreciation, it is connected to the asset, so it will be deducted from the cost of the asset. Provision for taxation, provision for repairs, not connected to any specific asset. They will remain on the liability side only. Are you getting it? But for deducting that provision from debtors, there is no journal entry. It is only as a matter of presentation. Understood? What is after that sundry debtors? Carriage on purchase. See, we are not buying finished goods. We are paying purchase carriage for purchase of raw material. Because this money is spent on purchase of raw material and this is a manufacturing expense, this expense of 45,000 what you see here will be posted to my manufacturing account on the debit side. Shall I do the same? I will take you all to my manufacturing account. In the manufacturing account, I'll write debit side to carriage on purchases 45,000. Everyone got this? What is after that? We have bills receivable of 4,50,000. Bills receivable of 4,50,000 is my asset, and there is no adjustment also that we read against this. So this will be posted to my balance sheet. Asset side, I would write after debtors. For debtors, give some space. There is old provision, there is new provision, so there is adjustment. So leave about 3-4 lines place and then write bills receivable of 4 lakh so that we can adjust here. Sir, what if I have not given enough space? What if I write sundry debtors 7 lakh 20 outer column? Then I realize. Then what to do? Very simple. Scratch that, write in inner column. At least one line space if you have left, do one working note for provision, bring the total provision amount and then deduct it from debtors and post it to outer column. Or if you are conscious enough, leave space in the balance sheet and you can adjust it here. Your choice. Either ways you do, you'll get full marks. After bills receivable of 4 lakh 50, we have wages of 3 lakh 90. Wages of 3 lakh 90, it is related to manufacturing. I would have to write in manufacturing account debit side. But when you read adjustments, did you remember there is an adjustment against this? So we'll write in manufacturing account, but not in the outer column, but in the inner. And before you post next item, give little space there. Why? This I would have some adjustment. 3 lakh 90. Okay. What's after 3 lakh 90 wages? After 3 lakh 90 wages, I have salaries. How much is salaries? 3 lakh. I will assume that 3 lakh salary is not related to manufacturing. It is relating to profit and loss account. So in my P&L account, on the debit side, I would write 2 salaries, 3 lakh. Shall I do that? Come to P&L account. In P&L account, on the debit side, 2 salaries, 3 lakh rupees, inner column. Why? Salaries, wages, lighting, rent, a plant and machinery, provision. These were the items which are having adjustment. We read that in the beginning. So we'll remember and then park it in inner column. In the exam, if you want, next to that respective item in the trial balance, you can make a small mark. Okay. Then after salaries of 3 lakh, telephone and internet charges, 30,000. Okay. Expenses. It is not incurred in factory. Factory nalli laborers gelargo free Wi-Fi kodtiva. Why do you have to give it to them? They'll stop working. You get it? So we'll write it in P&L account. Telephone and internet charges 30,000. No adjustment also. What's after this? Repairs to office furniture. See, this is repairs to office furniture. If it was repairs to machine, it would have come in manufacturing. Because it is repairs to office furniture 10,500. I would write it in P&L here. Shall I? Repairs to office furniture 10,500. Okay. What is after repairs to office furniture? Cash at bank. Where would you write this cash at bank of 5 lakh 10? Balance sheet asset side. Come to balance sheet. After bills receivable, I would write cash at bank 5 lakh 10. Got this? Another question is, sir, why did you not write debtors at the top of the asset side? Because we are following marshalling. The order of arrangement of assets in the balance sheet is called marshalling. We have to follow reverse liquidity order, or also called as order of permanence. Order of permanence or reverse liquidity order states that you need to first write fixed assets and then write current. However, in the exam, if you start your balance sheet asset side with cash, bills receivable, sundry debtors, you will be still given full marks. They won't cut marks. But until and unless you start doing it in sole proprietorship accounts, you will not get it in final accounts of company. So to be ready for final accounts of company, start now and always follow order of. Okay. One item, if it goes up and down, it's okay. Then office furniture of 3 lakh. There is depreciation that should be provided on this. So what do? This 3 lakh, I would write it in my balance sheet asset side, but inner column. Office furniture, fixed asset. So I'll write it at the top of the table, inner column. Okay. What's after office furniture 3 lakh? Repairs to plant. Very important. Here you do a very silly mistake of posting this to P&L. You should go to manufacturing. You should remember this. Okay. Repairs to plant 33,000. Because Tata Ox comedy. Yeah. In manufacturing entity, depreciation on plant and repairs to plant should be posted to manufacturing account and not P&L account. That will be considered as malpractice. You write the answer on the hand and go to exam. You do have to write, put Mehendi and go. Mehendi, you write all formulas. You can try for quant exam. Yeah, no one will come and read. But you should put a little bit of design also. Okay. Then purchases is how much? 25 lakh 50. 25 lakh. So purchases will be not purchase of finished goods. It will be purchase of raw material. It will appear in manufacturing. In manufacturing account, sorry. Manufacturing account debit side. Purchase of raw material. 25 lakh 50. Got it? Then if the evaluator catches and then sees your hand, they'll ask, what is this antecedent? Antecedent is my fiance's name. He was supposed to find it, so I've written it here. Consequent illo indegade irutte. That also you keep finding in this side, I'll keep writing in this. Repairs to plant 33,000. Done. After that, sorry, we wrote purchase of raw material 25 lakh, 50. Plant and machinery 21 lakh. Okay, observe. Plant and machinery will appear in balance sheet. Depreciation on plant and machinery will come in manufacturing. Accelerate plant and machinery 21 lakh in balance sheet. Come to balance sheet. I would write here plant and machinery 21 lakh. Got this? What's after plant and machinery 21 lakh? Rent 1 lakh 80. Rent has to be split between manufacturing and P&L. There's some adjustment. So what do I do? Right now, I'll write it in P&L account inner column. Later, when I read that adjustment, I will deduct. So the portion it should be transferred to manufacturing, I will transfer. Balance will appear here in P&L. Is that okay with you all? What is after this rent of 1 lakh 80? Lighting. Lighting of 40,500 also same story. You have to split between manufacturing and office. So what do I do? Temporarily I can write it in manufacturing. From there I'll post it here. Is that okay? Lighting, heating, power will be usually manufacturing expense. I'll keep it here 4,500. I'll split it later. Is that okay with you all? What is after that? General expenses. This also had some adjustment. Italva. No. Lighting, rent, office. Oh, general expense, no adjustment. Okay. General expense will be written in P&L account. Shall I write here general expenses? How much is general expenses? 45,000. 45. What is after general expenses adjustment? Sorry, no adjustment. Then we are done with debit side. Shall I go to credit side? To start with, on the credit side, I have sundry creditors of 4 lakh 50. Sundry creditors of 4 lakh 50, balance sheet liability side. Shall I write in balance sheet liability side? Balance sheet liability side. I will write here sundry creditors. How much? 4 lakh 50. What's after sundry creditors 4 lakh 50? We have bills payable of how much? 2 lakh 25,000. Bills payable of 2 lakh 25 also. I would write exactly here only. 2 lakh 25,000 bills payable on the liability side. Got it? What's after bills payable? Sale of scrap 75,000. Sale of scrap 75,000 will be manufacturing account. Shall I go to manufacturing account? In the manufacturing account, on the credit side, I would write buy sale of scrap 75,000. Got it? What's after sale of scrap 75? Commission received. Commission received is P&L, other income, 13,500. I'll come to profit and loss account. Credit side, first I'll give little space for gross profit brought down. Below that, I'll write commission received 13,500. Got it? What's after commission received of 13,500? Provision for doubtful debts 49,500. This is the existing provision already created and which is there. This is not the provision at the end of the year. At the end of the year, they've told us to maintain 1% of sales or something. We'll do adjustment later. For now, 49,500 is our old provision. In my balance sheet, on the asset side, below sundry debtors, I will make a note that my old provision was 49,500. I am not deducting 49,500 from 7 lakh 20. I'm just writing it there so that I know how much provision is to be created. Let's say they say the provision should be maintained at 50,000. So then 50,000 will be deducted from debtors. 500 will be additional provision to be created by debiting P&L. Are you getting it? I'll teach that to you when we come to the adjustment. Or now, did you understand 49,500 old provision? What's after old provision? Capital balance is 30 lakh. Very good. In the balance sheet on the liability side, please write capital account 30 lakh. Easy. What's after capital of 30 lakh? Sales is 50 lakh 16,000. Where do we write sales? Trading account credit side 50 lakh 16,000. Come to trading account credit side by sales 50 lakh 60,000. 16,000. Amele bank overdraft liability in the balance sheet 2 lakh 50. Accelerate in the balance sheet on the liability side. Come to balance sheet on the liability side. I will write here bank overdraft. How much? 2 lakh 50. By this, I am done with the entire trial balance. Am I? After this trial balance, quickly come to what is given after trial. Adjustments are here. To start with, we have raw material. How much is the value of our raw material? 4 lakh 86. This will be used in consumption of raw material computation. If you come to consumption of raw material, We did opening plus purchase minus closing. We know opening, we know purchase. I will deduct closing of 4,86,000. How much do we get consumption then? 26,94,000. Nextly, this 4,86,000 should appear in balance sheet. We'll post all three of them together. Okay. Finished goods of 5,43,000 will come in trading account on the credit side. Where do you have to write? Trading account credit side. I would write buy closing stock 5,43,000. Understood? What's after closing stock of 5,43,000 in trading account? Finished goods. Work in progress 2,34,000. That WIP of 2,34,000 what is there will appear in manufacturing account on the credit side as by closing work in progress 2,34,000. Do you understand? All the three inventories together should appear in balance sheet asset. Let me tell you once again what happened. I wrote closing raw material in consumption of raw material as minus. I wrote closing finished goods in trading account on the credit side. I wrote closing work in progress in manufacturing account credit. Got this? Come to balance sheet on the asset side. I would write here stock. Three variants: raw material, work in progress, finished. How much is raw material? 4,86,000. Work in progress? No. Work in progress is 2,34,000. 5,43,000. Upper na? WIP 2,34,000. And finished goods 5,43,000. Take the total here. 12,63,000. Am I right? Did everyone understand 12,63,000? Say something. What's after this 12,63,000? Salaries and wages. Unpaid for the year. Unpaid means outstanding. How much is it? 27,000 and 60,000. 27,000 and 60,000 respectively. Means what? First salaries. No. Salaries 27. Wages 60. See, this is outstanding and it is expense. You add it to your expense in manufacturing or P&L account and write it in the balance sheet liability side also. Shall we do both? First, let's start with salary 27,000. Come to P&L account. In P&L, I have written salaries inner column. Add outstanding salaries of how much? 27, making it 3,27,000. And this 27,000 what is not paid will appear in your balance sheet on the liability side as outstanding salaries 27,000. Similarly, we have wages of 60. Wages of 60 is liability. Balance sheet liability side, I'll write 60,000 outstanding wages. And this 60,000 will also be posted to our manufacturing account. The manufacturing written wages 3,90,000. Add outstanding wages of 60, making it 4,50,000. You all understand 4,50,000? Hell yeah. What is after that? Machinery is to be depreciated at 10%. Is the next one? Machinery should be depreciated at, sir, office furniture 7.5. First to depreciate machinery by 10. Come to balance sheet asset side. You have machinery here. Sorry, we are depreciating machinery. Depreciated by 10%. 21 lakh into 10%. Can I say 2,10,000? That will make this 18,90,000. We cannot write both the depreciation together in P&L. Why? Depreciation on plant and machinery is manufacturing expense. This 2,10,000, I would not write it in P&L. Instead, I would write in my manufacturing account. On the debit side, I would write here 2 depreciation on plant and machinery. How much is depreciation on plant and machinery? Everyone understood depreciation on plant and machinery 2,10,000. Then we have to do depreciation on furniture. How much depreciation on furniture? 7.5%. Come to balance sheet. You have office furniture 2 into 7.5%. Sorry, 7.5, no? Yeah. How much? If you deduct, you get 2,77,500. This 22,500, unlike depreciation on plant, which is transferred to manufacturing, this office furniture depreciation will be transferred to. Very good. Shall I write in P&L account debit side? Come on, P&L account debit side. Let's write 22,500 depreciation on office furniture account. Okay. What's after that depreciation? A provision on doubtful debts is to be maintained at 1% of sales. How much is the sales in the question? 50,16,000 sales is made. In that 1% of money is doubtful. 250,16,000 into 1%. 50,000. See, our provision should be 50,160. How much should be our provision? that is at 1%, 50,160. How much provision do we already have? How much should be the provision? 50,160. Please don't do this old second PUC style, less sold provision, add new provision. No, 49,500 rupees of provision is already there, but provision should be maintained at 50,160. Should you create further provision or should you write off provision? Should create further. How much? 660 rupees. Shall I create 660 provision? When I debit provision in my P&L account on the debit, when I debit provision in my P&L account on the debit, I will create provision of 660. I am creating provision of 660. Once I create this provision of 660 rupees, my provision is no longer 49,500. From 49,500, it became 50,160. So this 50,160 is what will be deducted from my debtors in balance. Here I created additional provision of 660, which appeared in P&L as expense. So once I create 660 provision, can I say my total provision is 50,160? Take 7,20,000 and deduct 50,160. 6,69,840 is the closing balance of debtors. Everyone got it? This is very difficult. Pakka. What is after this? After this, rent is to be charged as 3/4 to factory. Okay. Where have we written rent? Have we written in P&L? In this, how much will be to factory? 3/4 to factory. How much is 3/4 of 1,80,000? 1,35,000 is posted to factory. So here it will be 45,000. Everyone understood? So this 1,35,000, where do I write? Manufacturing only. Rent. Shall I write rent here? To rent factory. How much is it? It is actually, rent is how much? 1,80,000. From this 1,80,000, I am transferring some portion to P&L. Less transfer to P&L. How much is relating to P&L? Have they given the amount? No, they've told it relates to how much? 3/4. 3/4 alva. Sorry, 1/4. So I'll do 1,80,000 into 1/4. One lakh 80,000 into 1/4. What do we get here? Very good. We get 45,000. If I deduct, what do we get? 1,35,000. Does it sit correctly now? What do we have after that? Lighting is to be charged at 2/3 to factory. So 2/3 to factory means 1/3 to office, no? So here I would write less, transfer to P&L. How much? 1/3 alva. 1/3 comes to 13,500. So 27,000 will be there in manufacturing. 13,500 I'll write it as lighting. Shall I write as lighting in P&L account? I would write here tool lighting. Oh, is already? I've written the heading. Oh, here. Yo, yeah. Tool lighting. 13,500. Understood this? Hell yeah. What is after that? Lighting over. That's it. Entire question is over. There's nothing much left. What to do now? Close manufacturing. What is the objective of manufacturing? To determine the cost of finished goods manufactured. That will get shifted from manufacturing to trading. Close trading. Find GP. Close P&L. Find NP. Add it to capital. Tally the balance sheet. Shall we do it? Take the total on the credit here. Sorry, debit side total theory. 285 plus 26,94,000 plus 45,000 plus 4,50,000 plus 33,000 plus 1,35,000 plus 27,000 plus 2,10,000. 38 lakh. From this deduct 2,34,000 and 75,000. We will get finished goods manufactured during the year as 35,70,000. In manufacturing account, I'll write to trading because it is sent for trade. In trading account, I won't purchase finished goods. I'll receive it from manufacturing account 35,70,000. There is no other direct expenses. Quickly take the total on the credit. 55,59,000. 55,59 minus 39,40,35,000. Can I say 15,24,000 is GP? It will come in my P&L. 15,24,000. Total year, can I say 15,39,500 is my total on the credit? 37,500. Right, 15,37,500 to find my net profit as balancing figure. First item is 327 only. Okay, total this to find net profit. To 3,27,000 plus 30 plus 10,500 plus 45 plus 13,500 plus 45 plus 22,500 plus 600 minus 15,37,500. We got 10,43,340. This becomes our net profit. Add this to the capital over here. I say total you get 40,43,340. Pray to the God and then take the total. Sir, why pray to the God? What if it doesn't tally? ಆಮೇಲೆ ಓ ಮೈ ಗಾಡ್ ಅಂತ ಫಸ್ಟ್ ಅಲ್ಲಿ ಹೇಳ್ಬಿಡಿ ಓ ಮೈ ಗಾಡ್ ಅಂತ 3 lakh ಪಕ್ಕ ಅಸೆಟ್ ಸೈಡ್ ಚೆಕ್ ಮಾಡಿ ಲೈಬ್ರರಿ ಸೈಡ್ ಚೆಕ್ ಮಾಡ್ಲಿಲ್ವಾ ಕೆ 50,03,340. Everyone got this? Pakka. Very good. How many of you copied alongside? FCL. Okay, Swami, ಮನೆಗೆ ಹೋಗಿ ಪರವಾಗಿಲ್ಲ ಅರ್ಜೆಂಟ್ ಏನಿಲ್ಲ ನೋ ಪ್ರಾಬ್ಲಮ್ ನಾಳೆ ಬನ್ನಿ 10 ಗಂಟೆಗೆ ಪ್ಲೀಸ್ ಲೀವ್ ವಾಟ್ಸ್ ಯುವರ್ ನೇಮ್ ಆರಂಭಿಕಲಾಮಾ can I have your attention? Come on guys, let's now solve question number 11 from our Jan 2025 RTP. This question is on conversion of single entry into double entry. Start reading the question and then start writing them where they belong, and at the end you will find the balancing figures based on your common sense and then close their trading P&L as well as balance sheet. But before that, just read once. They have given incomplete information of moonlight traders. See, there is some items missing. Debtors opening balance we don't know, creditors closing balance we don't know, stock opening balance is missing. We'll find all of them. Come to the end of the question. What is it told? You are required to prepare trading P&L and balance sheet. So trading P&L and balance sheet is your answer. Other than that, you might have to prepare debtors account, you might have to prepare creditors account. All of those will become your working notes to solve the problem. Okay. Then the adjustments are here. Machinery, there is some sale and one new machinery is purchased. Sale is at loss. We have few adjustments. Office equipment is also sold. Loan is partly repaid during there and there is some interest adjustment. So remember, adjustments are there mainly with regarding to 3. One machinery, second one equipment, third one loan. Okay. Come to the beginning of the question. Start from the beginning. Land, 5 lakh opening, 5 lakh closing. No depreciation, no purchase, no sale. So I would have to prepare 2 balance sheets. One the opening balance sheet, 2 the closing balance sheet. Why do we prepare opening balance sheet and closing balance sheet? In the balance sheet as on 31st of March 2024, you would have to write opening capital, which you don't know. So to do that, especially we prepare this opening balance. Okay. How much is my opening balance of land? 5 lakh. Closing balance of land? 5 lakh. So 2 balance sheets. First one, balance sheet as on 31st of March 2024. Closing balance sheet. Here I would write land of 5 lakh. And in my opening balance sheet also I'll write land of 5 lakh. To be precise, whatever is prepared after this is actually working note. So this is our working note. Do you understand that I wrote 5 lakh rupees land? What's after land of 5 lakh rupees? In my balance sheet asset side. Then I have plant and machinery. How much is the opening value of plant and machinery? 2 lakh 20. Closing value 3 lakh 30. Remember, whenever in single entry, that is incomplete records, if they give closing balance, that will be before depreciation. Those people are not smart enough to understand accrual entries. They maintain incomplete, unscientific records. They keep track of only cash transactions. Depreciation they would have forgotten. So 3 lakh 30 might not be correct. 3 lakh 30 might not be correct. So 2 lakh 20 to 3 lakh 30, 1 lakh 10,000 might be purchase, or there is some element of sale also. So what to do? In my opening balance sheet, I'll write plant and machinery. How much? 2 lakh 20. There's no problem in opening balance sheet. But in closing balance sheet, yes, there is. Please don't write plant and machinery value of 3 lakh 30. You don't write it in the outer column. That will be usually before depreciation. So we'll do one cute working note for plant and machinery. Shall we? How much is the opening balance? 2 lakh 20. Closing balance is not 3 lakh 30. Closing balance is not 3 lakh 30. Keep that on hold. Please keep that on hold. We'll come back to it later. Is that okay? What is after that? Then we have office equipment. What is the value of our office equipment? Opening balance is 1 lakh 5. Opening balance of focus, yeah. Opening balance of office equipment 1 lakh 5. I would write in my opening balance sheet as office equipment. How much is it? 1 lakh 5. The closing balance of office equipment, we cannot trust with that 85,000. 1 lakh 5 has become 85. There might be sale of 20,000 worth of equipment. So I would write office equipment, but I would want to do one working note. I would want to do one working note. Observe, I'll open one more table. This is for office equipment. This is for office equipment. How much is the opening balance? 1 lakh 5. So opening balance is 1 lakh 5. But there is some sale, there is some adjustment. We'll identify those adjustments and then post the balance later. Only opening balance I'm sure. Closing might be incorrect. Don't go with the closing balance of asset. Okay. What is after 1 lakh 5? Debtors. How much is our debtors? Opening we don't know. Closing we know 2 lakh 25. So what do? I'll open one debtors ledger. I'll open one ledger for debtors. Opening balance we don't know. But we know the closing balance. How much is closing? 2 lakh 25. So when I prepare my balance sheet, in my balance sheet, I'll write debtors opening balance 0, closing balance 2 lakh 25. 0 Allah, actually we should find. So I would write in my opening balance sheet debtors. I would give space to find this balance later. And in my closing balance sheet, I will write debtors. How much? 2 lakh 25. You see, what is after debtors? We have creditors for purchase. How much is creditors for purchase? Opening 95. Closing, we don't know. We should find it. So in the closing balance sheet, I would write creditors for purchases, no. But I don't know the amount. But in my opening balance sheet, I do. How much is in opening balance sheet? 95. Closing, I'll find it eventually. Shall I open also one ledger for our creditors for purchase? How much is opening balance? 95. Closing, don't know. Write balance carry down, we'll find it later. Is that okay? What is after creditors for purchase? We have creditors for office expenses. Creditors for purchase means we purchase goods from them and we owe them money. That is creditors for purchase. Creditors for office expenses means we have they have paid our expense. We say we have taken benefit from them, service from them. We have to pay them money, but we have not yet paid. How much opening? 20. How much closing? 15. So I would open one creditors for office expenses account because it's a liability. Opening balance on the credit side 20, closing balance on the debit side 15. And this I would write it in our respective balance sheets also. How much in the opening balance sheet? 20. This is my opening balance sheet. On the liability side, I'll write creditors for office expenses 20. And in my closing balance sheet, I would write creditors for office expenses. How much? 15,000. Did you all get this? Okay. Very good. What's after this? Then I have stock. Opening stock, we don't know. Closing stock, 65,000. So this is the stock I would write in my trading account. Debit side opening stock, I don't know. Credit side closing stock, I know it is 65,000. Opening stock, what I don't know, has to be written after we find in balance sheet asset side opening. Closing stock 65 should be written in closing balance sheet. Come to our opening balance sheet. I would write here stock, but I don't know the amount. And in my closing balance sheet, I'll write below debtors stock. I know that it is 65,000. Understood? What is after this 65,000? Then scroll down to the next part. Long-term loan from FBI, Federal Bank of India, not Foreign Bureau of Investigation. How much loan? 160 and 1 lakh. There is some interest adjustment on this. When we read it, we got to know. But anyways, let's write our liability. In the closing balance sheet, how much is loan? 1 lakh. How much is it in the opening balance sheet? I will open one cute ledger also for this. Why? See, at the beginning of the year, loan was 1 lakh 60. Now the loan has become 1 lakh. There is some repayment. You agree with me? I need to figure it out. So I would write opening balance of loan from FPI 160. Closing balance is 1 lakh. Sir, why can't we assume 60,000 to be paid? There might be an adjustment. They've told some adjustment. There might be further loan taken during the year. Are you getting it? So let's write it like this and wait. What's after that? Bank. How much opening balance? Closing. So I would open one bank account. I would write debit side 25. Credit side, I don't know. In my balance sheet, opening balance sheet. What balance sheet? I'll write bank 25. In the closing balance sheet bank, I don't know. We'll find it. After we record all the cash transactions, we'll be able to find the closing balance of bank balance, and that will be written in the closing balance sheet. Okay. And after that, other information. What is the other information? Collection from debtors. How much money have you collected from debtors? When you collect 9,25,000 from debtors, what is the journal entry? Bank account debit to debtors account. So in our debtors account, here I would write by bank account. How much? 9,25,000. And in my bank account, I would have to write on the debit side debtors. Come to bank account. On the debit side, I would write here debtors. How much is our debtors? Sorry, bank to debtors. No, rest it. I would have to write here only debtors. How much? 9,25,000. Easy. What is after this 9,25,000? Then I have payment to creditors for purchases. How much did we pay to creditors for purchase? 5,25,000. When I paid 5,25,000 in bank account credit side, payment to creditors for purchase. How much? 5,25,000. In creditors account, debit side, I would have to write to bank. In creditors for purchases, I would write debit side to bank. 5,25,000. Understood this? What is after that? Payment of office expenses, excluding interest. Obviously, it will not be included. How much did we pay? 42. So, is there any outstanding office expenses or something? No. So, it will appear in my bank account on the credit side. What do I write here? Sorry, there is payment for outstanding. Is there? No, creditors is there. Creditors for office expense is there. We opened a ledger. Have we? So this entry will not be bank to office expenses. It will be bank to creditors. So in my bank account, I'll write creditors for office expense, which is how much? 42,000. And have you opened one ledger called creditors for office expense? Yes, there I would write to bank 42. Creditors for office expense. Here I would write to bank 42,000. Here, what is after 2 bank 42 there? Salary paid. How much is salary paid? Salary is paid 32,000. In my bank account credit side, by salary account 32,000. Is there anything called outstanding salary? No. So whatever is paid is our expense. So in our P&L, I would write debit side to salary. 32,000 whatever I paid, I have written as expense. What is after that? Selling expenses. How much is selling expense? 15,000. Same story. I would write selling expense in my P&L account debit side. And I would also write this 15,000 in our bank account credit side because it is payment. Here I have bank account. Where is it? Here. I will write credit side here. By selling expenses 15,000. Are you with that? Am I fast? What's after that? Cash sales. How much is cash sales? Hey, cash sales andre not cash is sold. Goods are sold for cash. Goods are sold for cash. How much cash sales? 5 lakh 40. No, that is credit purchase. 2 lakh 50,000. 2 lakh 50. So in our trading account, I would write credit side. What would I write here? Buy sales. How much is cash sales? 2 lakh 50. Against this cash is received. Entry is cash account debit to sales account. So in cash account, I should write this as a receipt. In our case, bank account. In my bank account, I would write debit side to sales. Cash sales 2 lakh 50. Understood? What's after cash sales 2 lakh 50? We have credit sales, which comes to how much? 80% of total sales. Okay. So on the total sales, credit sales is 80%. On the total sales, credit sales is 80%. 20% is cash sales. We know cash sales. We can actually find credit sales. Correct, Alva? So we need to know credit sales. We know credit sales is 80% of total. It will be 20% of total. So they've told credit sales, which is 80% of total. Oh, they've not given amount. So now we can do 2 lakh 50 by 20%. Do 2 lakh 50 by 20%. 12 lakh 50,000 is total sales. In the 2 lakh 50 is cash sales. Credit sales is 10 lakh. Easy. See, 20% of the total sales is cash. 80% is credit. You can say 20% is 2 lakh 50. How much is 100%? To 2 lakh 50 by 20%, you get 12 lakh 50. 12 lakh 50,000 is total sales. In the 2 lakh 50 is cash sales. How much is credit sales? Everyone understood 10 lakh? Please tell, yeah. Very nice. So in my trading account, I have written buy sales, cash and credit. Cash sales should appear in my bank account on the debit side. Have we already written it? Yes. In our debtors account, I would write debit side, 2 sales. This is credit sales. How much? 10 lakh. Everyone understood 10 lakh? Is something. Very nice. What is after this debtors of 10 lakh credit sales written? Credit purchases is 5 lakh 40. Goods are purchased on credit to the extent of 5 lakh. So in my purchases in the trading account debit side, I would write here 2 purchases. It will be cash and credit. It will be cash and credit. We know only credit, no, right now. Okay, how much is credit purchases? 5 lakh 40. I would write it in inner column. Then they have told us that cash sales is 40% of total purchase. So if cash is 40, credit will be how much? 60. So please do 5 lakh 40 divided by 60%. Can I say total is 9 lakh? If total is 9 lakh, then how much will be cash purchase into 40%? 3 lakh 60. This 3 lakh 60 should appear in our bank account on the credit side. Payment. Shall I come to bank account? Write it on the credit side here. 5. What is it? Purchase, no? Oh, 5 purchases. Cash purchase. How much? 3 lakh 60. And credit purchase is there in our creditors for purchases. I would write here buy purchase. How much? 5 lakh. Very good. So total purchase in trading account, credit purchase in creditors account credit side, cash purchases in bank account credit side. Done. Next, we have GP margin. How much is GP margin? 25% on cost. Oh, if cost is 100, GP is 25. 25% on cost. That means cost is 100, profit is 25, sales is 125. We know sales. Using that sales, can we find GP? Yeah, we can surely do. Or we can do percentage also. Profit on cost is 1 by 4. Profit on sale is 1 by 4 plus 1, which is 1 by 5. Easy. Now we apply that 1/5 on the total sales, will get your profits. How much is sales? 12 lakh 50. So please do 1 by 5. 2 lakh. Everyone understood 2 lakh 50 to be my GP? Alternatively, we can continue in that working note also. I'll show you how that working note gets closed. Okay, profit on sale is equal to 12,50,000 into 1 by 5. And you do profit on sale, 12,50,000 into 1 by 5 is 2,50,000. It is 1 by 4 on cost. Cost has to become selling price, so I'll add 1 profit to 4 cost. It will become 1 by 5. That is nothing but profit. How much is profit? 2,50,000. So I wrote 2,50,000 profit in trading account. TP. I also, one second. Here you see 2,50,000 here, 2,50,000 here. Here, what is next after that? Discount allowed. Expense alva. P&L account debit side 5,500. We write here P&L account debit side, I'll write 5,500. Then there is discount received 4,500. Income P&L account credit side 4,500. Discount received is 4,500. Discount allowed is 5,500. What is after that? Discount allowed and discount received. Depreciation is to be provided as follows. Plant and machinery 10%, office equipment 15%. Is there any other adjustment? Remember the depreciation percentages. You will read this sale and purchase adjustments and then do depreciation. Along with, we'll do depreciation. Read this. On 1st of January 2000, sorry, 1st of October. Hurry, not able to see clearly. On 1st of October 2023, they sold machine having book value of 40,000 at a loss of 15. What is the book value of the machine? 40. It is sold at a loss of 40,000 worth of asset. If it is sold at loss of 55, what is the selling price? 25. 25 plus 15, 40. So do that working note here for office furniture. Office furniture or plant and machinery? Plant and machinery. So what is the book value of the asset sold? 40. Totally how much is the book value of the machine? 2,20,000 or 2 lakh? What are we talking about? Plant and machinery. No. See, plant and machinery, what is the value? Depreciation is here. Plant and machinery opening 2,20,000. So I would say plant and machinery is there 2,20,000. That 40,000 worth of machinery is sold. What is the balance? 1,80,000. 1,80,000. When is this sold? Silence. When is this sold? 1st of October. Shall we depreciate it till 1st of October and then sell? I'll write less depreciation till 1st of October. Depreciation is to be done at what rate? 7%. 10%. Come on, do 10% of or 40,000. But not for full year. April, May, June, July, August, September. 6 months. 40,000 into 10% into 6 by 12. 2,000. We're going to depreciate only this part. Why? The retained part will be depreciated at the end of the year. So 2,20,000 minus 2, it's okay. 40 minus 2 is the part which is getting sold. Can I say 40 minus 2, 38,000 is the cost of the asset that's getting sold? Here you don't try to adjust profit or loss. Write it separately. How much is the cost of machinery sold? You tell me what is the selling price at which it's sold. They have not told selling price. They have told it is sold at loss of 15,000. So it's not 25. 38,000 is the cost. 15,000 is loss. 38,000 minus 15. 20. So it is sold at 23,000. Do you all agree with me? I'll repeat. 38,000 is the cost. 15,000 is the loss. So 38,000 cost of machine. If it is sold at loss of 15, can I say selling price is 23,000? When I have to write the accounting entries, I would have to write bank account debit. How much money is received? 23. What is the value of the asset going out? 38. Difference between them? 15,000 P&L. So entry is bank account debit, P&L account debit to plant and machinery. Am I right? So in my plant and machinery account, what do I write? By depreciation, firstly depreciation how much? We charged no 2,000. That 2,000. Then I would write by that part which is sold no bank account. How much money did we receive? 23, loss 15. So write 23 here, by P&L account 15,000, loss here. This by bank whatever is there no 23. It should be written in bank account debit side. Shall I write in bank account debit side? Come to bank account. Here I would write on the debit side. What would we write? Plant and machinery sold 23,000. Done. And what is the loss on this sale? Where would you write that 15,000? P&L account debit side. In P&L account on the debit side, I'll write loss on sale of plant and machinery 15,000. Everyone understood? What is after that 15,000? New machinery was purchased on 1st of January 2024. Oh, they have not told how much. You should find it. They have sold one machinery, they have purchased one. They have not told it. We should find. Very easy, yeah. Observe, plant and machinery, ignoring depreciation, opening balance is 2,20,000. Correct or not? From this, the asset sold, its cost is how much? 38, no, sorry, 40,000. Then we have to add purchase and then we get closing balance. Ignoring depreciation. Closing balance is told. How much is closing? 3 lakh. See, out of 2,20,000, when you sell 1,80,000 cost of the asset will be 1,80,000, but it's become 3,30,000. How will 1,80,000 become 3,30,000? 1,20,000 plus 30, 1,50,000 worth of asset is purchased. You agree with me? The opening balance is 2,20,000. Purchase is sale is minus 40. Basically 1,80,000 should be closing. But if the closing is 3,30,000, machinery mari hakala. Like you keep the machine and then you use it, you close it in the night and then go next morning when you come, there'll be a baby machine. No, you have purchased 1,50,000. So to the extent it is purchased, you have to write it as purchased. Here I'll write new purchase, new asset. 1,50,000. Understood? This 1,50,000, whatever is being purchased, either it should be liability or the money should be paid against it. So have they told anything that it is purchased on credit? Have they told anything? No. Shall I deduct it from my bank balance? Come to bank account. Here on the credit, I'll write, what is it? Payment alva, purchase. How much was it purchased for? Purchase of new machinery, 1,50,000. Easy. What is after that? Purchase of new plant and machinery, 1,50,000. Now let's do depreciation on those assets proportionately for the balance sheet. Depreciation is done on what date? 31st of March 2024. I'll write less depreciation. What is the rate? 10%. On this 38,000, so no depreciation. Why? It is sold. On this 1,80,000, okay, let's do 10% depreciation. 18,000. Full year, no, retained part is there for full year. And this is purchased only on 1st of January. So January, February, March, 3 months depreciation. To 1,50,000 into 10% into 3 by 12. 3,750. Can I say together the depreciation is 21,750? Did everyone get this? This total depreciation should be written in P&L account debit side. But before that, take the check the total here. 220 minus 2 plus 150 minus 21,750. 2,20,000 plus 1,50,000, 3,70,000 minus 2, 3,68,000. From 3,68,000, huh? You are not getting 21,750. Oh, I forgot rate minus 38. Total should be written. No, that is removal of the asset. 3,08,250. Okay. Also check the total of the retained part of the asset. 1,62,000 and 1,46,250. So 3,08,250 is the total machine in the balance sheet. We have to write so. So I'll write it here. Observe here. Balance carried on will be 3,08,250. How? There is depreciation till the date of sale, and then that machinery is sold. Depreciation till the date of sale is how much? 2,000. Correct or not? Am I right? 21,750 is full year depreciation. For 2,000 is already written now. 2,000 on the part sold is done. You need to depreciate that part retained and part newly purchased. 21,000 full depreciation. Purchase was how much that we added? 1,50,000. 1,50,000. Check the total now. Does it tally? What happened? Study material questions are simpler, complex. Same question is there. Moonlight traders. Very good. How much do we get? 3 lakh, 3 lakh 70, 3 lakh 70. Done. Hell yeah. Very good. Actually, plant and machinery ledger is closed. Correctly match. What is after this plant and machinery 370, 370 that we have? Office equipment was sold at its book value on 1,423. Office equipment, if you observe, opening is 1 lakh 5. They've told some closing balance in the question. What have they told? Office equipment. Office equipment. Closing balance. Opening 1 lakh 5, closing 85. Difference of 20,000 is the value of the assets sold. Observe here, cost of the machinery sold 20. Selling price is also considered to be 20. They've told me it's sold at cost. So profit or loss is 0 basically. So here in office equipment, I would have to write by parts sold. How much is it sold? 20. Closing balance is how much? I cannot write 80. You know why? I should provide depreciation on that. On 1 lakh 5, you will not provide depreciation. Deduct that 20,000 part which is sold. Balance 85,000 into 15% depreciation. 12,750. And balance carried on will be 1 lakh 5,000 minus 32,750. How much? 72,000. 72,250, whatever is office equipment purchased, will be written in the balance sheet on the asset side. How much? 72,250 closing. Opening is 1 lakh 5. Already written. Plant and machinery we found closing balance. No, 3 lakh 8,750. Sorry, 3 lakh 8,250. Write that also here. 3 lakh 8,250. Okay. Doubt? What is after that? Till where have we come? Loan was partly repaid on 31st of March 2024 together with interest for the year. Okay. How much is loan opening balance? We did not open ledger for loan. We opened. 1 lakh 60 became 1 lakh. How? You made repayment. How much did you repay? 60,000. And in our long-term loan from FPI, we've written two bank account. What should I write? Buy long-term loan from FPI. Shall I? Bank account. I would write here buy long-term loan from FPI 60,000. Done. What is after this 60,000 here? Interest. How much is the opening balance of loan? 1 lakh 60. On that you compute the interest at what rate? 12%. How much is 1 lakh 60,000 into 12%? 19,000. 19,200 is the interest. Shall I assume that interest is paid? They've told paid, no? Very good. So 19,200 will appear in P&L account debit side as expense. P&L account debit side. What is that? Interest on loan. And it is paid. Bank account credit side. Shall I write bank account credit side? Interest on loan from FPI 19,200. Done. Depreciation has to be written in P&L account debit side. We have forgotten to write it. How much is the depreciation on our two things? One is office equipment 12,750 and here new and retained. How much depreciation? 21,750 and here how much was the depreciation? 12,750. Shall I post both of them? Come to P&L account. On the debit side, I would write here two depreciation. On plant and machinery, 2,000 plus 21,750. 2,000 is that asset sold parts depreciation. This is the part sold. This is the part retained. Then office equipment 12,750. Put it together. 36,500 is the total depreciation. Understood that? What is after the depreciation? What do we have? Loan was also over. Nothing. Yeah. Entire question is over. Entire question is, shall we close one ledger at a time? Trading only, we have opening, we have part. Opening is missing. We have purchase, we have GP, we have sales, we have closing. Can we find opening as balancing figure? 12 lakh 50 plus 65, 13 lakh 15 minus 2 lakh 50 and minus 9 lakh. 11 lakh 50 will go. 1 lakh 65,000 is opening stock. This 1 lakh 65,000 I'll write in my opening balance sheet as inventory. 1 lakh 65. Here. Then I've also posted my GP here. I should find my net profit, but before that I'll close all the ledgers. Shall I? Net profit and balance sheet at the end. This balance sheet also. Everything is there. No, debtors opening balance is missing. Come to plant and machinery. Ledger closed. Come to office equipment. Ledger is still open. Sorry, closed no. Office equipment is also closed. Debtors. We have opening. Opening is missing. We have sales. We have cash received. We have closing. Identify the balancing figure as opening balance of debtors. Discount idya? Discount idya? Where is it? We wrote in P&L. We forgot to write here. Sorry, yeah. Discount is given to our debtors. Debtors balance will decrease. Right? Discount 5,500. Tell me the total on the credit side. 11 lakh 55,500 minus 10 lakh. 1 lakh 55,500. Can I say 1 lakh 55,500 is my debtors? And 1 lakh 55,500 of debtors will be written in the balance sheet on the asset side. I would write here 1 lakh 55,000. Closing debtors we don't know. We know that the opening debtors is 1 lakh 55,500. Understood? What is after this 1 lakh 55,500 debtors? Creditors 95 plus 5 lakh 40. Discount idya? Discount received. Did we write in P&L? Oh, sorry, we posted. Forgot to write here. Yeah, we should have done. How much? 4,500. Total here 6 lakh 35 minus 5 lakh 29,500. What do we get? 1 lakh 5,500 creditors for purchase. I would write it in my balance sheet as liability 1 lakh 5,500. In my balance sheet, I will write creditors for purchase 1 lakh 5,500. Understood? Okay. What is after that creditors ledger? Plant and machinery over, office equipment over, debtors over, creditors is over, creditors for office expenses. 42 plus 15, 57. 57 minus 20, 37,000 is expense for the year. Opening is there, closing is there, amount paid is there. If I have to tell you the logic, let's say beginning of the year 20,000 was their outstanding amount. You have paid 42, still you should pay 15. Why? You've taken office expenses, expense of 37,000 which you have incurred is not paid. Are you getting it? So where do I write this 37,000? P&L account debit side office expense 37,000. Shall I write? P&L account debit side. I'd write debit side to office expenses 37,000. Done. Hell yeah. What's after this office expense 37,000? Come to the next ledger. Long-term loan from FPI. Long-term loan from FPI 1 lakh 60. 1 lakh 60. This is closed. 1 lakh was there. 60. Sorry, 1 lakh 60 was there. 60 is paid. 1 lakh is still outstanding. Interest on this is already adjusted. Yes or no? See bank account. Identify balancing figure. There's something that we're missing? No. Everything is written. Office equipment sale bardila now. We sold office equipment, no? Office equipment for what value? 20,000 worth of equipment sold for 20. We have forgotten to write. Let me write 20 here. Now find the closing balance of bank. How much is it? 25 plus 925 plus 250 plus 23 plus 20. 12 lakh 43. From 12 lakh 43 deduct all of these. 39,000. Everyone understood 39,800. This is bank closing balance. The balance sheet on the asset side 39,800. Understood? Yes. Rest ಸತಿ ಬರ್ದಿದೀವ ಇಲ್ಲ ಲೋನ್ ಬೇರೆ ಇಂಟ್ರೆಸ್ಟ್ ಬೇರೆ ಸಪರೇಟ್ Loan opening balance is 1,60,000, closing balance is 60. The closing balance is 1 lakh. That 60 what is paid is only loan repaid. Interest is separately computed on 1,60,000. Yeah, please sit. Sari alva? On 1,60,000 we paid 12% interest. On 1,60,000, 60,000 we have done repayment. Sari hoita? Correct, it's correct. Don't worry. Ashte guys, rest everything is done. Come on, let's close our opening balance sheet. What's missing in opening balance sheet? Everything is there in opening balance sheet. Only capital. Tell me how much is capital? 5 lakh plus 2 lakh 20 plus 1 lakh 5 plus 1 lakh 55,500 plus 1 lakh 65 plus 25,000. 11 lakh 70,500 minus 95 minus 20 minus 160. 895,500. Take this 895,500 to balance sheet here. Opening capital. Close our trading. Find GP. GP is found. P&L. Can I say 254,500? Deduct all of these items to find my net profit. 32 plus 15, 47, 52, 500, 57, 67, 500, 67, 500 minus 36, 500. 67, 36, 73, 83, 84, 84, 84, 84, 94, 103, 200, 110, 120. 120 if you deduct 134, 500? No. 94? Wrong. Net profit 94, 300. Is the amounts correct individually? 94, 300. We'll add it to capital here. Add net profit 94, 300. What do we get? 9 lakh 89,000. Check the total of the balance sheet. 989, 800 plus 1 lakh 5,500 plus 15,000 plus 1 lakh. 1 lakh. Asset side. Pakka. So this is question on incomplete records. Not clear. Done. So I'd want you to know some things. When we do incomplete records based question, there are two ways of solving it. See, what has happened in incomplete records is you maintain records, but in an incomplete manner. You record only cash transactions, receivables, payables, and assets and liabilities. You don't record accrued transactions, outstanding items, depreciation, non-cash expenditures. All of these are not done because they are not that smart. They are not financially literate. So what to do? They come to you to help them understand their profit and loss statement for their decision making. We have two sets of solutions for them. First set of solution, you will prepare complete set of books of accounts like what we did now. This is called as conversion of single entry to double entry. There is an alternative method. The second method, we don't prepare complete trading P&L, balance sheet, profit and loss account, and then LA. We will do statement of affairs method. We will write all the assets at restated figures, all the liabilities at restated figures. Capital is found as balancing figure in balance sheet. So because you're finding balancing figure in it, it will not be called as balance sheet, it will be called as statement of affairs. We do two statement of affairs. One is for the opening date, other one is for the closing date. So in both the statement of affairs, our objective is to find the capital. So once you find the capital, you will use up the logic. See, the capital has increased because of profit, or capital has decreased because of loss, or the other things can be additional capital and drawings. So you know the formula, no? Or you know the pattern, no? In your closing balance sheet, you write no opening capital plus additional capital minus drawings plus profit is equal to closing. You know opening, you know closing. You know additional capital, you know drawings. You find profit as balancing figure. That becomes statement of profit or loss. What does it become? The statement of profit or loss is incorrect, incomplete, and unscientific method. How do we identify profit? CL. Usually capital is opening plus additional minus drawings plus profit is equal to closing. Here we want to find profit. So I'll keep closing here. These items are there, no three. I'll send them here. So it will become closing minus additional plus drawings minus opening. That's how we find profit. And this is called a statement of profit. What is this table called as? Are you guys getting it? So today as a homework, solve one question on statement of affairs method. Okay. Once you do that, you get a kind of nice holding on the topic. And maybe after that, you can try doing more questions if you have time. Is that okay with you all? Can I say we're done with incomplete records? Yeah. So we need to do NPO, partnership, and company accounts. Anything that we missed? No, these three topics. So what time do you want to take lunch break? Now only or a little later? We'll take now and we'll also take one break later. So now it's 1:15. I'm finding it very dizzy. I don't know why. Slightly unsick. So let's take a break for lunch. 1:15. What time do we meet again? 2 o'clock or 2:10? We'll do that also post break. So we'll take a break for lunch. When we come back, we'll do NPO and then partnership. Maybe an NPO and little bit of partnership is done. We'll take a small break. And then we come back and do our company. Is that okay with you all? So tell me at what time? It's 1:15 now. 2:15 Okay na? Okay guys. See you all at 2:15 Take a short break. Take lunch break, sir. Take lunch break. 8 to lunchtime. Very good afternoon everyone. Welcome back to CA Foundation Accounting Marathon. We were discussing the topic of final accounts of sole proprietorship and incomplete records pre-break. We've done final accounts on sole proprietorship. We also understood the overall concept of final accounts. When we do incomplete records, we did one question, conversion of single entry to double entry. But I was able to tell you certain things about incomplete records. Can we say incomplete records is done? Only thing is you can solve the problem under two approaches. One is conversion of single entry to double entry. That is the problem that we did in the class. The second method is not conversion of single entry to double entry. It is leaving it at single entry stage only, but still determining the profit or loss. So under that we do statement of profit or loss, which is analysis between capitals to determine our profit. We take opening capital plus additional capital plus profit is equal to closing capital relationship to identify our profit. So we'll take closing capital, from the deduct opening capital, additional capital and add drawings to identify profit for the current year. So to do this, we want opening and closing capitals. It will be found as balancing figure between our assets and liabilities in statement of affairs. So statement of affairs is something which looks like balance sheet, but it's not actually balance sheet. Will you do one question on statement of affairs as a homework today for you to warm up? So we have done question on conversion of single entity to double entity. If you would want to do question on statement of affairs method, I will tell you where to do it from. So if you have to do incomplete records, to incomplete records, statement of affairs method question is there in June 2024 RTP. I'll share that question also to you if you want. So June 2024 RTP, there is a question. Will you please solve that? Make a note, June 2024 RTP. June 2024 RTP on incomplete records. Question number 10. June 2024 RTP question number 10. Please do solve it. I'll however share this video to you people on Telegram. It's not a big one, about 10 minutes, 15 minutes long. But if you would want me to solve, I'll solve now. But we have enough things to do now. We have NPO, partnership and company accounts to do. Shall we go to NPO? NPO is something which is very similar to what we do under any other form of organization, like incomplete records, as well as in the case of sole proprietorship accounting. But there is an element of difference between not-for-profit organization and other organizations. Do you want to know what is the point of difference? Usually when we do business, the objective is profit. Not-for-profit organizations, the objective is not to make profit. The objective is to fight for a purpose, promote a cause, work for a form of art, culture, dance, custom, tradition, all of this. Like to promote dance, we have dance associations. Get it? Not dance bar, dance association. That is an NPO. To promote cricket culture in India, IPL is played. The objective is not to make profit. Objective is to promote the sport in the country. NPO, not for profit organization. The objective is not to make profit. The objective is to promote the sport in the country. Similarly, to fight against a specific class, to fight against illiteracy, to fight against poverty, to fight against child labor, fight against any specific cause, you create one NPO, not for profit organization, and throughout it will work for its cause. Are you getting it? So in such cases, you will not make profit. So the accounting will become slightly different. You won't prepare P&L account. Prepare something called as income and expenditure account. And you won't call it profit or loss. You will call it surplus or deficit. That is excess of income over expense or excess of expense over income. So in such kind of NPOs, the money that they collect is only to cover up the cost. Another example, college. So in your college, the fees that they collect from you is not to make profit. It cover their cost. It's to cover their cost only. And in the process, by mistake, if they collect some extra fees, that is not profit. That is surplus of income over expense. Such surplus will be utilized again to promote education, to give education at cheaper cost, education to people who can't afford, or are you getting what I'm trying to tell? Or to give education of higher level to the existing people. So that is the objective. And if in case they collect this less money, that is not loss, that is deficit, which is rare, but it is called deficit, where the income, the expense that you incurred is more than the income. Because the P&L account is different, even in the case of cash book, we don't call it cash book. We call it receipts and payment book. Receipts and payment book. There is no debit side, credit side. There is receipt side and there is payment side. Are you getting it? Balance sheet is same, but in balance sheet we don't prepare capital. We call it capital fund. What do we call it? See, in the case of partnership, you contribute capital, and when the firm or the partnership or the sole proprietorship makes profit, from that you withdraw money. In the case of NPO, you can't. Let's say you create one college, and for building that college, for payment of expense of that college, you contribute money. That is like donation. If you contribute 10 crore rupees, that will be called as capital fund, not capital. From that, whenever they make profit, you can't take the profit as drawings. Are you getting it? That profit will remain there only. That is the difference between capital fund and others. Any problem? Projector. Sometimes what happens, the this and then the fan is to the same rod which is there above this wall ceiling. So when that fan starts shaking, the projector does. Okay. In Sheshadipuram, that used to happen whenever the train goes. Yeah, it used to, but now it is not. Yeah, there's a railway track right opposite. So whenever you come to class, we say get out, then you can go outside, say bye to the railway. Trains what goes. Okay. And accounting is done based on accounting is done based on fund based accounting and accrual system. What is fund based accounting? Fund based accounting means whatever money is received towards donation will be treated as fund. It is not treated as capital. Let's say we are running one library. We have library in only one part of the city. So people in the other part of the city also want a library in their closer vicinity what they stay. So what do we do? One of the the member of this library's trust contributes money, using which they construct one library in the other part of the city. Once that library is situated, once the library has to be built, firstly the fund is received. Then the journal entry will be bank account debit to library fund account or library construction fund account. When that money is incurred for construction, it will become library building account debit to bank account. Bank balance will go, library building will come. In the balance sheet, on the asset side, there will be library building. On the liability side, there will be library fund. One fine day, the building will get depreciated and become zero, but library fund will still remain as library fund. So once you contribute money towards the fund, it will stay there forever. You can't withdraw and you won't get profit. When you go to temples and all, you see no list of people who contributed to the temple, they would have written, that stays there. That is fund. That is the capital fund of that specific organization or entity. And that asset will be built over it. That funds. And later date may, like I mentioned, even if the asset becomes of zero value post depreciation, that fund will still remain the balance sheet as an fund. And that depreciation, what becomes as loss, will be deducted from that capital fund. Okay. So in these kind of questions, they can either ask you to prepare income and expenditure and balance sheet when they give receipts and payment, or they can give you income and expenditure and they can ask you to prepare receipts and payment. So we don't categorize these problems into type. Basically, bank account is to be prepared, income and expenditure account is to be prepared, balance sheet is to be prepared. Sometimes they'll give you receipts and payment details, ask you to prepare income and expenditure and balance sheet. Sometimes they'll give income and expenditure details. They want you to prepare receipts and payment and balance sheet. Sometimes they don't give anything. They want you to prepare receipts and payment, income and expenditure, as well as balance. So either of the varieties of problems can come. And we'll do a problem to understand this slightly better. Let's take our question from our RTP Jan 2025. Shall we? I hope you are aware of income, expenditure, prepaid, pre-received, outstanding. That basics you would know, no? So let's see how well do we know. We'll do one question. If you don't find it comfortable, then maybe we can choose to do one more question from one of the past exams or RTP also. Okay. Come to question number 10. Question number 10 from our RTP. Shall we solve? Will you write it along? Will you write it along? Question number 10. So in this question number 10, what all have they given? They have given receipts and payment. So they want you to prepare income and expenditure and balance sheet. I'll give you a minute. Draw a page of format for income and expenditure. Oh, sorry, one page may you can do half a page for income and expenditure, half a page for closing balance sheet. And for the closing balance sheet, you need capital. You will draw one balance sheet format, opening balance sheet also. And after that, several working notes. As and when the item requires, we'll prepare working. So take a minute, draw the format. We'll solve the problem together. Solve the problem together. Where did these kids go? September 24, September 25. Sunday our class. Left in the break. Jan 25 hours. In between May 25 hours. Okay. Okay, people draw the format. On the problem solve. Instead of sleeping. You people saw your juniors. People will write exam in May. When I did. No, there the batch started. No, for May 20. I think they are in the other building. Right now they're in the other building, but when you are attending the other marathons, I think they were somewhere here only. Your marathon was in that building once, then they were here. Aita, can we start with the answer? Are you all ready? Come on, guys. Let's now solve question number 10 from our Jan 2025 RTP. This question is on NPO. NPO. Start reading the question. They've given receipts and payment account of Masters Club. They want you to prepare income and expenditure and balance sheet. See, these assets for which they've given opening and closing balances, and opening and closing balances are not same. We'll open one ledger account. Don't try to remember things. Please open ledger, put debit balance opening for asset, credit balance closing for asset, sorry, credit balance opening for liability, debit balance closing for liability. So asset opening balance debit, closing balance credit, liability opening balance credit, closing balance debit. Write the numbers and pass the impact of receipts and payment on there, and you'll find the income and expenditure balancing figures in that respective ledger. It will be quite easy if you open ledger. So please do open ledger. Let's start. To begin with, we have balance brought down 8,450. This is opening cash balance. So this will go to our opening balance sheet as 8,450. Shall I write in my opening balance sheet 8,450? So this is our income and expenditure, closing balance sheet, opening balance. In opening balance sheet, I would write cash, and I'll give little space initially for our fixed assets, and later only I'll write this 8,450. Closing. Done. You also write along. Then I have subscription of 23,000. The subscription received is 23,000. Subscription income is not 23. And see the assets and liability balances here. We have some subscription in arrear, some subscription in advance. So what will I do? Very simple. Open one subscription ledger. In balance sheet, it is there. Sorry, in receipts and payment, it is there on the debit side. In receipts and payment, it is two subscription. So in subscription account, can I write it as by receipts and payment? Yes or no? How much? 23,000. This is the subscription received during the year. Is this our income? No. If there is no other adjustment, this can be. But there is some opening outstanding, opening accrued, closing outstanding. Let's write all of. Okay. What's after that subscription? We have sale of refreshments. How much is sale of refreshments? 22,000. So to the extent of 22,000 refreshments are sold, it will become our assets. Sorry, this will become our income. So in receipts and payment account, we have written it as receipt. In income and expenditure, shall I write it as income? Hell yeah. Very good. In income and expenditure, I would write on the credit side as income. Whatever is a receipt should either become an asset. This is the money received, no? That money, whatever you received, it will become decrease in the value of an asset, or this will become income, or it should become liability. Akkalva, Ashtaktidya. I'll write sale of refreshments as income 22,000. Then I have entrance fees of 26,000. Is there any adjustment? If there is no adjustment, I would write this entrance fees as my income in income and expenditure. What is I told here? Is there any adjustment? Okay, there is some adjustment. So what would I do? I would still write it in my income and expenditure, but in the inner column. But in the, did you understand that I'll write it in the inner column? What is after that entrance fee of 26,000? Don't write entrance fee straight away, fully added to the capital fund straight away. Someone add text it. The logic is very simple. You have one club, you have one library, or you have one cultural association. People whoever enter the club are buying one entrance ticket. That entrance fee, what you collect? Capital income, revenue income. So it should be written as income and expenditure income, unless they specifically mention that it should be capitalized. So why do we capitalize? Logic is very simple. Yeah. Let's say you are running one zoo. That zoo is also a not-for-profit organization. So how much is the ticket? Or let's say you're running one library, or you're running one cultural center, or you're running one museum. So all of this, no, entrance ticket 50 rupees, 60 rupees, that will be revenue income. It will be revenue income. Let's say one of you come and then you are very rich, you want to promote that museum, you know that museum, you've been following up. Let's say you pay 1 lakh rupees for entry. As a donation you paid. So that 1 lakh rupees what you pay cannot be taken to income and expenditure as income. In that only 100 rupees is ticket, 99,900 is donation, is capital in nature. So what do we do? That 99,900 I'll add it to capital. I'll add it to, did you understand? So they'll mention capitalize, then you capitalize. Otherwise entrance fee is in the nature of income. Treat it in your income and expenditure as income. Okay. What is after that entrance fee? 26. Interest on investments at 7%, 4,500. So see here, do we have any interest investment here? Investment in assets. Fourth point, you know, is okay. Interest on investment is being received in full. So there is nothing called accrued. So I can write full amount as my income. Shall I? How much is interest received? Received is 4,550. I would write entire 4,550 as my income. Whatever is received, I have written as my income. Understood? What is after that interest on investment? Then receipts is over. Now come to payments. First payment. Salary and wages paid 12,250. 12,250 will be our expense unless there is anything outstanding or advance paid. Is there any adjustment for salary and wages? No. I don't think there is any adjustment. So what would I do? I would write this salary and wages of 12,250 paid. 12,250 of salary and wages paid as my what? Expenditure. Shall I write it as expense? Come to income and expenditure. Here I would write salary and wages. Salary and wages 12,250. Is that okay? What's after salary and wages? By supply of refreshments. See, sale of refreshments is income. Supply of refreshments is expense. Alternatively, you can do netting off. What is netting off? See, sale of refreshments 22,000. Supply 18,250. So actually what did you do? You sold it for 22,000, but you had bought it for 18,050. That 4,250 is your profit. Correct? Or 3,750. 3,750. 22. 22. So what to do? On the income side, write sale of refreshments in the inner column. Deduct the supply of refreshments and then write the net income in the income side. You can do that, but they are there apart. No. So when we read this here, we did not know that this existed. So it's totally fine. Write sale of refreshments as income, purchase of refreshments as expense separately. But you can write them in one side as the greater number minus the lesser number. Here you can't write supply minus sale. Here it will become negative. Write sale minus supply. But I would choose to write it separately because at the time of first writing, I don't know that the other item exists. Okay. What's after 18,250? Sports equipment. How much is sports equipment? Careful. Sports equipment is 27,500. Sports equipment is 27. The sports equipment, whatever you paid for, will not become expense. Why? Sports equipment can be used for more than 1 year also. You bought sports equipment this year and use it next year. Yeah. So it is an asset. See, we have sports equipment opening balance and closing balance. So what do? We'll open one ledger for the same. Shall we? So this payment, whatever you made for sports equipment here, will be appearing in that sports equipment ledger on the debit. So in receipts and payment, we written buy sports equipment. Sports equipment account will write 2 receipts and payment. How much did you pay? 27,500. Am I right? After that, we have telephone charges. Telephone charges is 2,800. Telephone charges is how much? 2,000. So this telephone charges of 2,800. See later in the question. Have they given anything like outstanding, pre-received, outstanding or accrued? Nothing. So whatever we paid is our expense. So in our income and expenditure, I would write on the expenditure side 2 telephone charges 2,800. Try and understand this. Whatever you pay is your expense. Whatever you pay is your akka. Unless they say something is paid extra or something is paid less. Here they didn't tell anything. What you paid is the expense. What if they tell in the 2,800, 200 is prepaid, then only 2,600 is expense. 200 should appear in balance sheet. So unless until adjustment is given, whatever is payment is expense, whatever is receipt is income. If you receive more than what you earn, or if you receive less than what you earn, if you pay more than what you incur, or if you pay less than what you incur, that will lead to asset or liability. I'll repeat once again. Salary, expense 10,000, paid 10,000. Is there any asset or liability? No. Salary, expense 10,000, paid 8,000. 2,000 outstanding salary will become liability. Salary, expense 10,000, paid 12,000. 2,000 you paid extra. That is prepaid or advance given, liability. So expense, liability, no? Sorry, advance given will become asset. So if you pay the same amount what you incur, it will be expense, it will be payment. If you receive the same amount, what is your income? It will be receipt, it will be income. There will be no difference. Are you getting it? The difference will arise because of asset or liability. Paid extra or you paid less. You received extra or you received less. That will be pre-received, prepaid, accrued and outstanding. Okay. Let me write telephone charges of 2,800 as expense. Done. Then I have electricity charges of 15,600. Electricity charges of 15,600. I would write here also. But is there any adjustment? Electricity charges, there is outstanding 5,400, outstanding 3,800. So what do? I will open one electricity charges ledger. Electricity charges ledger. Don't do plus minus. It's irritating. Always do ledger. The probability of doing error will come down. And the misconception that you people have is, if you do plus minus, I'll save time. If I do ledger, I'll take more time. No. What you write plus, outstanding, minus, paid, all of that. Same thing you'll write in ledger also. But here you write debit side, credit side. This will look like you have written more, but it's taking more space, not more time. Ledger will take more space, not more time. The tree is already cut, the paper is already printed. Don't try to save paper. Save one more attempt. That way you can actually save paper. By not writing exam once again, one more tree can be saved from being cut. So what should you do? You should always prepare ledger. Very strongly recommended. Get it? Okay, yeah. In receipts and payment, it is by electricity charges. Electricity charges ledger. What do? Do receipts and payment. How much is that amount? 15,600. Understood? Doubt idya? What is after that? Honorarium charges. Honorarium is some professionals have come and they've given their services, but they've not charged us money. So we cannot pay them professional fee, but we pay them honorarium. What do we pay them? Get it? How much is honorarium that you paid? 6,500. 6,500 honorarium paid. You would write it in your income and expenditure on the debit side as expense. Honorarium 6,000. Understood this? Okay. What's after that honorarium? We have closing balance of how much? 1,100. This closing balance of 1,100 is your asset. In the balance sheet, you would write cash and bank. How much? 1,100. By this we are done with all receipts and payment. Now shall we see the balances of assets and liabilities that they have given? Have a look at the balance. Sports equipment opening balance is 32,000. So this 32,000 sports equipment opening balance, can I call it my asset? Very good. So in my opening balance sheet, I would write it as an asset 32,000. So will I write it in my sports equipment ledger? Sports equipment ledger, debit side, balance brought down 32,000. Sports equipment ledger, debit side 32,000. Understood? And where else will I write it? In my balance sheet, opening balance sheet, I would write sports equipment 32,000. Done. What's after that sports equipment? Subscription in arrears. The subscription in arrears means people who are members of our NPO, Masters Club, they would have to pay a subscription fee. They have not paid subscription, but they are taking services. So that subscription money I have earned, but I have not received from them yet. I have earned, but not received from them yet. So it is accrued income. What is it? Accrued income is my asset. Accrued income is my so I will write in my opening balance sheet. How much is subscription in arrears? 7,600. I'll also open one subscription ledger, and there I would write on the debit side two balance brought down, opening subscription in arrears 7,600. Got it? What do we have after that? Then we have furniture 12,480. This is again our asset. This is again our asset. So I would write furniture as an asset 12,480. Is there any other adjustments for furniture? No other adjustments. No other adjustments. Do we have closing balance of furniture? I think we have it later. 11,180. How did it become 12,480 to 11,180? So what do? I'll open a cute ledger, right? 12,480. See, it doesn't take too much time. You are under a misconception that plus minus will save time because you've been doing that throughout. Another reason why it is not recommended is now when you start with income, whatever items you add, those items have to be deducted when you start with expense. And if you start with amount received, those items are like again added. So I'll give you example here. Come here. See, in subscription account, if you want to find the income and expenditure, if you want to do plus minus logic, you know what should you do? If you know 23,000, so from this, you should deduct the opening subscription in arrears. Add the closing subscription in arrears. Add opening pre-received, deduct closing pre-received. However, for the same subscription, in the question, instead of giving receipts and payment, if they've given income and expenditure and you want to find receipts and payment, opening subscription in arrears which was previously deducted from this has to be now added. Opening accrued income which was added should be now deducted. Are you getting it? So same items will be added in certain cases, will be deducted in the other cases. And in the exam, when you're working out of so much of stress and then fear, there is a very good chance that you might mess it up. In a ledger, it doesn't change. Asset will always be debit. Liability will always be credit. And when you do plus minus, you need to know all the related items at once. You identify those terms everywhere, wherever is there, pick them all together and then do add and less. When you do ledger, you know what will happen. Now I read subscription opening. Opening subscription arrears. I wrote this here. Before that, I had read this receipts. I'll write here. Later, after 5 minutes in the question, I'll read opening pre-receipt. I'll read it later and write. And at the end, I don't even have to worry. Automatically, the format will give me the balancing figure as income and expenditure. I can never go wrong. Whether they've given income and expenditure in the question or they've given receipts and payment in the question. Or if they want me to find opening or closing balance also, I can find it very easily. It is not different. And you know what is the missing figure? Because there will be opening balance, closing balance, receipts and payment, income and expenditure. 3 are there, the 4th one is missing. They'll obviously give opening and closing balances. They'll give receipts and payment, then income and expenditure is balancing figure. If they give income and expenditure, receipts and payment is balancing figure. So ledger will actually save time. Sometimes 3 months. You get it? So don't think of saving that 2 minutes. In fact, it won't take too much time. Yeah, we've done this social experiment one in class. Told some of them you try to do the problem without working note, and whoever wants to do it with working note, you do with working note. So entire class when they solved, people who did not do it, people who did it without working note, did not do it very much in advance. They did it almost at the same time when people with working note finished. And the beauty is people with working note have higher possibility of getting the answer. And if they goes wrong somewhere, they know where to check and how to find what is wrong. But if you don't do with working note, if you do plus minus, you can't even check where you gone wrong if in case it doesn't tally at the end. You getting it? Well, yeah, very good. So what were we discussing? We were writing furniture 12,480. I've written the opening balance, and this will also appear in my opening balance sheet 12,480. Okay. What is after that? Liabilities. Outstanding electricity charges 5,400. It's electricity charges. It is outstanding. In my opening balance sheet, I'll write here outstanding electricity charges 5,400. Done. And then I'll go to my electricity charges ledger. In electricity charges ledger, it's a liability. I would write on the credit side. By balance brought down 5,400. Understood? What do we have after that? Subscription in advance 6,250. Subscription in advance means you have not earned this income, but we have already received it. Liability. Very good. Liability in my subscription account. You tell me liability opening balance which side? Credit side. I would write here by opening subscription in advance 6,250, and this will appear in my opening balance sheet on the liability side. Subscription in advance 6,250. Clear? Everyone? What is after that? Following assets and liabilities are there on 31st of March 2024. Closing balances. Shall we write closing balances? First one. How much is sports equipment? 50,000. Very good. So in the closing balance sheet, I would write sports equipment 50,500. Understood? And come to the ledger here. Sports equipment. I would write here by balance carried on 50,500. See, I did not think much. When I read the opening balance, I wrote debit side. In receipts and payment, when it was buy sports equipment, in sports equipment, I wrote two receipts and payment. Now look at this. This will easily give you the consumption of sports equipment as balancing figure. Opening balance 32. We bought equipment with 27,500. 32 plus 27,500. 59,500 worth of sports equipment should be there. No. We have only 50,500 worth of sports equipment. What happened to the balance? What happened? Huh? Consumption. That is depreciation tara. See, sports equipment will get worn out. No. Are you getting it? Like depreciation. But we don't charge depreciation. We'll write consumption. And I told you, every ledger will have 4 items. How many items? Opening, closing, receipts and payment, income and expenditure. In this, opening is there, closing is there, receipts is there, balancing figure is income and expenditure. Here you write by income and expenditure, and income and expenditure, you write 2 sports equipment. If you don't do this working note, when you say ledger, you do plus minus. You should know what to add to what no. Are you getting it? There might be sometimes hidden purchase. Hidden, they have purchased on credit so that receipts and payment barala. For example, how do we get to know? Amount will become negative. For example, opening is 32, purchase is 27,500, closing should be how much? 57,500. No, closing let's say is 60,000. What does it mean? How did it become more? Further 2,500, maybe there might be purchase, or there might be more than 2,500 as purchase because there is consumption or depreciation also. That you get to know when you see ledger, not when you see plus minus. Got it? Yes. So we'll close the ledger later. For now, what did I do? I wrote 5,500 here. I wrote the same 5,500 in my balance sheet also as I said. And I've kept that open for changes. There might be 10 more transactions. I can write it in the ledger very easily. Sale at profit, purchase is there, credit purchase is there, revaluation is there. All of that can be accommodated. Amele, subscription in arrears is 5,200. What do you mean by subscription in arrears? You have earned that subscription income, but you have not received it. How much is that? 5,200. So in my balance sheet, shall I write here subscription in arrears 5,200? And in my subscription ledger, what do I do? Subscription ledger. This is closing balance, and it is in arrears. Income, asset closing balance, credit side. Asset closing balance, credit side. Liability closing balance, debit side. Correct? Very nice. What's after this 5,200? Furniture 11,180. Furniture ledger bunny. Opening 12,480. Closing 11,180. Now obviously there is difference. That will be depreciation or sale. Depreciation or, we'll find it later. For now write 11,180 in your balance sheet. In the balance sheet I'll write furniture 11,180. Easy. What's after that? Furniture. Liabilities. Outstanding electricity charges is 3,800. How much is outstanding electricity charges? So that becomes my liability. And that is the extent to which payment is not done. Is the extent to which payment is. Come to electricity charges ledger. We have electricity charges ledger here. Opening balance is there on the credit side. That is opening outstanding. Closing outstanding, I'll write here. To closing outstanding of electricity charges. How much is that? 3,800. 3,000. Understood? Tell ya. After that, subscription received in advance is how much? 4,850. 4,850 rupees worth of subscription. We received it even before we earn it. Am I right? That will become my liability. In the balance sheet, I would write down the liability side here. Subscription received in advance 4,850. This is liability closing balance. You tell me liability opening balance which side? Credit side. Liability closing balance which side? Debit side. I would write here to balance carried down 4850. None of the items I wrote it at once. I wrote it in intervals and everything is written. Balancing figure is income and expenditure. You don't have to worry about plus minus. Not finding it comfortable still. Yeah, but you are used to do plus minus. Huh? No, no. Plus minus model. One told plus minus plus minus. Plus minus. Second PUC people do plus minus regular. No. Huh? Second PUC will skip. Nice. Before your batch, I used to hear people saying, sir, COVID, sir, COVID, sir, COVID, sir, COVID. You're like, skip, sir, skip, sir, skip. In PU, you skip doing the ledger. Ledger chapter. You did not have NPO in second PUC. Hey, because of COVID. Now NPO is not there in second PUC. Entire second PUC partnership. Jivandal company ಮಾಡಬೇಕು ಏನಿಲ್ಲ. Company you have. Cash flow idya. Easy. Nice. Ratios you learn in FM in CA Inter. Then like okay, you can skip so many topics and still score good marks in second PUC. My goodness. One chapter skip ಮಾಡಿದ್ರೆ ಒಂದು 10ನೇ ಮಾರ್ಕ್ ಎಗರೋ ಹೋಗ್ಬೇಕು ಎಕ್ಸಾಮ್ ಅಲ್ಲಿ ಹಂಗೆ ಇಡಬೇಕು ಸೆಕೆಂಡ್ PUC. You should be like that. No, people won't get the feeler of skipping the topics only. See, you should have option to choose. You should skip and you should also lose marks. So yeah, what is happening is after a certain point later, no, everyone scores 90s. And I'll tell you the problem. If the paper was tough, lot of them who scored 90s would be scoring 60 and 70. And lot of them who scored 90 would still continue to score 90. Those people will feel bad. Get what I'm trying to tell? Some of you are scoring 90 because that's the max that you can score. Some of them are scoring 90 because they're letting you score 90. Are you getting what I'm trying to tell? Take the notch of the difficulty slightly higher. So then only cream crowd will score 90. Now, so many people scored 100. No, not everyone who scored 100 deserves to score 100. You get it? You're keeping a bigger pack together at 100. So we've seen people who scored 100 in second PUC but failed at CA foundation. That should not happen. It should be like if you scored 90s and 100s in 90 plus in second PUC, you should be able to pass CA foundation like this. So they're making that so easy that this is starting to look very difficult. But it should not, that's not how it should be. Can't help. That has to be a different policy by the government. Let's not comment about it. Yes. Okay, did you guys understand this? Because the policy making of the government is ಬಡವರು ಮಕ್ಕಳು ಪಾಸ್ ಆಗಬಾರ್ದಾ? Like ಪಾಸ್ ಆಗಬೇಕಂದ್ರೆ ಓದ್ಬಿಟ್ಟು ಯಾರು ಬೇಕಾದ್ರೂ ಪಾಸ್ ಆಗಲಿ, ಬಡವರು ಆಗಲಿ ಪಾಸ್ ಆಗಲಿ, ಸಾವುಕಾರ ಆದ್ರೂ ಪಾಸ್ ಆಗಕ್ಕೆ ಓದ್ಬೇಕಲ್ವಾ? How to make people pass the exam? How can you make the exam 2 times a year? How can you decrease the difficulty of the examination? They're going to bring a policy in the Karnataka State Board for PU. You know what? It's called betterment. Already there, already brought up. They bring in something called betterment. We're talking about supplementary. So you write the exam. If you're not happy about it, you can write once again. Life doesn't give second chance, third chance. Learn them right now. Teach them right now. Teach them right now. They're making people like fail agbardu students don't have to. If the student should not fail, you should teach better. You should not make the exam easy. It is like shh, it is like this, okay? I want all of you to score well. So ಏನ್ ಮಾಡ್ತೀನಿ ಕ್ವಶನ್ ಪೇಪರ್ ಈಸಿ ಕೊಡ್ತೀನಿ ನಾನು ಕ್ಲಾಸ್ ಟೆಸ್ಟ್. Are you getting? So I want to sell my diabetes tablets. I'm not making people healthy. So what do? I'll bring that, let's say, sugar level for calling someone diabetic down, so that more people will be diabetic patients. That is what has happened in the country. You see, no, in the last decade, people who are suffering from diabetes has gone up in India. You know why? To promote sale of medicines. Very simple. This was a level of sugar beyond which people were supposed to be called diabetic. So now that level only they got down. So these many people who are not diabetic under the previous analysis are now actually diabetic. So they also will start taking this sugar-free tablets, and then yeah, nice, no busyness. Okay, subscription in advance 4850 written here, and also did we write in the balance sheet 4850? After that, 50% of the entrance fees should be capitalized. Very easy. Yeah. Come to income and expenditure. I've written 26,000, right? Less 50% to be capitalized. And one more thing that you should know is whether you capitalize or you don't capitalize, ultimately it's same. You know how? If you don't capitalize, entire 26,000 will become income. Here surplus will increase. That surplus will get added to capital fund. If you transfer to capitalization, you know what will happen? 13,000 you transfer from here. Only 13 you write here. This 13 what is deducted? You write it to capital fund, add here. If you don't add also, it will become surplus and then it will go to balance sheet capital fund. If you treat it here, it will separately go to balance sheet capital. One straight away you do. One you take it, you add it to surplus and then you send surplus there. Do you get the difference? Very good. 50% I have deducted from entrance fee income. That same 50% of the amount I have added it to my capital fund here. Okay. Because they've asked me to capitalize 50% of it. Then interest on investments is being received in full and investments have been made on 1/4/2022. So there is no accrued interest. Whatever interest received, no, only income and expenditure, this is the correct value. This is full year interest. Now that will actually help us identify the value of investment. How? What is the rate of interest? 7% only 4,550 andre. Do 4,550 divided by 7%. That is the value of investment that you bought. Understood? On that 65,000, if you apply 7%, you get 4,550 as income. So that is your asset. When did you buy it? It was bought on 1st of April 2022. We're doing balance sheet for 23-24, meaning that investment was there at the beginning of the year as well as it was there at the end of the year. How did we find the value? 4,550 is the interest at 7%. So do 4,550 divided by 7%, you will get 60. You do 4,550 divided by 7%, you will get 65,000. Understood? Okay. Is it difficult? Do 65,000 into 7%. Alva. So for 12 months, interest is 4,550, rate is 7%. How much is principal? P into T into R. I, interest 4,550 is equal to P, question mark, T, 12 by 12, which is 1, rate 7%. To send that 7% below interest, interest by rate of interest is equal to principal. Am I right? Interest by rate of interest is equal to, how much do we get? 65,000. Easy? Very good. Come on, yeah. What's after that? Hey, that's it. Everything's over. Now you close working notes first. You close working notes first. Each of the ledgers. See, opening balances are there, closing balances are there, receipts and payment is there. Find income and expenditure. 34,450 minus this, you get 22,000. In subscription account, you written two income and expenditure. In income and expenditure account, you should write by subscription. 22,000. Done. What is after that subscription account? Come to sports equipment. 59,500 minus 5,500. 9,000 will become income and expenditure. In sports equipment, I have written by income and expenditure. In income and expenditure, I should write to sports equipment. Mail out to them. 2 sports equipment consumed 9,000. All to the previous question. Subscription account over, sports equipment over, furniture. Opening 12,480, closing 11,180. Difference is depreciation. 1,300 is depreciation, income and expenditure. In furniture, I have written by income and expenditure. In income and expenditure, I will write to furniture. Sir, why don't we assume it to be sale? If you assume sale, you should assume depreciation also till the date of sale, and you should assume profit or loss also on sale. No information. So it is only depreciation. It is not sale. Okay. After furniture over electricity charges. There is opening, there is closing, there is receipts and payment. Difference will be income and expenditure. What will be difference? How much is it? 14,000. Shall we write 14,000? Where do we write 14,000? In our income and expenditure on the debit side. To electricity charges 14,000. Am I right? What is after that? Yay, everything's over. Ledgers are closed. Identify excess of income over expense or expense over income. Which is more, which is less? Expense is more. Okay. There is like deficit. ಎಷ್ಟು ಸ್ವಾಮಿ ಡೆಪಿಸಿಟ್? 64,100 minus 22,000 minus 13,000 minus 4,550 and minus 22,000. 2,550 will be deducted from capital fund. But I don't know my capital fund. How do we get to know my capital fund? Very simple. Do opening balance sheet. Check here. What do we get? 32 plus 7,600 plus 12,480 plus 65,000 plus 8,400. 1,25,530. From that deduct 5,400 and 6,250. 1,13,880. Yes, this I will write it in the closing balance sheet. Take the total now to find capital fund. 1,13,880 plus 13,000 minus 2,550. 1,24,330. Add these two. 3,800 and 4,850. This side 1,32,980. Got it? So this is a small one, about 12 mark, 14 marks type. But there can be a very big question of 20 marks where you have to do receipts and payment, income and expenditure, opening balance sheet and closing balance sheet. They've given none of it. They've only given the list of data. And here and there they can give you couple of small adjustment on rectification or bank reconciliation. They'll give bank passbook balance. They'll ask you to identify cash book balance and then take some checks uncleared adjustment and all they can give. Yeah, slightly be careful. Okay, please do those also by practice. Okay, now everyone. Yes, sir. Very good. Point to remember, in NPO we do fund based accounting. What accounting? Very good. That means the entire money will go to capital fund. Capital fund cannot be withdrawn. Capital fund cannot be, whereas a normal capital can be withdrawn. Drawings is possible with regard to capital. With regard to capital fund, there is no drawings. And normal accrual system, pre-received outstanding basis also done in NPO. Now on this basis, can we start with what is a partnership, or do you want me to do another question on NPO? This one we did income and expenditure. If you would want, I would do one wherein you would have to do receipts and payment. Vedva? Partnership? Yes or no? Okay. I'll tell you one point to remember. Just the day before the examination or that 1 week before the exam, whenever you are doing questions, do 4 varieties of questions from NPO. How many varieties? 1, where you have to prepare receipts and payment. They have given income and expenditure. 2, where you have to prepare income and expenditure where the receipts and payment is given. And 1, where opening and closing balance sheet both are given. You have to prepare both receipts and payment and income and expenditure. You get it? And do one question only on subscription account, which has all possible adjustments. Opening, pre-received, closing, accrued, opening, accrued. They tell these many members are there, this much per person. On subscription based question. One question on subscription based. So do 4 of these questions and you will be examined. Are you getting it? Hell yeah. Very good. And for all these big topics, NPO, partnership admission, partnership retirement, partnership death, the final accounts. So for each of it, one master question you should solve. Just the last day, just so that you get that feeler and then confidence before you go to them. I think there's one playlist that I've shared all master questions on. Have it. So that is one thing that you can keep in mind too. Depreciation with provision, with disposal, like that one we did yesterday. Rectification with reconciliation in stock. One BRS question with lot of adjustment. So keep one of that type as a warm up. As a warm up. And if you're feeling underconfident, no, don't do master question. At some point of time, if you're feeling less, you're not prepared, you're not good enough for the exam, you're getting second thoughts about giving the exam. Question, too easy. Then you would have to do something to push you till examination on. You should not scare yourself that you will not go to exam. Will you please do that? Very good, yeah. So then let's go to partnership. That case, shall we start with partnership? Okay, partnership. I have a thought of solving September 24 exam question also. September 24 exam only one beautiful question was there. This question is on retirement with workman compensation fund. I'm planning to do that. If you guys are okay, we can do that 4A also in the class. If not, we'll only do the current RTP question. Before that, shall we quickly understand little bit of partnership, few things around the topic of partnership? Very good. So the plan is to do this 4A also in the class. You guys are okay. 4A, last attempt. Was this on retirement or admission? This is on retirement. Retirement of a partner. No, admission of a partner. Admission, huh? X, Y, and Z were there. I think it is retirement. Yeah, it is retirement. One partner will leave. Yeah, the only new thing that was there in that September attempt was workman compensation fund, WCF. How to treat that WCF as fund, how to treat WCF as reserve, WCF liability, and WCF reserve adjustment. Admission question also had that workman compensation fund. Okay, done. Shall we see the overview of the topic of partnership now quickly? Introduction to partnership types. So let's skip the initial theory part slightly. Let's go forward into the topic very soon. Starting with P&L appropriation account. In the case of partners capital accounts and in the case of partnership accounts, remember you pay partners some salary, you pay partners interest on capital, you collect interest on drawings from partner. All of these are appropriation items. All of these are not P&L items. All of these are appropriation items. All of these are not P&L items. Why? Because partners represent partnership firm. So what salary as a firm you pay to the partner is almost like what you pay them after identifying the profit, not before identifying the profit. So first you prepare trading account normally, you prepare P&L account normally, you identify net profit. After you identify net profit, you should prepare P&L appropriation account. Appropriation account talks about how are you going to utilize the profit earned by the firm. How are you going to utilize the profits? In P&L appropriation account, you bring down the net profit. That net profit will be given to partners, not as share of profit. Their interest on capital, their share of salary, and all of that is done. Then what is left will be given to them as share. And to make any of these appropriations, interest on drawing, remuneration, interest on capital, all of this has to be mentioned in partnership deed. It has to be mentioned in partnership. If the partnership deed is quite silent or partnership deed doesn't tell anything, then you cannot charge any interest on capital. You cannot give them salary. You cannot charge them interest on drawings. And the profit should be shared equally. If the firm partners wants to share profits in a specific ratio, 2:1, 1:2, one partner wants to have higher responsibilities, other partners want to have different responsibilities, all of that should be mentioned in the partnership deed. Nothing is mentioned in the deed, then all the partners will share profits equally. No interest on capital, no interest on drawings, no salary. And then if the loan is given by the partner to the firm, it will fetch interest at 6%. We'll read this in law also, no? Section 13 of Partnership Act 1932, that will apply. And what you see here, no, debit side is all the amounts paid to partners. What you see here is the amounts recovered from partners. So remuneration you pay to partners, interest on capital you pay to partners, interest on drawings you collect from partners, share of profit is shared to partners. You understand this? Hell yeah. And after you do all of this, you prepare capital accounts of partners. You prepare capital accounts of partners. The capital accounts what you prepare for partners can be prepared under two systems. One, fixed capital system. Two, fluctuating capital system. One, fixed capital system. Two, under fixed capital system, what you do is the capital of the firm will remain fixed. Capital for per partner should be as per deed and it remains fixed. Should not change. So what do? You open one current account. You open one this share of profit, revaluation profit or loss, interest on capital, interest on drawing, salary. All of this will retain in current account. That should not change the capital all the time. Whereas if you maintain fluctuating capital system, everything you put into that capital account. Interest on drawings, interest on capital, drawings, so salary, revaluation profit or revaluation loss, asset taken over, everything you will adjust, goodwill adjustment, everything through that account. The problem with that is the moment you start dumping it all to one account, that account's balance will keep fluctuating. You want to find interest on capital. Tell me, do you find interest on capital on the opening balance of the capital or closing balance of the capital? Opening balance ಅಂದ್ರೆ ಏನು ಮಾಡ್ತೀನಿ ಗೊತ್ತಾ? First day of the year, I will keep capital of 10 lakh. 2nd of April, I will withdraw 9 lakhs. Capital will be 1 lakh entire year. I will get interest on 10 lakhs. 10 lakh ಮೇಲೆ 10% interest ಅಂದ್ರೆ 1 lakh. Entire year my capital was 1 lakh. Only one day it was 10 lakh. You will say closing date. Then I will deposit the money only on the closing date. Remaining rest of the days I would make drawings. Is that right? No, it should be computed on daily average balance. It should be computed on daily every day's balance. Is there no into 1 by 365 into interest rate we should do? Too complex. So what does the firm do? Firm will maintain simple fixed capital. So that capital as per partnership deed is there no mine 10 lakh, your 10 lakh, he 10 lakh, she 10 lakh. That will be the capital. Whatever changes you want to do, you do it in current account. Capital will be fixed. Capital doesn't change. Capital remains fixed as per partnership. Did you get this? A firm can choose to do so, but they are not obligated to do so. So how many capital systems are there? Two. Number one. Number two, fixed and fluctuating. You understood fixed? In fixed, what will happen? Opening balance, closing balance. Here, any additional capital only as per partnership deed. If there is change, you bring. Otherwise, no. Ella items ಇದೆ ಅಲ್ವಾ ಬೇರೆ ಎಲ್ಲ drawings, so interest on drawings, so share of loss, so additional capital, remuneration given, interest on capital, interest on advance, everything will come in current account. Now let's say 1, 2, 3 are in a partnership form. Let's say you both are in partnership form. When you both are in partnership form, the profit sharing ratio is 3:2. Capital should be in PSR. So you have contributed 3 lakh, she has contributed 2 lakh. So let's say I am joining the partnership firm, and when I come in, the profit sharing ratio will become 3:2, let's say 1:1:1 ಆಗುತ್ತೆ. Profit sharing ratio will become 1:1:1, and all of us should maintain capital of 2 lakh. If you had 3 lakh capital, she has 2 lakh capital, I will bring in 2 lakh. My capital will become 2 lakh. Our capital is already there 2 lakh. You have 3 lakh, no. That 1 lakh what you withdraw, it is not revenue drawings, it is capital drawings. It is not like you draw the money and again you pay it back. It is withdrawn permanently because partnership deed wants us to maintain the profits capitals in 2:2:1. That drawing will come in our fixed capital account. You withdraw 1,000 every month, you withdraw 10,000 rupees for some personal expense. That will come in current account. You understand? Drawings can also be revenue drawings, permanent drawings. Revenue drawings will come in current account. Permanent drawings will come in capital account. You getting the difference? Did I answer your question? Anybody else has any other question? Felt nice, yeah. Somehow someone asked a question. Not avaglinda naan nanige pata ಮಾಡ್ಕೊಳ್ತಾ ಇದ್ದೀನಿ ಅನ್ನಿಸ್ತಾ. Okay, so this remuneration, whatever is supposed to be given, can be given as a percentage of profit. If they use the word after charging basis, we should do x by 100 plus x. If they say before charging basis, we do x by 100. You know this? Stress or you're clear? Okay, this can come in your sole proprietorship accounting also. Then manager's commission. Okay, I have one nice and tricky simple question. Let's see how many of you will solve this right. Can I give one question for you to solve? Couple of small questions, shall we do? Couple of them? Hell yeah. Okay, one is on minimum guarantee because this is repetitively asked. But this part you understood, no? Remuneration. Okay, remuneration. Remuneration, I'll give you a different question to solve. Don't worry. Right now, will you solve? Take the question. Start rating. Right. A firm has two partners, A and B. A firm has two partners, A and B. A firm has two partners, A and B, entitled to remuneration, entitled to remuneration at at uh, after charging remuneration you wrote, no, full stop, right? Partner A, partner A, partner A. How much is partner A's eligibility? Shall I write partner C A's eligibility for what do you say, remuneration? I'll type it only. Care about your an organization as two partners. Two partners. Partner A is entitled to remuneration at 10% of profit after paying partner B's remuneration. Okay, partner A is entitled to remuneration at how much? 10% of the profit after paying B's remuneration. Then partner B is entitled to remuneration at 15% of profit after paying partner A's remuneration. ಯಾಕೆ ಸರ್ ಹಾಗೆ ಮಜಾ ಬರುತ್ತಲ್ಲ. Yeah, profit before paying such remuneration is rupees 1 lakh. Compute remuneration payable to partners. You get the question? A firm has how many partners? Two partners. Partner A is entitled to remuneration of 10% after paying partner B's remuneration. Partner B is entitled to remuneration of 15% after paying partner A's remuneration. Profits for the year is rupees 1 lakh. Compute remuneration payable to partners. Partner A is asked to take remuneration. He'll say, hey, partner B, pehle aap. Partner B will say, che, pehle aap. So bad these days. I sing some song and after that, if I open YouTube or if I open Savan Music, I get same song suggestion. So I do that. I use that mic to the core. Now let's say, yeah, I'll tell you how do I use it. Now let's say I want to apply some say false lights in my dining space. I want some dining space lighting idea. So what did I don't go to search? I'll say dining space lighting ideas, dining space lighting ideas. It will start showing ads. It will become easy, no? Making life simple. So it will start showing ads of only that. Done. The problem is the nose is blocked, so I'm breathing from mouth. If I constantly keep talking, so I'm finding it difficult to breathe. So I go breathless and I'm also feeling tired. And somewhere if I move this head, this starts hurting. I don't have headache. So pre-breakthrough, I felt like I might faint, but I won't. I was feeling very dizzy. Sorry, yeah, but I think we still did that problem right. Yeah, like someone's drunk and still doing the work great times. You drunk and then you still drive the car safe home, no? Each one ಎಲ್ಲರೂ safe reach ಆಗಿದ್ದೀರಾ? Yes, but car ನಮ್ದಲ್ಲ. Oh, ಯಾರ್ದೋ ಕಾರ್ದು. We went in bus and I came back in car. Unstoppable ಆಡ್ಬೇಕು. This video will go to YouTube, then YouTube will have problem. They'll say original copyright issue. Copyright issue ಆಗುತ್ತೆ. And in between. And three people even solve. They wrote the question and they're quite waiting for me to solve. Who will get the A? That is solvable. Okay, shall I solve? Anyone who got the answer? Got it? What's your answer? Oh, I think he's right. Asha. Very nice. Anybody else answer? I think that's the correct answer. Very simple. Yeah. Let's say we are trying to find the remuneration of partner A. So let's write here partner A's remuneration. Shall I solve? Yeah. How do we find partner A's remuneration? Partner A's remuneration is net profit of rupees 1 lakh. On that, how much percentage? 10%. 10% of rupees 1 lakh. From this 1 lakh, first whose remuneration should we give? Partner B's remuneration. After deducting partner B's remuneration, whatever is there, on that you will get remuneration. Am I right? Partner A's remuneration. Right? A's remuneration is equal to 10% of rupees 1 lakh minus, what do you deduct? You will deduct B's remuneration. Am I right? Easy. And partner B's remuneration. How much is partner B's remuneration? 15% of 1 lakh minus A's remuneration. Did you get this? Clear? Everyone's clear? Now substitute one equation in the other. Yeah, substituting 2 in 1. 2 in 1 now. Okay, this is there, no? This I'll call it equation number 2. And this I'll call it equation number 1. Shall I substitute this second equation in first equation? How does it look if I substitute? It would look like this. A's remuneration is 10% of 1 lakh minus B. I won't write B's remuneration. I would write that is 15% of 1 lakh minus A's remuneration. Can you people not talk? Please, I gave you time to solve. I gave you time to think also. Now it's my time. No one talks in my time. In my time only I talk. Okay, now tell me what do we get? 10% of adhage. We'll only open the inner bracket. Shall we open only the inner bracket? Can I say this I'll eliminate? 15% of 1 lakh will become 15,000. Correct, Henry? Minus this will be, can I say 0.15? A's remuneration, can I call it A? Hell yeah. This okay with everyone? Here also should I write A? Hell yeah. So A's remuneration is 10% of 1 lakh minus 15,000 into 0.15 A. Now I can open that flower bracket. Shall I open that flower bracket? I'll write minus 15,000. This will be minus of minus, so this will turn into plus. Too high-fi? Sir, we didn't want to do all this in life, so we took commerce, and now you are making us do all of this. I have another method for that, how to do it without simultaneous linearity. But warming you people up for tomorrow's quant class. There do you solve or you don't do simultaneous delineation? Madadela yellow. You just take the options and then directly shortcut, or you solve at some point. Some point at least. Okay, done, done, done. Because ma'am has too many shortcuts. No, ma'am will teach you how to solve the answer without solving the answer. Yeah, correct. Solve the answer without solving the answer. PD. So please cooperate. I'll solve it this way. Can I? Now 1 lakh minus 15,000 is how much? 85,000 plus 0.15 A. Correct? Elri. 10% of 85,000. Can I make it 8,500? Can I make it 8,500? 10% of 0.15 is 0.015. Do 0.15 into 10%. Do 0.15 into 10%. Let 0.015. One more zero will be pushed that side. You guys are acting so surprised. Looks like my math skills are better than yours. Sad. So I would write A minus 0.015 A is equal to 8,500. Is this right? 1 minus 0.15 is how much? 0.985 is equal to 8,500. And then I'll write A is equal to 8,500 divided by 0.985 A. Is this right? A is equal to how much? 8,630. Have I got the same answer? Confident agi ಮಾಡಬೇಕು. So now when we know A's remuneration, very simple. Substitute A's remuneration in equation number 2. Correct or not? Substitute A in B. Find B. Yeah. What is B's remuneration? 15%. Correct? Of 1 lakh after deducting A's remuneration. A's remuneration we know now. 8,630. So 1 lakh minus 8,630 into 15%. 1 lakh minus 8,630 is how much? 91,000. 91,370 into 15%. 13,700 and that is the answer. Are you getting it? Let's check mathematically if this is correct. Take 1 lakh of profit. Take 1 lakh of profit. Deduct A's remuneration of 8,630. After deducting that, if you apply 15%, you should get 13,705. Do you get it? Ulta madi. Take 1 lakh, deduct 13,705 and apply 10%. You get 8,630. Is it working both ways? So this is one way of finding it. One way of. There is another way. Do you want to know? Other way is like ding 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 method. Or ding 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 ding. I'll tell you, wait. Partner A, partner B. No. For now, what I would do is so 1 lakh is there, no? Partner A is how much? 10%. Hell yeah. Partner B is 15% after. This is quite funny, but works, and you get the answer quick. Will you help me with this? I want you to pay attention. If you pay attention, you'll understand in one go. Take the net profit of 1 lakh, apply 10%. You got 10,000. So I will say partner A's salary is 10,000. For time being, let us assume partner A's salary of 10,000 is correct. Partner A's salary of 10,000 is, partner B will get how much? 1 lakh minus 10,000, 90,000 into 15%. 13,000. Okay. Now if partner B's salary is 13,500, partner A's salary of 10,000 is wrong. Why? Partner A's salary should be 1 lakh minus 13,500 into 15% into 10%. No, to 1 lakh minus 13,500 into 10%. 86, 8,650. So actually 10,000 is wrong. It is actually 8,650. But 13,500 is correct if it is 10. If this becomes 8,650, this will be different. 1 lakh minus 8,650 into 15%. 13,700, and this 8,650 is correct if it is 13,500. Because this is 13,702, this will change. 1 lakh minus 13,702 into 10%. 600. See, 13,702 is correct if this is 8,650. Because it is 8,630, this will change. 1 lakh minus 8,630 into 15%. 7 not. Okay, 8,630 is correct if it is 13,702. If this becomes 13,705, how much is this? 1 lakh minus 13,705 into 10%. 8,629. Now you do it, you will get 13,704. 1 lakh minus 8,629 into 15%. Anta 13,704. Again find partner A. 5 ಬರ್ತಾ ಇದೆಯಾ? Okay. Now again you do it, you will get 8,629. Again you do it, you will get 13,705. It same thing keeps coming. So when it starts repeating, that's the correct answer. That is simultaneous linear equation. This is weird, but gives the answer. Gives the answer. MCQ question CPT ಕೇಳಬೇಕಾದ್ರೆ ಹಿಂಗೆ ಹೇಳ್ಕೊಡ್ತಾ ಇದೆ. Logic also it works. So assume one of it is 0. Like you take one wrong answer and then correct that answer till the time it becomes correct. Huh? But did you understand the answer? Hell yeah. Very good. So this one kind of nice one that you should know when it comes to partners remuneration. We can do similar one in what do you say, the topic of the final accounts of sole proprietorship also they can ask. There they'll ask it as general manager, sales manager anta. Exam question also was asked once in the exam. CPT several times it was asked actually. Next, yeah, interest on capital will be computed only on capital balance. Interest on capital will be computed only on no current account interest. No interest on current account. Interest on drawings. Please listen. Interest on drawings is a very interesting discussion. Whenever interest on drawings is to be made, if the drawings is made only once, from the date of drawing till the end you do computation of interest. If the drawings are made consecutively and same amount, for example 10,000 is withdrawn every month at the end, so first 10,000 drawing you should do 12 months interest for 11 months, second 10,000 drawing 10 months, third 10,000 9 months, 8 months, 7 months, 6 months, do 12 times. No, so there's a shortcut. There's a shortcut. You can do it for the average period. You can compute interest for the, aware of this, should have done definitely in second PUC without fail, learnt in foundation also. So how do we find the average period? Take the maximum period, take the minimum period, divided by 2. So when you make the drawings at the beginning of every month, first drawing is made at the beginning of April, drawings is for 12 months. Last drawing is made at the beginning of March for 1 month. So 12 months plus 1 month by 2, average 6.5. When you do drawings at the middle of every month, first drawing is made in the middle of April for 11.5 months. Last drawing is made in the middle of March for 0.5 months. 11.5 plus 0.5 divided by 2, it becomes 6. So remember, this is how we do it. Are you getting it? But when you compute it for average period, interest should be on total drawings. Interest should be on let's say you are withdrawing 10,000 rupees every month. This average period should be applied on total drawings of 1,20,000. Should apply it on total drawings of Pakka? Hell yeah. Very nice. Should I teach you the logic and make you do problem on each of the cases? Regular batch, we would do it. About 50 hours will take for partnership. Here we're spending less than 2 hours on partnership. So we'd have to run quickly. And if the amounts are not same, apply product method. Apply product method. Don't apply. Let's say first 1 month 10,000, next month 9 months 9,000, next one 12,000. Can't apply the shortcut average period method. Average period method can be applied only when the amount is same and drawings is successive, meaning beginning of every month, end of every month, middle of every month, beginning of every quarter, middle of every quarter, end of every quarter, something like that. If they tell the drawings is made but they don't tell you the date of drawing, do it for 6 months. Why? It could have been in the first day of the year, it could have been on the last day of the year. Average period is 6 months, so it will be done for average period of 6 months. Did you understand? When do we take average? When the date of drawings is not given in the question. Okay? Hell yeah. Very good. So you don't have to do the, do you want me to make you do this question? No? Time pass? Okay. One more point that you must do is with regard to special clause in the partnership deed. Clause, sir? Yeah, clause. C-L-A-U-S-E, clause. So special clause is about guarantee. Is it? Minimum guarantee. Sometimes you admit a partner into the firm and then you give them minimum guarantee. You're telling whether I make profit or I make loss. Whether I make this much profit or I'll make this much profit. I'll give you minimum this much money. Okay. Shall we do a question on this? Because there is a usual tendency of people doing something slightly wrong in this case. So I would want you to be not doing it wrong. I'm slightly concerned. I just want to check whether you are comfortable with this. Will you do one question on this, please? Only a small cutie question. So this is the question which has 5 cases. If you want, you can click the picture of the question and let's start with the answer. Or you really want, you can copy it. Should I give you copy time or is it okay if you just click picture? Click picture, click. Huh? Can I start solving the answer now? Flash. Okay, done. Everyone, people watching it live, you can pause and then take a screenshot. For them, life is very easy. Huh? Like whenever they see that time, it's gone. Think that you are watching live. Also post a comment in the comment section. Expect me to reply very late. Laughing. Like you get some comments. So first comment. Give me a like for those of you who are watching in 2025. It is tomorrow is my exam. I'm watching one day before that. Actually, nice. Those comments when you read later, you feel like a lot of times you see that comment like, yeah, even I'm watching it right now. That's some old video that was posted 10 years ago. And then you go, like, give me a like whoever is watching this in 2025. Like, oh yeah, me bro. Oh my god, so relatable. Anyone? Anyone here in 2024? Yeah, how many of you watched this video till 10th minute and then again came to comment section? That also they would know. For those who did not understand and come to comment section, click on this for meaning. They'll click on this and there will be nothing there. See more. Yeah. Yeah. Comment sodulu bandavರಿಗೆ ಊಟದ ವಸತಿ ಊಟದ arrangement ಮಾಡಲಾಗಿದೆ. Do not see now. Yes. Okay, done. Shall we solve this? Hell yeah. Okay, to begin with, Virat, AB and Nax are partners in a partnership firm. They're sharing profits equally. However, Nax is a guaranteed partner. He's been given minimum guarantee. How much is the minimum guarantee? 1 lakh rupees. How much is the minimum guarantee? Compute share of profits to partners in each of the following cases. So profit is 3 lakh. Virat and AB both are guaranteeing partners. Observe case 1. There is profit of 3 lakhs. No. First share profits to all of them equally. 1 lakh, 1 lakh, 1 lakh. Am I right? Now, Nax is getting how much profit share? 1 lakh. What is his minimum guarantee? 1 lakh. Is he getting what he's supposed to get? Yeah, so there is no problem. Virat and AB also will get 1 lakh. Easy? Yes. Now observe. Came to second question. How much is the profit that they've done? 4 lakh 50. Now, how much will be their share of profit? 1 lakh 50, 1 lakh 50, 1 lakh 50. What is the minimum guaranteed amount to Nax? Is he getting minimum guaranteed 1 lakh? So he will continue to get 1 lakh or 1 lakh 50? That 1 lakh is minimum guarantee, not maximum money. That's not upper threshold. That is minimum. So he continues to draw 1 lakh 50 and others also get 1 lakh. So this is the reason you should not first deduct the share of the guaranteed partner and then share it to others. Some of them, what you do is to take, okay, my Nax is promised 1 lakh. So profit is how much? 4 lakh 50. From 4 lakh 50, first you give 1 lakh to Nax. Remaining 3 lakh 50, you share it between Virat and AB. No, give it to all of them in PSR. Check with minimum guaranteed amount. Are you getting it? Then come to case 3. What is happening in case 3? How much is profit? 1 lakh 80. Now don't do first 1 lakh to Nax and then share the balance between partners. Don't do that. Silence. Don't do that. Always first give profits in the ratio 60-60. Nax is supposed to get 1 lakh. Is his share of profit sufficient? No. How much should he get extra? Very good. Profit before is 60. 60. He should additionally get 40. That 40 should be contributed by Virat and AB because he is getting 60 or 1 lakh, whichever is higher. Are you getting it? That 40 will be given by Virat and AB in what ratio? Profit sharing ratio. 40 into 1 by 2, 40 into 1 by 2. Minus 20 plus 40. So Virat will get 40, AB will get 40 and Nax will get 1. Sir, instead I can do 1 lakh 18 first to give 1 lakh to Nax. Balance 80,000 I can share it between Virat and AB as 40 and 40. That will not work in all the cases. That will not work in all the. I'll tell. Listen to me. Here Virat and AB are sharing it equally. No. Sometimes Virat and AB will not share the guarantee amount equally. They will share it in a different ratio. Sometimes only one person will bear. Then this shortcut of yours will not work. So always do it like this. Always do it like this. Don't have 2-3 methods to solve the same problem. Always have one method. It solves all the possible situations. It solves all the possible situations. Simplicity at its best. Okay. Done. Case 4. How much is the profit? 1 lakh 80. Share it to them 60. Correct? How much is minimum guarantee to Nax? 1 lakh. You should get whichever is higher. So he is getting 60. You should get additionally 40. Who's contributing that 40? See here, case 4. What does the question say? Virat and AB both are guaranteeing in the ratio 1:2. So this 40,000 will be shared between Virat and AB in 1:2. 1 by 3, 2 by 3. How much is 1 by 3? 13,333 and 26,667. This guy gets 1 lakh. This guy gets 33,333. And this guy gets 46,667. So here it would have not worked. You giving first to Nax 1 lakh and trying to share the rest between Virat and AB will not work. So always do it in this manner. Do you understand what I am trying to tell? Share it to all of them in the normal PSR. Compare the guaranteed partner with the guaranteed amount. If there is shortage will be compensated by guaranteeing partner in guaranteeing ratio. If guaranteeing ratio is not given, it is old PSR. But there can be a different guaranteeing ratio. Sometimes only one partner will be guaranteeing partner. Are you getting it? See case 5. Case 5, what's happening? You share 60. Here you write 1 lakh. Whichever is higher becomes 1 lakh. But is actually getting 60. What should we do? We should give him another 40. Who's giving it? Only Virat. So we'll deduct it from Virat's 40. And AB will give nothing. AB will have full 60. Nax will get 1 lakh. Virat will get 20. Yeah, not crossing the 20. All the partners other than the guaranteed partner in their profit sharing ratio. In this case, Virat and AB equally will give guarantee. Okay. When they say guaranteed by firm, it is partners other than the guaranteed partner. In what ratio? In PSR. Yes, easy, but you can very easily do wrong mistake. first giving him the money and then deducting. But don't do it. Always share it in PSR, write the guaranteed amount, compare, and then do the rest of the solution. No, all the cases you do like this. Even it's guaranteed by the firm. First share it to all the partners. What if you're getting more than 1 lakh? Because of share of profit. So always share the PSR. PSR only share madi. Compare it with 1 lakh. If that whichever is higher is PSR, no problem. Profit only. If whatever is higher becomes minimum guarantee, extra money should be given. Identify how much extra should be given. That should be contributed by partners other than guaranteed partners. In PSR, if it is guaranteed by firm, that firm guarantee kotre, except this partner, others are bearing it. So in PSR, because the firm is guaranteed, if they tell any specific ratio, take that specific ratio. You all get this? Yeah, very nice, fantastic. So what do we do after this? Then another interesting case. What to do if the profits is insufficient to pay interest on capital? See, first from the net profit, you pay interest on capital. After that, you pay share of profit. Am I right? What is the profit is insufficient? I'll give you a question only. Observe this question for me. A and B are partners sharing profits in the ratio equal. Capital is 2 lakh and 1 lakh. Interest on capital is allowed at 10%. Net profit for the year is 15,000. You tell me, how do you share that 15,000 between A and B? Equal, no? Equal means 7,500, 7,500. Correct, alva. But before you give profit, you should give them interest. Interest 2 lakh mele 10%, 20, 1 lakh mele 10%, 10 together becomes 30. 30 kodake illa. You cannot say net profit is there, I gave 30,000 interest on capital, appropriation ke loss ide. Hey, what is wrong with you people? You can't do that. What do you do in that case? That is where this problem comes. 10,000, 10,000 and 5,000. The logic is whenever the profits are insufficient to pay interest on capital, proportionate interest will be paid. So what do we do is the act says that if the profits are insufficient, then profits will not be shared in PSR, but it will be shared in the capital ratio. It will be shared in the, please read this bit of theory. Interest on, okay, first I'll make you read this statement, then I'll make you understand the logic. Read. If profits are not sufficient to pay interest on capital in full, then what to do? Such insufficient profits should be distributed among partners in what ratio? And not in. That is the one-liner understanding. But why do we do that? Because interest on capital payable is more than net profit payable. Then we don't share profit without paying interest. So we distribute to them is actually not profit. What we are giving them is interest on capital. But we cannot call it interest. Why? Interest rate is given in deed. No, that much we should give. If we give anything lesser than that, that interest percentage, what is mentioned in the deed is not followed. So we won't call it interest. We'll call it profit. But what we're giving is in the nature of interest. Interest is dependent upon capital. So such profit which is less to pay interest on capital will be distributed not in profit sharing ratio. It will be distributed in capital ratio. It will be distributed in, are you getting this? There were case laws on this. Partners started fighting. They went to court. Court gave this judgment. Court gave this judgment. Court told it cannot be called interest. Why? Interest rate 10%. Alva. Interest rate 10% means 30,000 should be given. If you give 15,000 rupees and call it interest, interest is changed to 5%. It becomes ultra wise. No? You can't change the deed. Artha ಆಗ್ತಿದ್ಯಾ? ಹಂಗಂತ ಹೇಳ್ಬಿಟ್ಟು if you call it profit, profit should be shared equally. Are you getting it? So partners started fighting. They say if it is profit, we should get equal. If it is interest, then how can you give interest? So they started fighting. Then the court gave the judgment saying that it is share of profit, but it is in the nature of interest. You cannot call it interest because you are not paying full. You cannot say profit because you are not giving it after interest. So it is told as profit, but it should be shared not in PSR, but it should be shared in capital ratio. Got this? Yeah. Okay, I don't think I should waste time on this question. I hope you are aware of this. Hell yeah. Very good. Then after this, some basic questions on preparation of partners, capital account and P&L appropriation that you've been doing from your PU times. Okay. Next question is you need to learn how to do revaluation, P&L, partners, capital account and balance sheet in each of the cases. Not much of a difference between admission, retirement, and death also, in fact, that way. Couple of points are to be known extra, and goodwill comes in to be something new. So there is a problem on goodwill in your RTP. We'll solve that problem on goodwill from your RTP. We'll also solve one question which is there from partnership here. If you would want, we can do one question from our previous year's examination question paper also. But we need to keep in mind that we need to do dissolution and then start with. Get it? Okay, dissolution I have not touched it. Dissolution will touch separate. Shall we do some questions on goodwill? Shall we? Okay. Before that, discuss smart bit hoga the goodwill again. Shall we discuss little bit on goodwill and then only go there? Okay. In the case of admission of a partner, the logic. Teacher that gives me kind of question. What are you guys trying to indicate to each other? Like break content. Then should not do antana. Or like you know it antana. You don't know it antana. Or like you both are giving each other clue. It's like in hijack, both two hijackers will look at each other and then give signal. 2 minutes. Let's attack. And then like entire plan is discussed. Is there anything that I'm missing? Okay. In the case of admission of a partner, what is happening? The new partner who comes in literally is buying the business. What should be our ideology? What should we understand? The new partner who's coming into the business is literally buying the business. Now, business is owned by two people. He is buying his share from that business. When he's buying, he pays money. That becomes capital. He buys the right in the assets. He buys the right in the liabilities. Now, when I'm buying something, I'll ask, no, how much is this cup? I ask, no, when I'm buying. Get what I'm trying to tell? So, I need to know the value of this. There might be different value in the balance sheet, but they find the value freshly before they sell it to me. That's the reason every time before when someone is buying a share in the firm, when someone is selling a share in the firm, you need to do revalue. What should you do? Because assets will be recorded at historical cost. Let's say the partnership firm was started 15 years ago. 15 years ago, we bought a piece of land in BTM layout for 1 lakh, and that's where our firm is situated. Today, that piece of land in BTM layout which was bought for 1 lakh is now worth 1 crore. Two partners are there. So land is recorded historical cost of 1 lakh. Are you getting it? Today, my God. Today, when I am selling a part of my firm, he will look at the balance sheet and he'll say 1 lakh rupees is the assets in the value of the assets plus cash and current assets 1 lakh 50. I will buy 33.33% of it by paying 55.60. Now, once he becomes the partner, he is also having share in that land. If we sell that land for 1 crore rupees the day after he becomes a partner, you make 99 lakh profit. You should get 33 lakh. I should get 33 lakh. My other partner should get 33. But actually, the day he joined, only the value was already 1 crore. After he joined, it didn't become 1 crore. So what do? We're selling him a part of the business. We should revalue everything. Find today's value of all the assets and liabilities and then sell. You getting it? That is the reason we do revalue. Get it? In the process of revaluation, when you take the value of the assets up, it will become profit. When you take the value of the assets down, it will become loss. See, revaluation is like a temporary nominal account. It is a temporary nominal account. Increase in the value of the asset should be debited to asset, credited to revaluation. Decrease in the value of the asset is credited to asset and debited to revaluation. Liability increase will be credited to liability, debited to revaluation. Decrease in liability will be debited to liability and credited to revaluation. Did you understand this? If I open a Kutti revaluation here, all the profits will appear on the credit, all the losses will appear on the debit. What is profit? Increase in asset or decrease in liability is a profit. Increase in asset or decrease in liability is a profit. Decrease in asset and increase in liability will become loss. I'll find profit or loss, share it to old partners in old profit share. Share it to old partners in old profit share. If there is any unrecorded asset or unrecorded liability adjustment, don't treat it as unrecorded asset. Think it is an asset recorded at 0. Now its value has become 10. Increase by 10. Write it credit. Unrecorded liability 10,000. What is the meaning? There is a liability recorded at 0 whose value is now 10. There is increase in the value of liability by 10. Write it in your revaluation account debit side. Got the idea? But by doing this revaluation, you're doing one blunder. This is what is practically done. Whenever you do revaluation, assets are restated, but assets should not be restated. Assets should be recorded at original cost. So I want to book revaluation profit or loss. I want to sell a part of my business, but I don't want to show the assets in the balance sheet at new figure. Land was there at 1 lakh. Now when you revalue it to 1 crore, you book 99 lakh revaluation profit. In the balance sheet after admission, land will appear at 1 crore, which is actually absolutely incorrect. You should never do it. In theoretically, if you do 10 questions on partnership, 9 questions you do revaluation account, 1 you do memorandum revaluation. But in reality, whenever a partnership firm goes for reconstitution, 100 out of 100 cases, they'll always do memorandum revaluation. What is memorandum revaluation? You want to book the profit, but don't want to restate the value of the assets. So you undo whatever you done in revaluation. I tell it very crisply. Whatever you do in revaluation here is going to impact balance sheet. If you increase the value of the asset here, in the balance sheet, asset will appear at increased value. If you decrease the value of the asset here, in the balance sheet, asset will appear at decreased value. Don't want to do it. So you open an account called memorandum revaluation. What do you open? Memorandum revaluation. Observe here. So whatever is the decrease in the value of the asset that you would have done here, no, you reverse it here by increasing the value of the asset by same value. Whatever is the increase in the value of the asset that you've done here, you reduce it by decreasing it later. So first you prepare your revaluation account like this, and then do everything ulta. Whatever is credit you write debit, whatever is debit you write credit. So then what is the point? The point is whatever is the revaluation profit that will be shared between old partners in old profit sharing ratio will be adjusted in new partners capitals in new profit sharing ratio to adjust and find only to the extent the new partner will make profit, he will bring and give it to old partners. Are you getting it? In short, let's say the value of the land is 1 lakh. Let's go with the same example. Value of the land is 1 lakh, book value, but market value 1 crore. The moment you become partner, and if I sell the land, I'll make 99 lakh profit, 33, 33, 33. Are you getting it? So you will get 33 lakhs after your admission if I sell the land. Do you deserve that 33 lakh? I'll ask you to bring that 33 lakh now. I'll deduct it from your capital, that 33. That 33 lakh, I and my friend will share 16.6. 33 divided by 2. 16.67. 6.67 barala. 16.5 lakh, 16.5 lakh, I and my partner, A and B will share. A and B will share. I've deducted from your capital. So you gave 33 now. 16.5, 16.5, A and B share. After you come in, I didn't change the value. Value is 1 lakh only. After you come in, if we sell, we make 100 lakh profit. He takes 33, you take 33, I take 33. I got 33, but I should have got 50. Correct? No. If we were not there, and if I sell it, not 50. If you are not there, new partner is not admitted, 99 lakh profit will be shared between A and B. In what ratio? 49.5, 49.5 would have got. Yes or no? Now if I sell it after you come, 33, 33, 33, 33.33, 33.33, 33, sorry, 33, 33, 33, no? Without you, I would have got 49.5. Because you came, I got 33. How much did I lose? That much I collected from you on your admission. That is memorandum revaluation. Basically, goodwill. Basically, like how you adjust goodwill. I take it from your capital and we both will share. So much you will get extra later. No. So now only I'll take it from you. Only I'll take it from you. Are you getting what I'm? Very nice. That's memorandum revaluation. Okay. Crisp, yeah. In very quick time I told. Is it okay? Okay, friends. So remember, in memorandum revaluation, it is extension of revaluation. What is memorandum revaluation? It is extension of revaluation. In revaluation account, revaluation profit or loss shared between partners in old profit sharing ratio. In memorandum revaluation account, that profit is reversed by sharing to new partners in new profit sharing ratio. Net difference will be the same thing. And then goodwill is your favorite. Yeah. Tell me, on admission, what will happen to goodwill of the firm? There are two partners. You admit a new partner. New partner brings his share of goodwill. What will happen to the goodwill of the firm? Goodwill will increase. Very good. Nice answer. Goodwill will neither increase nor decrease. Goodwill of the firm will remain same. Understood? Whenever you say new partner will bring his share of goodwill, a new partner is bringing money to buy the goodwill. New partner is bringing money to buy the goodwill will not increase. Goodwill will not decrease. Let us say A and B have worked really hard to build the firm. They both have earned lot of reputation, name, fame, whatever you say for the firm. Tomorrow, if you become partner, you start enjoying it, but it's our sweat on those days. But You will also start enjoying it from today. So what do we do? For the effort that we have put in, which you will enjoy, we will ask you to compensate our sweat. Take that money from you and we both will share. So whatever you bring other than capital, whatever you bring in other than capital to compensate the hard work of the old employees, old partners is goodwill. So that you're doing to buy, you should either put sweat and earn it over 10 years, or you can give cash and then buy our sweat. So whatever you say, no, new partner comes in as a partner C joins the firm and brings in 1 lakh rupees towards goodwill. That 1 lakh rupees what he brings is to compensate the old partners, and the rest of it money what you bring is towards capital. If you give money towards us, that 1 lakh, let's say you brought 5 lakh rupees capital, 1 lakh rupees goodwill. 5 lakh what you bring will appear in your name. 1 lakh what you bring will appear in our name. You get it? If you don't bring, what will we do? You bring 5 lakh. No, in that 5 lakh only will take 1 lakh. Only 4 lakh will give it to your name. 1 lakh me and the other partner. Are you getting this? See, goodwill will not increase in admission of a partner. What will happen to goodwill? Goodwill of the firm is because of efforts of old partner. New partner will enjoy the benefits of the goodwill in the future. So he has to buy goodwill from old partner. Like compensation for hard work of old partners and for their loss of share in the future. Are you getting it? This goodwill is intangible asset, cannot be seen, can only be felt. So there are various valuation techniques you follow to value this. There are multiple methods: super profit method, average method, weighted average, simple average, capitalization method, annuity method, all of these. Are you getting it? So now you tell me, how do we compute goodwill under simple average method? You would have done, no? So this treatment and all doesn't matter. Don't spend too much time and energy on reading all of these journal entries in each of the cases. All of this can be solved with only one single type. No matter whether they say raise goodwill write-off, adjust it through capital account, partly withdrawn, partly brought, whatever they say, will do only one thing. Whatever they say will do only one thing. I'll teach that to you. And I would ask you another question. Before that, are you guys comfortable with hidden goodwill? Shall we just check one question if you are comfortable, or if you have got this right? Just checking your testing your skill set. Yeah, A and B are partners sharing profits and losses equally. Their capital is 30,000 each. C comes in for 1/3 share and brings in 50,000 towards his capital. Help me find how much is goodwill. Hidden goodwill, it is hidden. How much is it? Okay, any other answers? Any other answer? We were so confident when we answered 27. Now we are shaking our confidence. Like that. 60 and then 20, 40, 60, none of the above. Okay, done. Now I'll tell you how to compute. Shall I? C comes in for share in the partnership firm. A and B's capital should not be taken. We cannot say 30 plus 30, 60, 60 minus 50, 10,000, Angala. I'll tell you how to do. C comes in for how much share? 1/3 share. For 1/3 share, how much money did you bring in? 50. So there's like one big cake, just cut into 3 parts. In that, 1 out of 3 belongs to C. For 1 piece out of 3 pieces, he paid 50,000. What is the value of the entire cake? 1,50,000. What is the value of the entire cake? Alva. But what is the value that they're paying? A pays 30, B pays 30, C pays 50. 30 plus 30, 60. 60 plus 50, 1,10,000 is the money paid, but they're calling the value of the cake is 1,50,000. 40,000, what you don't see there, but there is actually there, is goodwill. Ooh. Kalpa Usharo. The problem is, you want to tell the answer, but should answer correctly, not quickly. Should answer. This is not CAT exam. This is not CAT exam. This is CA foundation exam. They will give you full 3 hours. Full 3 hours you can utilize. CAT exam al hagagala. You write CAT and all. No, MCQ, no, cap, I would say competitive examination. They give you one question. If you answer that within 1 minute, they give you a question which is of more difficulty and higher value. First question you answered for 1 mark. If you answer it within 1 minute, next question will be for 2 marks. And if you answer the 2 marks question rate, that next question will be for 4 marks. But if you get that first question for 1 mark wrong, next question also will be for 1 mark. So you answer quick and you answer correct. The marks for which you get to answer will be more, and you will get the next level question. If not, you keep getting same level question. So there you would have to actually answer quick. Here you should answer only correct. You're not competing with everyone in the room. You are collaborating with everyone. You get 51, you pass. Your friend gets 51, both of them will pass. In competitive exam, it's not like that. Your friend gets 1 mark more than you, he will get the seat, you will not get the seat. You will get the seat and you will not get the seat. Are you getting it? So is this competitive? No, it is professional exam. Okay. So answer calmly and correct. He is getting 50,000. He is paying 50,000 for 1/3 share. Total capital will be how much? 1,50,000. Who did not understand 1,50,000? Ulta, yeah, 1/3 is equal to 50,000 or 33.33% is 50,000. How much is 100%? One cake is there. I've cut it in Y shape, 3 equal parts. One part of the cake is 50,000. What is the value of the entire cake? 1,50,000. No. To buy that 1,50,000 worth of cake, you should give 1,50,000 rupees. C will give 50. A and B will give only 30. Why? A and B has given sweat also for it. No. They'll give cash of 30, sweat of 20. They'll give cash of 30, sweat of 20. 20, 20, sweat, 40 together is goodwill. So 1,50,000 is the value, but the capital is only 1,10,000. Difference of 40 hidden goodwill. Okay. People usually tell, sir, 20,000. Sir, 20,000. Got it? Difficult? Okay. Doable? Or some say 50 into 3, 1,50,000 minus 30, 20. Hang madru 20 barutte. You want to copy question or answer or nothing? Aware? Understood? Small adjustments. They can put this adjustment in one big admission question. Last time they put that workman compensation fund. So many of them skip topic of workman compensation. They put one workman compensation adjustment in admission question, one workman compensation adjustment in retirement question. They give 2 questions on partnership last time. September 2024, there were 2 questions on partnership. So usually they think one partnership skip madre, what will go? Maximum 15 marks will go. I will still be able to write 100 marks. See the last attempt. You won't be able to write for more than 80 marks in the exam if you skip partnership. This is excluding true or false and other theory parts. What I'm not telling partnership is important. I'm telling you can't tell anything is important. You can't tell anything is less important. There is nothing like category A, category B, category C. I'll do weightage analysis. I'll do strategy. Please don't follow any of this strategy. Very important. Because you are in end of December, no? From today till January, lot of videos will come on YouTube. Where will say, जी हाँ दोस्तों मैं बोल रहा हूँ ये 5 चैप्टर करके जाइए और आपको जरूर आएगा 40 मार्क्स एग्जाम. नहीं, 17 मार्क के लिए होगा ये स्ट्रेटेजी. अगर आप ये 6 चैप्टर करेंगे तो आपको आएगा 17 मार्क एग्जाम. नो यार, इट वोंट वर्क. डोंट एवर बिलीव इट. Examination September 2024 CA intermediate. CA intermediate. Usually people say amalgamation if it comes, internal reconstruction doesn't come. Sorry, if amalgamation comes, consolidation doesn't come. Consolidation bandre amalgamation bandre. And rarely both will come, then internal reconstruction will not come. And if these 3 come, financial statements will not come. So 4 big chapters, everything in module 3. So some people told weightage analysis 70% will be accounting standard. 70 marks will come in the exams if you do accounting. 70 marks came from other than accounting. Amalgamation 1 question, internal reconstruction 1 question, consolidation 1 question, financial statements 1 question. You will be able to write exam only for 30 marks if you would have done that weightage analysis last time. Was it difficult exam? No. But was that a tricky exam? No, but people made it tricky on themselves. Why? They did ABC analysis. This is category A chapter, this is category B, this is category C. I don't know about other subjects. I'm talking only about accounts. Accounts don't do any ABC analysis. Don't skip any topics. There, last to last class, there was one student in inter class. He skipped bills of exchange, he skipped partnership, he skipped company accounts, he skipped provision for depreciation. He cleared CA foundation. He was lucky only till the time he cleared. He almost cleared in inter class. Doesn't understand so many things, and he had skipped rectification of errors also. Still passed, still passed. See, I'm telling you, it's not about just passing. He passed and then came there. Inter may not many things he understood. You will get stuck at every stage. If you get to talk, no, some friends of yours who are there in inter, ask them. Accounts ಅಲ್ಲಿ skip ಮಾಡಬಹುದು. You just ask once. You just ask once. They will tell skip ಮಾಡಬಹುದು ಅಂತ ಅನ್ಸಿದ್ರೆ BRS skip ಮಾಡಬಹುದು ಬೇಕಾದ್ರೆ. That you will not skip. That is what you can skip. That you will never skip. That is the easiest thing that you can. That will never be like how you read in this class. That will never be like that anywhere in life, anywhere else. Okay. That also one small question comes in CFS, cash flow statement in CA. But what you have to remember is anything that you skip in foundation will start haunting you at inter, especially the company accounts. You're getting it? Okay, so please don't do anything relating to skipping weightage analysis and stay away from all of these videos. In fact, I was asked, like, told you do one video, it will get very nice views. You do one video and send 5 must do topics akare 1 hour only 1000 views barate. But I know what I'm doing is not something right. That will only keep me at wrong place. So people do only that topic and go, they get deceived in the exam. And later you can't question me. I was just telling you my guess. But I know deep inside that I am the reason why someone did not make it into the examination result. That doesn't give me sleep. So you don't like it, but the harsh truth and harsh reality is don't do any prediction analysis strategy for keeping the topics in accounts paper. Other topics, maybe faculty is very confident they're telling it, go ahead, do it. But accounts, trust me, I've been doing this for quite long now, more than a decade. Honestly, don't do it. I've never suggested, I've never done it myself also. And I won't recommend either at foundation, nor at inter, nor at final. Okay, shall we do the computation of goodwill part? Once we discuss this little bit, no, we'll do a question on this. And once we do that goodwill question, maybe we can take a short break. Help me, yeah. How do we find goodwill under simple average method? Quick revision of formula. How do we find goodwill under simple average method? Very simple. Adjusted average profit multiplied by number of years purchase. Am I right? Correct? No. Average profit multiplied by number of years. My question to you is, why do we multiply it with number of years purchase? Cooking the answer right now. Started answering and then thought, thinking what to answer. The answer lies in the definition of goodwill. I don't want to have awkward silence. It is purchased for those many years. This is raised goodwill. Self-generated goodwill. This is not purchased goodwill. Purchased goodwill, the amount that you pay is what you record. Purchased goodwill is not valued. Purchased goodwill is not valued. Purchased goodwill, the value that you pay is the value. Let's say I pay 10 lakh rupees and buy someone's goodwill. 10 lakh is the value. 10 lakh is the, there is no valuation of it to be done. Here it is self-generated. Aren't we are trying to sell, at what value can you sell? You're trying to find the value. You're selling the part of your business to the new partner, no? Or a retiring partner should take the part of the goodwill what he has generated. No, what is the value of that goodwill that they've generated? That is what they're trying to. Here it becomes very important to state the definition of the word goodwill. Definition of the goodwill and the kid. I don't want to disappoint. People will end up telling me one word answer. Fame, brand, what reputation. You keep all of those in the dustbin before you come. The core word goodwill means this. It is the probability that the existing customer will stick to same business. All of you are attending foundation class here. Get it? After the examination in the month of January, results will come sometime March. February early bird batch will start for CA intermediate. How many of you would join here? Don't reason. That is goodwill of Yeshas. So the existing customers sticking to the same business. You go eat dosa in a restaurant. You go back to eat dosa tomorrow there. That is their goodwill. That's what you call name, fame. You are giving me attributes, words. I want meaning. So the probability that the existing customer sticks to the same business is goodwill. Let's say in my business, I have set of customers. This customers coming back to me is my goodwill. So if these customers come back to me, I'll make sale again, I'll make profit again. Are you getting it? Let's say today I'm selling my business. Today when I sell my business, someone buys my business. My business is not this furniture, this plant and machinery and this capital. It is much beyond this. Tomorrow if someone else sits here and then runs my business, still will earn profit, not because of their work, but because of my hard work in the past. My name and fame can run the show for next 3 years, irrespective whether I sit here or a donkey sits here and takes the business forward. I'm just giving you an example. Get what I'm trying to tell? Let's say I'm doing dosa. I make dosa sales so nice. Like even if someone else buys the business and then do dosa, for the next 3 years, still the sales will happen to be the exact same amount. Because in the last few years, dosa has been served so deliciously, people love it. So for them to not accept the taste, hate it and stop coming, it will take 3 years. You get it? So for those 3 years, whatever the profit that new businessman will earn, it is because of my hard work. So when I sell him the business, I will tell on an average I make profit of 1 lakh every year. Example, 1 lakh every year. For next 3 years, 3 lakh rupees profit is already fixed for you. That's my profit. You give me 3 lakh and take over my business. So adjusted average profit multiplied by number of years for which I think my business will run even without me, which I've already earned but I'll receive in the future, I'll collect from him. That is goodwill. Got a different perspective towards the word goodwill here? Exactly. Number of years purchase means number of years for which people will continue to purchase goods from me. Number of years for which people will continue to buy goods from me because of my quality and service and reputation, name, fame. So profit per year multiplied by number of years. In the future, what he will receive, but it's because of me, I'll take it from him. And we'll take adjusted average profit. What is adjusted average? See, let's say I told you I make profit of 1 lakh. In that profit of 1 lakh, 10,000 is interest income from SBI account. Now that 10,000 everyone will do. They, like SBI bank will not look at my face and then give me 0.5% extra interest unless I'm a senior citizen. You get what I'm trying to tell? So interest income is not because of goodwill. So 1 lakh, if it is my net profit, from that 10,000 you eliminate. Only 90,000 is from sales. For that you will get goodwill. In that 90,000, no, 10,000 is lottery income or 10,000 is for sale of asset. Some old furniture I sold and I made profit. Furniture when you sell in a dosa shop, it's not because of goodwill. Now, Vidyarthi Bhavan dosa is famous. Vidyarthi Bhavan table sale marta hai. Will it go for a higher price? No, it will go for the same price. There's no goodwill for the table. There's goodwill for dosa. Getting it? Any profit made on sale of furniture or assets, any loss made on sale of assets will be eliminated. So let's say we're finding goodwill. Average number of years purchase is 3. Profit is 1 lakh. But in this year, there was some fire because of which goods were lost. 20,000 loss. After deducting the 20,000 loss, it is 1 lakh. But that is not recurring loss. That is not repeating loss. Next year profit will be 1 lakh 20. So what do we do? 1 lakh Allah. 1 lakh 20 into 3 we should do. Are you getting what I'm trying to tell? Tell ya. So the goodwill will be computed like adjust the profits and multiplied by number of years purchase under average profit. Under this is simple average and weighted average. Simple average means take number of years profit divided by 3. Let's say I'll take last 3 years profit and divide it by 3. 2022 profit, 2023 profit, 2024 profit divided by 3. Simple average. Weighted average means what? When it's following one specific trend. 2022 10 lakh profit, 2023 12 lakh, 2024 15 lakh. So it's following one trend. No, I cannot add them and divide by 3. So for the latest year I should give higher value. I should multiply this by 3, second year by 2, first year by 1. So I should give one weight. Weight need not be 1, 2, 3. Weights can be 10, 8, 7. Or let's say in between one COVID year was there. That year we will give weightage of 1. The year before COVID, year after COVID, I'll give weightage of 5. If it is following one specific trend, weights have to be allotted. That is weighted average method. That is like you do your summation fx by summation f, capital N, something like that, to find the average of profits. Then comes our interesting method of super profit and capitalization. So you understood average profit, simple average, weighted average. I'm feeling slightly better now in the last 1 hour. Can you find the difference? Then I was feeling too dizzy. I'm sorry, it should not usually happen, but I still think your experience is not tampered, no? Okay, come on, let's discuss super profit method. Shall we discuss super profit method? Yeah, what do you mean by super profit method and how do you compute goodwill under super profit? Let's understand. Don't read the numbers there. Don't look at the formula. Formula is for you to mug up. Formula should not be mugged up. Logic sheerly. Let's say I am doing business, you are doing business. Let's say you do better business. You earn profit of 12,000. I earn profit of 10,000. I earn profit of, you earn profit of 12,000. You made 2,000 more profit than me, no? That's the super element. People say, hey, name super guru, you earn 12. I made only 10. So that you make 2,000 extra profit. Both of us started with capital of 1 lakh, 1 lakh. I started with capital of 1 lakh. You started with capital of, you earned how much profit? 12. I earned how much profit? The 2,000 extra that you did is super. So goodwill is not entire 10,000. Any idiot who starts selling dosa in Bangalore will definitely make money. Dosa andre saaku. Ellaru tintira. You don't even know that shop. Am I right? So if you open a dosa shop, everyone will go and try. but you should make more profits than everyone. You should make more profits than. So I also opened one dosa shop. You also opened one dosa shop. I made 10,000 profit with 1 lakh capital. You made 12,000 profit with 1 lakh capital. Your profit is 12. Average normal profit is 10. Actual profit is 12. Normal, everyone makes how much? 10. I'm a normal person. I made how much? 10. If anybody starts, they'll make 10,000 profit. How much did you make? So 2,000 extra that you did is super profit. How do we find super profit? Actual profit minus normal profit. That super profit will be multiplied with number of years. That super profit will be multiplied with, are you getting it? Entire profit is not representing goodwill. So now do you feel like super profit method is better than average profit method? Definitely. In average profit, every rupee of profit is considered to be goodwill. But in super profit method, not every rupee. Every rupee more than the normal. Now I told I make 10,000 or anyone else makes 10,000. How did we arrive at 10,000? Very simple, yeah. Normal rate of return in the industry is 10%. Normal rate of return in the industry is 10%. Means anybody who starts making business will earn 10% return. How much capital did you invest? On 1 lakh, any idiot will do 10% profit. Anyone. So on 1 lakh, 10% profit normal, no? You have made 12. So capital employed 1 lakh multiplied by normal rate of return. 10,000 normal profit. Actual profit 12,000. 12,000 minus 10,000, 2,000 super profit. That multiplied by number of years purchase is goodwill. Don't start with goodwill is equal to super profit into number of years purchase. Super profit is equal to actual profit minus normal profit. The way you are seeing it is wrong. You are standing in the wrong place and seeing. You should see it from the other side. Comes easy. What should we do? Capital that you employed, capital, actual capital employed multiplied by normal rate of return. What do we get? Normal profit, what everyone will earn. And actually you have earned more. Excess that you earned, super profit. Multiply it with how many years can you make this extra profit? That becomes goodwill. Now see the formula. First, normal profit is equal to actual capital employed multiplied by normal rate of return. Then super profit is adjusted average profit minus normal profit. Super profit multiplied by number of years purchase is easy. Now this is super profit method. Here we compared profits. Here we compared. Fast aita. Anybody has doubt? Shall we go to capitalization method? Okay, I won't make you do these questions. We'll do one RTP question. But capitalization method is same like super profit. Is same like super profit. But super profit method is better than average profit. You agree with me? Super profit method is better than. But the problem in super profit method is still you have that number of years purchase, which is very questionable. Now we are three of them are partners. I say 3 years purchase, you see 2 years purchase, someone says 4 years. There is nothing, no basis to prove that 2, 3 or 4. No, there is an estimate. Whenever there is an estimate, very high probability of having the wrong answer. You don't want to have wrong answer. Want to have correct answer. How do we make it right? Very simple. We'll eliminate estimates. We'll eliminate estimates. So let's see it this way. How much profit did you earn? 12,000. Normal rate of return is how much? 10%. Andre, you earned 12,000 rupees, no? When the normally rate of return is 10,000, 10%. So to earn 12,000, how much should have been your capital? 1,20,000. How much should have been your capital? But how much is your capital? So you invested 1 lakh rupees cash. You invested 1 lakh rupees. You invested 20,000 rupees of goodwill or effort. So 1,20,000 becomes your capital. So you want 10% of 12,000. 10% which is 12,000. So what do we do? Very simple. To bring it down to the example case, you made profit of 12. Made profit of, I also made profit of 12. Who's super now? Neither. But I actually invested 1,20,000 rupees. You invested 1 lakh. So you earned as much as I earned by investing 20,000 rupees less in cash. That 20,000 what you did not invest in cash, you invest in the form of another asset called goodwill. You get it? No, question is how did I arrive at 1,20,000? Normal rate of return in the market is 10%. No. To earn 12,000 like how much you earn? That 12%, 12,000 is 10%. Divide 12,000 by 10%. I should invest 1,20,000. How much should I invest? How much have I invested? 1 lakh. Sorry, how much have you invested? 1 lakh. So 20,000 what you did not invest will become your goodwill. So normally people like me will invest 1,20,000. But actually you invested only 1 lakh. 1,20,000 minus 1 lakh is 20,000 goodwill. But how did you arrive at my normal capital? 1,20,000. actual profit divided by normal rate of return. Adjusted average profit divided by normal rate of return will give you normal capital. And that normal capital, say if you deduct actual capital, you will get goodwill. Easy? Very difficult? Akka? Can we do a question on this? Come to RTP. In RTP, there is a question on this. P&L appropriation account, goodwill. 12B. Can we do this 12B? A break, after this question, do you want break or should we continue to do P&L appropriation admission? One break after this question. Okay, focus. Can we start? Come on, guys. Let's now solve question number 12B from our January 2025 RTP. And this question is on calculation of goodwill. See the question. They've given total assets, external liabilities, normal rate of return, and average net profit for last 5 years. They want you to compute goodwill under two methods. One is capitalization method. Other one is super profit method considering 3 years purchase. Let's start with our capitalization method. Capitalization method, the goodwill is computed as difference between capital that you have invested and capital that you should have invested. Capital that you should have invested will be more. Capital that you have invested will be less. Capital that you should have invested is normal capital, what everyone will normally invest. What you have invested is much less. Shall we do it? Now, how much is the profit that you earned in the last 5 years as an average? 1 lakh. To 1 lakh divided by 10%. So to get 1 lakh rupees as profit on an average normal rate of 10%, you should have invested 10 lakh. If you invest 10 lakh, on 10 lakh at 10%, you get 1 lakh rupees profit. But what is your capital? Capital is assets minus liabilities. Assets is 10 lakh, liabilities is 1 lakh 80. Do 10 lakh minus 1 lakh 80. 8 lakh 20,000 is the capital that you have invested. But the capital that you should have invested is 10 lakh. So the difference of 1 lakh 80,000 is your easy. Let's do it like this. See, goodwill is normal capital minus actual capital. Actual capital is assets minus liabilities. So normal capital is adjusted average profit divided by normal rate of return. Adjusted average profit for 5 years is 1 lakh. To earn 1 lakh of profit at 10% rate of return, you need 10 lakhs of capital. To earn 1 lakh of profit at 10% rate of return, you need how much? 10 lakhs of capital. So normally you should have invested 10 lakh rupees as capital. But how much capital have you invested? You have assets of 10 lakh. You have external liabilities of 1 lakh 80. So capital is assets minus liabilities. 10 lakh minus 1 lakh 80, which comes to 8 lakh 20. Everyone on the planet should invest 10 lakh rupees to earn profit of 1 lakh. But you have done that 1 lakh rupees profit by only investing 8 lakh 20. So you should have invested 10 lakh. You have invested 8 lakh 20. 1 lakh 80,000 you have not invested in the form of capital, but you invested in the form of goodwill. There is no cash. There is an intangible asset of 1 lakh 80. This is the extent to which you have earned profit without investing capital. An intangible asset. Goodwill. Understood? This capitalization method. Understood this? Let's do the other one, which is super profit method. Super profit means what? Super profit is the profit that you earn more than others. Profit that you earn more than, see, your capital, like we just discussed, is 10 lakh minus 1 lakh 80, 8 lakh 20. Everybody else on their capital, they will earn 10%. They will earn how much? So 10 lakh asset minus 1 lakh 80 liability, you get 8 lakh 20,000 as capital. On that you apply 10%. 82,000 is the normal profit that everybody earns. But you, my friend, has earned 1 lakh. Oh my God. You have earned how much extra? 1 lakh minus 82,000. 18,000 you earned extra. How many years can you earn that 18,000 extra? For next 3 years. Do 18,000 into 3, that's your goodwill. Okay. This is written by the formula super profit multiplied by 3 years of purchase. How do we find super profit? Super profit is found as adjusted average profit by normal profit. Am I right? Adjusted average profit is given in the question. How much is adjusted average profit? 1 lakh. How much is normal profit? Actual capital multiplied by normal rate of return. Actual capital in your case is 8 lakh 20. That we arrived at assets minus liabilities. 10 lakh minus 1 lakh 80 is 8 lakh 20. 8 lakh 20 into 10% is 82,000. So normal profit is how much? 82,000. But you have earned profit of how much? 1 lakh. You should have actually earned profit of 82,000. No, because your capital is 8 lakh 20. Normally everyone earns 10%. On your capital of 8 lakh 20, you should have earned 10%, 82,000. But you earned 1 lakh. You earned super profit of 18,000. You earn profit of 1 lakh. No, in that profit of 1 lakh, 82,000 is normal. Everyone will do. 18,000 only you can do. Nobody can. That 18,000 is your super profit. How many years can you keep earning that profit? For the next 3 years, do 18,000 into 3. 54,000 is the goodwill. Very good. After this, we have a question on admission cum retirement. This admission retirement cover agutte. One partner is admitted and another partner is retiring simultaneously. And slightly lengthy question, but it's going to be a fun one. Break ediklama. How long? 15 minutes? Yeah, 20 minutes. Okay, it is 4:46. Take a break. 5 ಬರ್ತೀರಾ? 5:10. ಆಮೇಲೆ we'd have to discuss little bit of death and dissolution and then company accounts also, no? So if I start taking beyond 7 o'clock, a lot of them might find it late to reach their home. Whoever is finding late can leave, but I will take entire company accounts and then wind up today. Okay, if you find it late to reach home, what you guys can do is you can leave the class and recording will be available on YouTube. Maybe you can watch how much ever you miss. I will not force you to sit here till 8 o'clock, 8:30, but I will sit because I have to record. No, I cannot say I will go home. You got it? I am writing exam alva January. My career is very important for me, so I would do that. Yeah. Now after this the door is open. At any point of time, whoever is getting late, please don't stay here and then make your parents call. Who is that? Why did he make my son or daughter sit till 8:30? No, not forced anyone to sit here. Okay. Very good. Take a break. See you all at 5:10. When we come back, let's continue with admission. So after this break, we will now do a question on admission cum retirement. Shall we? Come on guys, let's now solve question number 13 from our Jan 2025 RTP on partnership. This question is on admission cum retirement. A very similar question with different numbers and slightly different name was asked in November 2020 examination. Question number 4A. So a very similar question is there in our Jan 25 RTP. After this question, if you want to try a similar question, go to see November 2020 question 4. Start. Acme and Company is a partnership firm with partners Mr. X, Mr. Y and Mr. Z, and they're sharing profits and losses in the ratio 10:6:4. That's their profit sharing ratio. Don't ask me, sir, why did they not give 5:3:2? It's the same, but they've told 10:6:4. You do 10:6:4. 10/20, 6/20, 4/20. The balance sheet of the firm as on 31st of March 2024 is as under. They've given the entire balance sheet. Don't waste your time reading the balance sheet at all. Quickly see what's given after balance sheet. It was mutually agreed that Mr. Y will retire from the partnership and in his place Mr. P will be admitted as partner. So in this Mr. X, Y and Z, Y will retire, Mr. P will come in the place of Y. So there is admission of P, there is retirement of Y. It is admission cum retirement. In fact, admission and retirement are no different. Some place the items which are supposed to be added will be deducted. Some items which are debited will be credited. That's the only difference. In other than that, I see no difference between admission and retirement. And retirement and death are very, very simple, very similar. I'll tell you that difference later. Focus here. Goodwill is to be valued at 3 lakh. Wow. They could have told us some profits, some number of years purchase, some NRR, all of that. But instead, they choose to make our life simple by give goodwill at 3 lakh. We'll do it, but the same will not appear as asset in the books of the firm. Oh, so we can adjust it through capital account, or we can raise and write off. Either ways, it is same. So remember, goodwill should not appear in the reconstituted firm's balance sheet. The goodwill is valued at 3 lakh. Then there is some revaluation of building, there is some revaluation of plant and machinery, investments, there is some adjustment, so is provision, that is trade receivables. So when you write what items? Building, plant and machinery, and investments. Building, there is adjustment. Plant and machinery, there is adjustment. Investment, there is adjustment. Trade receivables, there is provision. Don't write them in the outer column, keep them in the inner column, adjust them for the adjustment, and then write them to outer column. Then what other adjustment is there? Reconstituted firm's total capital is 6 lakh, and the reconstituted firm profit sharing ratio will become 2:2:1. Very nice, easy. They've told the ratio. They didn't ask us to compute also. And the surplus, if any, will be withdrawn, or if there is shortage, they will bring. So basically, proportionate capital method. Capital should be in the ratio of PSR. If they have excess capital, they will withdraw. If they have shortage capital, they should pump in money to make their capital as good as. Amount due to retiring partner shall be transferred to loan. That Mr. Y will retire, will not give him full cash. You will keep it in loan account. Y's loan account. That's it. This is the adjustments. We are familiar with it. They're asking us to prepare revaluation, partners capital account, bank account, and balance sheet of reconstituted firm. देर किस बात की? शुरू करें. Always follow all the accounts simultaneously. Prepare revaluation account, partners capital account, balance sheet. All the three of them simultaneously are open. Pick the item and then post it. Don't approach it your second PC where you finish revaluation, then start partners capital, finish partners capital, then start balance sheet. Please don't do it. To begin with, we have capital. Mr. X, Mr. Y, Mr. Z. 2 lakh, 40, 60, and 90. So I will open partners capital account, debit side, X, Y, Z, P, the new partner. X, Y, Z, P, the new partner. There is a problem that you might face in the exam. Sir, how do I rate this much big partners capital account? 3 solutions for this. Solution number 1, prepare one partners capital account for XYZ together and P's new partners capital account separately. First form of solution. Second form of solution, don't prepare P's account separately, prepare it together and change the orientation of your paper. Can do that. Initially I used to tell not to do that, and in one of the exams we did try. I asked one of the students, if anyone is daring enough, write your paper that way, let's see what will happen. They did write, they were corrected, they were allotted full marks also. So don't hesitate, you can very confidently go ahead and write that in the horizontal format. But point to note, don't use margin. Don't use margin. And if you think you can finish it in one paper, then you do it that way. If you can't, then very simple. Debit side you write in one paper, credit side you write in the other paper. Don't write credit side below debit side. Don't write the credit side below debit side. That might confuse the evaluator. So write debit side in one paper, credit side in the other paper. It need not be the consecutive papers, because for the evaluator only one page at a time is visible. So this side, and then you flip the page and then you write credit side, it's absolutely okay. Again, in that case, don't use margin. Don't use margin. And always between transactions maintain 1 or 2 line space. 1 or 2 line space. Because if some item is wrong, you can scratch and then write below it. If you wrote everything one below there, perfectly stacked, you can't make corrections. So you would have to write it the entire ledger again. So whether you are confident or you are not confident, when you're preparing ledger, after each item in the ledger, give 1 line. Some complex adjustment, leave 2 lines space in between. So later, if you realize that there is a mistake, you can come back and write. Or if the invigilator wants to make you pass, he can write for you to write. Done. Let's get back to solution. Shall I write Mr. X 2 lakh 40 and Mr. Y 60 and Mr. Z 90? In my partner's capital account, on the credit side, I would write here, by balance brought down. How much is it? Mr. X 2 lakh 40, Mr. Y 60, Mr. Z 90, Mr. P 0. Mr. P is not an existing partner. He will become partner now on admission. I have written capitals. What's after that? Reserves. Unappropriated profit 60. This profit has to be shared right now between old partners in OPSR. Why? The new partner comes. New partner will also ask share in this. This was earned by old partners. Shall I share it to old partners in old profit sharing ratio? I would write here by reserves. Capital of the partners will increase. So credit it. and then the debit will be to reserves because reserves will decrease. How much is reserves? 60. What is their PSR, old profit sharing ratio? 10 is to 6 is to 4. 10 by 20, 6 by 20, 4 by 20. 10 by 20, 6 by 20, 4 by 20. Help me. 30,000, 18,000, 12,000. Everyone's clear? 30, 18 and 12. What's after this reserves? Come back to the balance sheet liability side. We have long-term debt. There is no adjustment with long-term debt. Long-term debt I'll write as it is 9 lakh in the reconstituted balance sheet. The balance sheet that will be prepared after this, no. In that reconstituted balance sheet, I would write long-term debt on the liability side 9 lakh. Clear? What is after this long-term debt of 9 lakh? BOD, bank overdraft of 1 lakh 32. This you have to open ledger. You know why? For reconstituted firm, the capitals are supposed to be there in PSR. When we write the reconstituted firm's capitals in PSR, there the capital, if it is not as per PSR, they bring in additional capital or they withdraw, or that bringing in or withdrawal entry is through bank, it will affect our BOD. So we have to open bank overdraft account and write this 1,32,000 on the credit side. Shall we write it? Come to bank overdraft ledger. We'll open one ledger for bank overdraft. This is a working note. Or we can choose to write it in the inner column. I would prefer to open a ledger. Liability, no. I'll open on the credit side. How much is the opening balance? 1,32,000. Got it? What's after that? Trade payables of 5,10,000. See, we are not touching this anyway. We read so many adjustments. There is no adjustment to this. This will appear as it is in our reconstituted balance sheet without any of the adjustments. 5,10,000 trade payable. Okay. What is after this trade payables of 5,10,000? Come to asset side. On the asset side, we have land of 30. Land we are not revaluing. The revaluation is there only for plant and machinery, furniture, investment, and trade receivables. So I would write land of 30,000 in my balance sheet asset side as it is. Got it? What's after this 30? Building 6 lakh. Let me write building 6 lakh rupees in the inner column because there is a revaluation associated. After building 6 lakh, plant and machinery 3 lakh 90. There is no adjustment for plant and machinery 3 lakh 90. There is no, yeah, there is revaluation. So I'll write this also in the inner column 3 lakh 90. Sir, shall we do revaluation now? No, order is very important. Once we finish the entire balance sheet, then we read the adjustment, then I'll do the adjustment. Till then I will not. What's after this plant and machinery of 3 lakh 90? Furniture. How much is our furniture? 1 lakh 29. So I would write here furniture 1,29,000. Got it? After furniture 1,29,000, investments 36,000. I would write investments 36,000 in the inner column. 36,000 in the inner column. There is some part of the investments taken over by one of the partner. After that, inventory 3,90,000. I don't think there is any adjustment. Is there any adjustment? No. As it is, asset side outer column reconstituted balance sheet. What's after inventories? Trade receivables. How much? 4,17,000. So I would write my trade receivables again in the inner column 4,17,000 without any adjustment. Okay. Fantastic, guys. By this, we are done with the entire balance sheet treatment. Let's quickly see what's given after. It was mutually agreed that Mr. Y will retire from partnership and in his place, Mr. P will be admitted as a partner with effect from 1st April 2020. For this purpose, the following adjustments are to be made. Number 1, goodwill is to be valued at 3 lakhs, but the same will not appear. Basically, what we should do is, Mr. P, whoever is coming in, he should bring his share of goodwill. What is their new profit sharing ratio? 2:2:1. 1/5 of the goodwill should be brought by P, and that should be shared between Mr. X, Y, and Z in their sacrifice ratio. Are you getting it? And Mr. Y who's retiring should be paid his share, and that should be compensated by Mr. X, Mr. Z, and Mr. P in gain ratio. So you'd have to compute gain ratio, you'd have to compute sacrifice ratio along with the old profit sharing ratio, new profit sharing. Don't worry about all of it. First, distribute goodwill to all the old partners in old profit sharing. Then write it off to all the new partners in new profit sharing ratio dividend. Difference will be already adjusted with regard to sacrifice ratio as well as gain. Are you getting it? This is one single table which will give you entire solution. What should you do? First, share the goodwill to old partners in old profit sharing. How much is goodwill in total? 3 lakh rupees. It doesn't matter whether it is adjusted through capital. He brings his share of goodwill. He brings his share in cash, in non-cash consideration, raised and written off. Whatever adjustment it may raised only to the extent of the incoming partner. Don't at all worry about the adjustment. Blindly do this table, serves the purpose. Okay. How much is goodwill? 3 lakh. What is their old profit sharing ratio? Old profit sharing ratio is 10:6:4. This goodwill belongs to Mr. X, Mr. Y, Mr. Z. In the ratio 10/20, 6/20, 4/20. Do you agree with me? It is their hard work. There is a table. X, Y, Z and P are sitting. X keeps 1,50,000 rupees worth of goodwill. Y will keep 90,000 rupees worth of goodwill. Z will keep 60,000 rupees worth of goodwill. They are keeping so much of goodwill. So they are supposed to be compensated by so much money. Their capital will increase to that extent. Mr. X is supposed to get 1,50,000 of his share of goodwill. So debit credit his capital account by 1,50,000. Y should get 90,000 worth of goodwill. Credit his account by 90,000. Z should get 60,000 worth of goodwill. Credit Z's account by 60,000. X, Y and Z kept 1,50,000, 90,000 and 60,000 goodwill respectively. Y is retiring. So Y will not take any goodwill. Y will leave just like that. P did not keep anything. P will now take. Now there is 3 lakh rupees worth of goodwill on the table. This is the table. There is 3 lakh goodwill. Each of them will take. How much will each of them take? They will take it in new profit sharing ratio of 2:2:1. This new PSR 2:2:1 is for X, Z and P. X, Z and P. So X will get how much? 3 lakh into 2/5. Z will get 3 lakh into 2/5. P will get 3 lakh into 1/5. They're taking this much. So they have to basically pay this much of money. Their capital will reduce to this extent. Their capital will reduce to this extent. Debit it to them. What is the entry? 1,20,000 debit. Here 0. Here 1,20,000 debit. Here 60,000 debit. So P did not keep anything on the table. But P is taking 60,000 worth of goodwill. So his capital will be debited by 60,000 net. So P has to reduce his capital by 60, compensating the other part. Are you getting it? Look at Z. Z kept 60,000 worth of goodwill. Allah, it took 1,20,000 worth of goodwill. It took 60,000 extra. Are you getting it? That is because his profit share is increasing from 4/20. 4/20 is how much? 1/5. It is increasing from 1/5 to 2/5. Doubling, no. So that extra amount of goodwill he has to buy. So his capital will reduce by 60,000. In the same place, Mr. Y kept 90,000 of goodwill. Is not taking anything back home. So he should be compensated for 90,000 rupees. His goodwill is converted into capital. His capital will be paid to him by loan. Is it making sense? Mr. X kept 1,50,000, took 1,20,000. So he has lost 30,000. He sold his part of his share to somebody. Are you getting it? So 30,000 rupees, he should also be compensated. So this is the net entry for goodwill. Remember the journal entry, Z and P should be debited. Z account, P account debit by 60/60. X and Y account should be credited by 30 and 90. X account credit, Y account credit, 30 and 90. This is the goodwill adjustment entry. Everyone understood? So debit Z account and P account 60/60. Credit X account and Y account 30/90. Shall I do this? In partners capital account. See, this is actually entry of goodwill raised and written off. Entry is goodwill account debit 2X, 2Y, 2Z and X account debit, Z account debit, P account debit, 2 goodwill. But we are trying to do the net of it in the table and only write the adjustment entry to partners capital account. Did you get it? How much should I debit Z and P's capital by? 60 and 60. Shall I debit? See, this is my partners capital account. Z and P account, I am going to debit it by how much? 60/60. Please don't write goodwill here. Why? They have told adjust it without writing goodwill. Z and P capital is reducing. Why? Z and P are giving money to X and Y. When you write the amount in Z and P column, write the names of X and Y. You don't have to write how much X, how much Y. Write X and Y. So X and Y are taking from Z and P. X and Y will get money. So here I'll write Z and P's capital account. I should write it to X and P credit. How much credit? We've done the working note. See how much is X and Y credit? 30 and 90. Am I right? So here I am going to write credit of 30 and 90. Did you understand this? This is goodwill adjustment, my friends. Okay, everyone's clear with this goodwill adjustment? Nobody has a doubt? Can I surely go forward? What is after this? After this adjustment, we just finished this A, 3 lakh. Then we have building and plant and machinery are to be depreciated by 5% and 20% respectively. Building depreciated by 5%, plant and machinery depreciated by 20%. This is not normal depreciation that will go to P&L. Any adjustment to the value of the assets that happens in the process of reconstitution should not be written to P&L, should be written through revaluation account. I'll repeat, any change in the value of the asset or liability, any expense or income arising in the process of revaluation or reconstitution of the firm should not be adjusted to P&L, should be adjusted through revaluation account. This is not depreciation actually, this is revaluation. Building value is decreasing by 5%. Building account credit, revaluation account debit. In revaluation account debit side, I would write to building account. What is the amount? It is 5% of 6 lakh, which is 30,000. Asset will become 5 lakh 70. This 30,000 I would write in my revaluation account on the debit side 30. Did you get this? Next thing that's there is with regard to our plant and machinery. Plant and machinery is supposed to be depreciated by 20%. Please tell ya. In my revaluation account, I would write less revaluation 20%. 20% of 3 lakh 90 comes to 78,000. Can I say this becomes 3 lakh 12,000? This 78,000, what is the revaluation in the value of our plant and machinery? Decrease basically. It should be written in revaluation account as debit because the journal entry is revaluation account debit to plant and machinery. Let me write in plant and machinery account here revaluation account here to plant and machinery 78,000 rupees. Everyone's clear? What is after this? Respectively, investments to be taken over by the retiring partner at 45,000. That retiring partner, why is there? No, we are not giving him complete money, but he is allowed to take over investments. Allowed to take over. Before you take over that investments, check the value. It is taken over at what value? 45. Is 45 the value in the balance sheet of investments? No, it's 36. If he is agreeing to take over at 45, firstly there is upward revaluation. 45 minus 36. 9,000 upward revaluation. Here I will first add 9,000, make it 45, then the partner will take over. So I am not writing takeover entry. I added the investments by 9,000. Investment should be debited, crediting revaluation. Can I say the accounting entry is investment account debit to revaluation account? So in revaluation account, I would write by investment account to the extent of 9,000. Everyone got it? And here I added that 9,000. It became 45. This is taken over by Mr. Y. So this will become 0 in the balance sheet. When Y takes it over, my investment value is reducing. Investment account credit. Investment account debit will be Y account. Y's capital will reduce. Journal entry Y's capital account debit to investment account. Y's capital account debit to. So here investment treatment done. In Y's capital account, I should write debit side to which account? Very good. To investment taken over by Y 45,000, not 36,000. Why? He agreed to take it over at 40. Here, what is after this? Provision of 20% is to be made on trade receivables to cover doubtful debts. What percentage of provision should be made? 20%. Come on here. Do you see debtors or trade receivable here? The provision should be maintained at 20%. So this provision will be deducted as provision, but provision is a new liability created. Usually we write it in P&L. Here we will not be writing it into P&L. We will be writing it in revaluation. Like I mentioned, any change in the value of assets or liabilities in the process of revaluation should be routed through revaluation account. How much is 20%? 4 lakh 17 into 20%, 83,400. 83,400 if we deduct it becomes 3 lakh 33,600. And this 83,400 what you're deducting from the value of trade receivables, what will be the entry? To this extent, in revaluation account, you should debit it. Got it? Revaluation account debit to provision is the entry. Liability is created. Provision for doubtful debts 83,400. Everyone's clear? What is after that? In the reconstituted firm, the total capital will be 6 lakh. which will be contributed by X, Y, and Z in the ratio 2:2:1. See, in our partner's capital account, here I would write by balance carried down. It should be 6 lakh in the ratio 2:2:1, not for Y, for X, Z, and P. Any shortage they should bring, any excess they can take it home. So help me, 6 lakh into 2 by 5, 6 lakh into 2 by 5, 6 lakh into 1 by 5. 2 lakh 40, 2 lakh 40, 1 lakh 20. Understood? 240, 240, 120. This is the capitals that should appear in our new reconstituted balance sheet. Here I would write capitals X, not Y, Z and P. 2 lakh 40, 2 lakh 40, 1 lakh 20, put together coming to 6 lakh rupees in the ratio 2:2:1. Got it? What is after that? Then we are done with all the adjustments. They're only asking us to adjust it through bank overdraft, that excess money brought in or shortage. Okay? We are not paying any money to Mr. Y. Whatever we owe to Mr. Y other than the investment taken over will become loan. Okay, now come on, yeah. Let's first close our revaluation account. There is loss. Am I right? Total here is how much? 191,400 minus 9,000. What do we get? 182,400 share between X, Y, and Z, not P. X, Y, and Z. What is their old PSR? 10:6:4. So 10 by 20, 6 by 20, 4 by 20. 91. Very good. 54,720. Then 36,480. You got it? In revaluation account, I have written by partners capital account. In partners capital account, I will write to revaluation account. This is revaluation loss shared between them. How much? 91,200, 54,720, 36,480. 91,200, 54,720, 36,480. Posted. Now, partners capital account, you will find balancing figure. Whatever you find as balancing figure in X column, Z column, and P column will be bank, either of the sides. With regard to Y column, it will be Y's loan, which will appear in the balance sheet as liability. Shall we start with X? X, you see 91,200 plus 2 lakh 40. So that's about 3 lakh 31,200. Debit side, credit side, how much do we have? 2 lakh 70, 3 lakh. I think the total is more on the debit side. So what does it mean? Mr. X should bring capital. Mr. X doesn't have 2 lakh 40,000 rupees as capital. If you do 240 plus 30 comes to 3 lakh. From 3 lakh you deduct 91,200. What do we get? 3 lakh minus 91,200. What do we get? 2 lakh. He has 2 lakh 8,000 of capital, but he should have 2 lakh 40. No, that shortage, whatever is there, he brings in by way of bank. Are you getting it? Take the total on the debit side, 331,200. Now identify the balancing figure. What do we get? 31,200. Balancing figure. With Mr. Y, please remember no cash adjustment. Transfer to loan. 60 plus 18, 78 plus 90, 168. 168 minus loss of 54,720 and 45,000. What he has taken over by way of investment. 68,280 will become his loan. Wise loan. 1 second. Before I write this, you know what will I do? He should bring in cash now 31,200. In my bank account, I would write on the debit side. Why? Bank balance will increase. Y will bring, X will bring how much? 31,200. Understood? Now we'll do that Y column again. How much was that Y column total? 168. 168 minus 3, what did we get? 68,280 is Y's loan. It will appear in the balance sheet. Appear in the balance sheet here. Y's loan 68,000. Did everyone understand this? 68,280. So much money we owe to Mr. Y. We will have to pay him. We'll pay him later. Okay. What's after this 68,280 Y's loan? Then see Z column. How much are we supposed to pay to Z? 90 plus 12 is his capital. 1 lakh 2. In that 60 damar, 36,480 damar. 60 towards goodwill, 36,480 towards this. 96,480 if you deduct, his capital is very less. You should have 2,40,000 of capital. Take the total on the debit side instead. 3,36,480. Deduct this 1,02,000. 2,24,480. Sorry, 2,34,480. This much money you should bring. I'll write piece column also together, total once for all. 1,80,000 is the total on the debit. 1,80,000 is what you should bring. 234, 480 and 1,80,000 Z and P will bring. I would write here 2Z, 234, 480, 2P, 1,80,000. Got this? Take the total. Identify the bank balance. Write it in balance sheet. Tally the balance sheet. Yeah, problem is over. 234, 480 plus 180 plus 31, 200. 445, 680 minus 1,32,000. Positive balance in bank. We had OD of 132. Our partners brought in this much money. Now I have positive bank balance. 3,13,680. Balance sheet as an asset I would write 313,680. Take the total on the liability side first. 6 lakh plus 9 lakh plus 5 lakh 10 plus 68 280. 20 lakh 78,280. Check the total on the asset side. 30 plus 5 lakh 70 plus 3 lakh 12 plus 1 lakh 29 plus 3 lakh 90 plus 3 lakh 30. 600 plus 3 lakh 13 680. 20 lakh 78,000. By this, we are done with the entire balance sheet with working note. Admission come, retirement. Got this? Hell yeah. Very nice. Shall we do one more? There's one more on now. I think the next one is on dissolution of partnership form. Garner versus Murray. Your favorite. First, let's quickly glance through the topic of dissolution. Shall we? It will take a little time. I will show. Debit side, credit side. Can we go to dissolution of partnership? Oh, sorry. Before that, a quick glance on death of a partner. Shall we? Okay. Admission and retirement, I hope you guys have no problem now. Can I say that we're done with both of them? We didn't discuss joint life policy. We did not discuss joint life. Shall we discuss joint life policy? Very good. Focus. Focus. I won't take too much time. What is JLP? See, it is a policy. It is a taken on the lives of partners jointly. Now, who takes policy? This is like insurance policy. Now, the people who are dependent on you will be served in the case of any unfortunate situation because of which you will not be able to help them. Insurance policy. Here, the policy is taken by the partnership firm because it is not just that partner is dependent on the firm and partners, what to say, dependents are dependent upon the partner's income. Firm is also dependent on the partner. If in case any of the partner dies, you would have to compensate that partner for his capital, reserves till the date, interest on capital, share of profit, everything. You might have to sell your assets to pay the deceased partner's dependents. And in such case, you know what will happen? Death of one partner might disrupt the entire operations of the business. Death of a partner might lead to dissolution of the partnership. It should not happen. So what does the firm do? Firm takes the insurance policy on the partner. Here, if something happens to the firm, if something happens to the partner, firm will be compensated by the insurance company. Remember, who has taken the policy? Firm. Who will get the benefit? Firm, not the partners. Who will get the benefit? Are you getting it? So firm will pay the premium and secure the lives of the partners. If any partner dies, for the deceased partner, we have to pay capital, share of reserve, revaluation, profit or loss, goodwill, and everything. To give that, we need money. Insurance company will give us money. That money I will take and will give it to this partner. Are you getting it? Pakka. This partnership, when it takes the policy, it can take it jointly on all the partners together, or it can take individually on each of the partners separately. That is an insurance policy which can be either jointly or separately. Are you getting it? Why do they take? If in case any partner dies or retires, we have to pay, we might not have money, so we take the insurance policy. How does it work? Firm will pay the premium. If any of the partner dies, sum assured will be received. That will be used to pay the deceased partner. If any of the partner retires, policy will not mature, policy will be surrendered, and with the money that we get, we will settle the retiring partner's claim. Are you getting it? There are specific terms used in this case. Premium, sum assured, surrender value. What are these? Premium. It is the money paid by the partnership firm to the insurance company. It is the money paid by the partnership firm to the, we call this as expense. It is premium expense. You get it? Second item is sum assured or policy amount. This is the money that the insurance company will pay the partnership firm if in case the partner die. Surrender value is the money that the insurance company will pay the partner when the policy is surrendered, not when the death happens. In the case of retirement, we get surrender value. In the case of reconstitution, we get surrender value. In the case of death and only death, we get sum assured. Are you getting it? And surrender value will be slightly lesser than the premium paid. It will be 80% of the premium paid, 90% of the premium paid. So if you surrender, it's actually loss. It's actually loss. Are you getting it? Very good. Now focus on this thing. In case of a death of a partner, firm receives policy amount, and this policy amount belongs to whom? All the partners, not to the deceased partner. A, B, C is dead. Obviously, C will die. When the C dies, yes, example, usually when partner C dies, so that sum assured will be received by the partnership firm. That doesn't belong to partner C. It belongs to all the partners. To be shared between all the partners. Cash received will be used to pay partner C, but the profit belongs to all of them. What we usually think is that cash is used to pay them. So we think entire policy amount belongs to partner C. No, remember 12 aspect concepts and conventions. There are two aspects. When you receive policy amount of 1 lakh, cash debit 1 lakh to JLP 1 lakh. JLP 1 lakh is profit shared to all the partners. Cash 1 lakh is used to pay only the deceased partner. There are two aspects. One is asset aspect. Other one is the liability credit aspect. Profit aspect, whatever is there, JLP belongs to all the partners. Asset aspect, cash will be used to pay only the deceased partner. Understood? Then on retirement, surrender value is received, belongs to all the partners. Cash proceeds is used to pay retiring partner share only. Got it? Considering the trends in the insurance sector, you can take policy only on the one partner, or you can take jointly on all the partners. High value on one partner, low value on another partner, just to save premium. All these trends are now available. Let's see some examples. Shall we? Hell yeah. This is to fine tune your basics. If you get this right, then the rest of the life in this topic will become easy. See the question. A, B and C are partners. Policy amount is 1 lakh each. Surrender value is 10,000 each. Profits and losses are to be shared equally. How much money will the firm receive if the partner A dies? Hell yeah. Partner A dies, no. Correct or not? So, from A's policy, we'll receive full 1 lakh. From B's policy, we receive only 10,000. From C's policy, we receive only 10,000. Why? B and C's policy will be surrendered. A's policy has matured. Understood? And entire 1 lakh 20 belongs to partnership firm. How much does partner A get on his death? Partner A, how much does he get? 1 lakh 20,000 belongs to the entire firm. In that he gets 1/3 because he is equal partner. 1 lakh 20 into 1/3 is how much? 40,000 should be credited to capital account of A, not 1 lakh. 1 lakh completely belongs to firm. 10,000 and 20,000 completely belongs to firm. Total 1 lakh 20 will be shared between all the partners. Why? When they paid that JLP premium of 6,000, 7,000, whatever, they wrote it to P&L account debit side. That was charged as an expense. That expense was borne by the firm, meaning all the partners in their PSR. So the benefit also should be borne by all the partners in PSR. If you give complete benefit of surrender that policy amount to deceased partner, then it does not serve the purpose. It will become like personal life policy of partner. Got it? However, entire cash proceeds of 1 lakh 20 can be used to settle partner partner A who died. Got that? Then how much money will the firm receive if partner A retires? From A's policy 10, from B's policy 10, from C's policy 10. And in this, how much is A's share? 30,000 into 1/3. He gets so much? 10,000 will be credited to his capital account. However, entire 30,000 what is received can be used to settle his claims. Got it? Now, as a firm, when I'm doing accounting for JLP premium, I have two ideas. One, I will treat JLP premium that I pay as expense. If I pay it as expense, what will I do? I'll write JLP premium account debit to cash the moment I pay. And I'll write P&L account debit to JLP premium, transfer it to my P&L account, khatam. Let's say I paid 10,000 premium. I'll write JLP premium to cash 10, P&L account debit to JLP 10, and 10 will go to my P&L. However, I'm thinking policy is taken for 10 years, premium is 10,000. So I'm thinking at the end of certain period, if I get the money back, not entire 1 lakh is my income. I paid 10, 10, 10, 10 4 times. I got 1 lakh. 40,000 what I paid came back. Extra 60,000 what comes is my income. If I write JLP premium as expense to P&L, let's say I paid 10,000, 10,000 premium. I transferred it to P&L. At the end of year 1, partner died. I received 1 lakh. Then I will write bank account debit or cash account debit to JLP account 1 lakh. And book entire 1 lakh as income, share that 1 lakh to all the partners in whole profit sharing. You know what am I doing here? I booked 10,000 as expense here by transferring to P&L. That is the reason I am writing entire 1 lakh as income here and sharing it to partners. Suddenly, the idea barutte. What I am trying to tell is, instead of paying 10 as expense, 1 lakh as profit, when I get 1 lakh, 10,000 what I paid is coming back to me. 90,000 is my profit. So what I do is, I won't write this JLP premium as expense in P&L. I will treat JLP premium paid as asset. I will treat JLP premium paid as, that is an alternative method of accounting, where the premium is treated as asset. When you treat premium as asset, the journal entry is JLP to cash, not JLP premium to cash. It is joint life policy account debit to cash. It is treated as asset. I will record at 10,000. Then I'll check for a moment. Hey, wait. At the end of year 1, surrender value is not 10,000. Surrender value is 80%. Meaning if I surrender, I'll get only 8,000. So I cannot record my asset at 10. I will record my asset at 8,000. So I paid 10 to insurance company. If I surrender, I'll get only 8. 2,000 I will not get. Only 2,000 is expense. So in this JLP asset, I'll transfer only 2,000 rupees. Difference between the premium paid 10,000 and surrender value 8,000, 2,000 I'll transfer to P&L. In my balance sheet, I'll show JLP at 8,000. Are you getting it? Let us say, see in balance sheet at surrender value. After I write in my balance sheet JLP at 8,000, let's say policy matures, partner dies, I receive 1 lakh. Not entire 1 lakh is my profit. You know why? I didn't write full 10,000 to P&L. But I have transferred full 10,000 to P&L. Full entire 1 lakh would have become my profit. Now when I get 1 lakh rupees JLP, what I am trying to tell you is, I have asset of 8,000 in my balance sheet. That asset of 8,000 is now sold for 1 lakh. 92,000 profit. So I'll write bank account or cash account debit 1 lakh. Credit my JLP asset. Credit my JLP asset at 8,000. Difference of 92,000 will become my income. That income will be shared to partners in PSR. If in case I surrender, I'll get cash to JLP 88, no profit, no loss. Are you getting it? This is treatment of JLP as expense and JLP as asset. What the difference? Yes or no? Okay, there is one more thing called JLP as reserve, but let's not talk about JLP reserve now. I'll tell you this policy of joint life treated as expense and asset treatment in big question. What to do in big question? Very simple. First check whether JLP is given in the balance sheet asset side or not. First check whether JLP is given in the balance sheet asset side or not. If it is given in the balance sheet asset side, you do know that retired or dead you identify. Retired means surrender value, dead means policy amount. Take that, identify total amount that you get. The total amount what you get. No, once you know the total amount, check is there asset. Let's say there is no asset, the balance sheet. What does it mean? JLP is treated as expense. It is transferred to P&L. This full money what is received is profit. Share it to all the partners in PSR. You get it? Let us say you identified the money received, surrender value and policy amount together. Balance sheet asset side, there is a balance. What to do? That is the cost of the asset. This is the selling price of the asset. Take the difference. Difference is profit. Share profit in PSR to old partners. I'll repeat. Take surrender value if in case the partner dies, policy amount if in case the surrender value if partner retires, policy amount if the partner dies. Take the total amount. Then check is JLP available in the balance sheet asset side. The JLP is not there in the balance sheet asset side. That is written as expense to P&L. entire JLP money received is profit shared to all the partners in PSR. If in case that total amount what you compute, it is there and balance sheet asset side there is JLP, then what do? Then take the difference, that is the cost of the asset, this is the selling price of the asset, difference is profit, such profit will be shared between all the partners in PSR. You guys get this? Sir, this is all okay. What if there is JLP reserve? Treat it like just any other reserve, share it to all the old partners in old profit sharing. Sir, why do they create reserve? Now JLP asset is there, no balance sheet. Whenever that asset is there, now let's say I paid 10,000 rupees premium, 2,000 I transfer to P&L, surrender value. Surrender is 8,000. I want to record the JLP asset at 8. I transfer 2,000 to P&L. JLP asset in the balance sheet is 8,000. Usually we were transferring 10. No, I want to still write 10. So what do? 8,000 from profit, I will take it and then call it reserve. If you had not done that, profit would have been shared to partners. I'll take profit of 8,000, call it JLP reserve. Why? Asset side there is JLP 8,000. 2,000 is transferred to P&L. 10,000 premium paid. 2,000 transferred to P&L. 8,000 in balance sheet asset side. So what do? P&L you wrote only 2. They will take 8,000 from P&L and create JLP reserve. So total impact on P&L they want to write 10. Appropriation of profits here. So in the balance sheet, asset side JLP 8, liability side JLP reserve 8. So when this gets adjusted, this reserve is no longer required. Close this reserve by transferring to partners in profit sharing ratio. What do you do if there is general reserve in P&L account on admission or retirement? Close it by exactly do like how you treat any other reserve in balance sheet. Exactly treat like how you treat any other reserve in balance sheet. That's JLP. Everyone's clear? Very good. Shall we discuss death of a partner now? Come to death of a partner. I would do question. This is again something that we discuss in detail. I'll make you do one question with all the possible journal entries. When it is treated as expense, when it is treated as asset, when you treat it as reserve, what would it happen? Journal entries for each year over 4 years, and then we'll do same thing in couple of cases. So this is about how many? About 600 lines. About easily it will come to about 20 pages in your book. 600, 30 lines no, in your book on page. 600 by 30 is 20 pages you would write in the notes. So it's crisped out to 5 minutes. Okay, don't judge. JLP. No, it is big. We are discussing it in crisp because it is marathon. Okay. Now let's quickly see the topic of death of a partner. Death is exactly similar to retirement. You know what is uniqueness about death? Retirement can be planned, death can't be. Sir, it can be planned, then it is called murder. So when a partner is retiring on 17th of December, you can tell, I agree, we have a not nice relationship and we are in slight bit of fights. But let's wait till March. Let's bear each other till March. On 31st of March, when our financial statements are ready, let's decide what to do. Let's do the retirement of partnership. Either we'll dissolve the partnership, or you retire, or I will retire. I will do business on my own. You can do that. If someone is dying in December, can you tell, please don't die. Die on 31st March. It will be easy for us to compute interest on capital, share of profit. You can't tell that. And someone is on deathbed on 31st March. You're like, please die today. Yeah, don't survive till 2nd or 5th of April. By 31st of March, balance sheet ಮಾಡ್ತೀವಿ. ಮತ್ತೆ 5th of April, we should do revaluation and one more balance sheet. Please don't do this to us. Please die. If you want, I'll help you. No. You get that? That's not allowed. So usually death can happen on a random date also. So in that case, the deceased partner is entitled to share of profit, interest on capital, interest on drawings, salary, remuneration, everything till the date of death. Everything till the date of death. And some cases may partnership form will tell, in spite of the partner dying in the middle of the year, we will continue to give him all the benefits till the end of the year, as if he was there as a partner. Just not to be tormented by the soul of the dead partner, they might end up saying that. We have one question of that type also. So in that case, do it till the end of the year. It's much more easier. But I want to draw your attention towards very important point. Number one, whenever the share of profit is given till the date of death, it is computed on estimated basis, not actual basis. Why? P&L account will be prepared only at the end of the year. On an estimation, considering the previous year's profits, we estimate the profit for current year. How can we do it? There are two bases. One is time basis, other one is turnover basis. What is time? What is turnover? Time. Let's say after 3 months in the current year, partner died. So what do? We take last 3 years or last 4 years or last year's profit, or we can take average profits. Multiply it by 3 by 12. Imagine what would be the profit for the first 3 months. So you do into 3 by 12. Last year's profit into 3 divided by 12, or average profit into 3 by 12. That is time basis. What is turnover basis? Turnover basis means last year profit, last year turnover. This year turnover till the date of death. Proportionately we'll find. Last year profit by last year turnover, you get profit percentage. On current year turnover till the date of death, we multiply that percentage to find the proportionate profit till the date of death. Question will mention how to do. It will be given in the partnership deed. It will be given in the partnership deed. If the partnership deed doesn't mention what to do, then you would have to give it on the basis of time. We'll assume that the profits are evenly spread throughout the year, no seasonal business, and we do it. And this money, whatever is computed, will be given only to deceased partner. Deceased partner's capital account will be credited by debiting P&L adjustment account or P&L suspense account. We debit it to P&L adjustment account or P&L suspense account. That P&L adjustment or P&L suspense account, what is debited, will appear in the partnership balance sheet on the asset side. On the date on which the partnership firm's P&L account will be prepared at the end of that year following the death. In that year, once they arrive at the profit, first they deduct this money which is already paid to deceased partner. Balance of the profit will be shared between the continuing partners in their existing profit sharing ratio. Got this? It will be written either to P&L adjustment or P&L suspense. Got this? This is one point. The next point that you should know is para 35. Sorry, para 37. What is para 37? This doesn't just apply to retirement. This also applies to 37. Sorry, this also applies to death, retirement and death, both, not para. Accounting standards ಮಾಡಿ para ಬರ್ತಾ ಇದೆ. Section 37 of Partnership Act 1932. What does it say? It says something very simple. If in case a partner retires or if in case a partner die, you need to mutually agree about the terms of settlement. You should agree upon the terms of settlement. You should tell him this much is your capital, this much is your reserves, this much is your goodwill. Totally we owe you this much. We will give it to you right now, or we'll give 50% now, 50% after 1 year. For that loan, we'll give you 10% interest. Some terms has to be agreed upon, either by the retiring partner or the deceased partner's representative, legal heir. If in case you don't decide any of such terms and you don't settle, then that deceased partner's representative, that is executor, or the retiring partner will be eligible to percentage of profit proportionate to the amount outstanding or interest at 6%, whichever is beneficial to them, not to firm. You get it? So let's say one partner died, total amount payable to that partner is 2 lakh, not capital. Let's say capital is 1 lakh 50, but amount payable is 2 lakh. Other two partners are there, no, their capital is 1 lakh each. Three partners, 1 lakh, 1 lakh, 1 lakh. Got it? Partner A died. Partner A's share of profit, reserves, goodwill, everything together comes to 2 lakh rupees. You get it? That A, B and C did not decide to give any money to A's legal heirs. At the end of the year, let's say firm makes 50,000 rupees profit. In that 50,000, the total money is B 1 lakh, C 1 lakh, A 2 lakh. So half of the firm's money is for A's capital, no, A's owing, no. So in that 50,000, 25,000 should be given to A's legal heirs, or on the 2 lakh 6%, 12,000, whichever is beneficial to them. So they would take that share of profit as if that 2 lakh rupees what was owed is capital. Whichever is beneficial to them should be given to them. This is if the terms are not decided. What if the firm says to Mr. A's deceased legal heir, we will give you full money after 2 years at 5% interest, and the legal heirs agree, then they'll get only 5% interest. They'll not get share of profit. Are you getting it? Everyone? Fantastic, guys. This ends your death of a partner. Can we now march into dissolution of partnership firm? Hell yeah. Very good. Come on, let's discuss dissolution of partnership firm. There's a sheet missing in this. Give me one moment. Come on, guys. Let's quickly see dissolution of partnership. Okay, in the case of dissolution of partnership, we can divide the topic into two parts. So, in the process of dissolution, there are two important things. One is the process of accounting. Second one is the actual process of dissolution. See, what you did in your class 12 or second PUC is realization account, partners capital account, and not bank account. It's getting dissolved. Sorry, not balance sheet, bank account. Am I right? So you do that here as well. But there, what are you doing? You're selling all the assets, paying all the liabilities, and whatever is left is paid to partners. I'll repeat: you sell all the assets, pay all the liabilities, balance money you pay to partners. That is realization approach. Have you done that? Now, this is what is done after the entire realization process is happening, like it's completely over. Now, accountant is given information that all the assets are sold, all the liabilities are settled, this much money is paid to partners, then we write that entry. But that's not how it will actually happen. I have 15 assets, 10 liabilities. When I need to sell all my assets, no, all the assets will not get sold once. Some assets might get sold now, some assets might get sold after a month. And I will not tell. I will sell all the assets. After I collect money from all the assets, then I'll start paying liabilities. No, one asset sold, with that asset, whatever money I realized, how much ever liability I can settle, I'll go on settling. One more asset sold, with that money again I'll go on settling liabilities. So things are happening simultaneously. In this simultaneous process, whatever is happening, you record it in one worksheet. That worksheet is piecemeal distribution. This worksheet acts as the basis for doing dissolution. Get it? So should always first to do piecemeal distribution, then that piecemeal distribution worksheet, whatever you have, keeping that worksheet as the basis, you do accounting under realization. Whatever you did in second PUC, in that question used to be piecemeal distribution data that you used to do accounting. So even now when you revise the topic of dissolution, always first finish piecemeal, then you should do realization, because practically that's how it works. Get it? So what is piecemeal distribution? Piece you eat the meal. It's not like you take one burger and then like, you can't eat, like you're not an anaconda, no, you cannot swallow it. So even if you keep it, you cannot open your mouth, you cannot move your jaws. If you try to swallow, you will get stuck in the throat, you might choke and then you might die. Don't try eating full burger in one time. So what do? You cut into pieces. You take one knife, cut the burger into small portion, poke it into the fork, and then eat. You do that? No. Okay. But that's how you're supposed to eat. Get it? Burger has to be eaten with fork and knife in hand. Yeah. We don't eat, but that's how it should be eaten. Now focus. Please focus. That piece meal means entire meal is broken into small pieces. We consume it one small piece at a time. We sell the assets small, like one asset at a time. Use that money to pay the liabilities. Now, order of selling of assets we don't decide. Whenever people come to buy the asset, whichever asset they would want to buy, they will buy. I cannot tell till the time I sell my land and building, I won't sell my inventory. No, someone is willing to buy inventory, I will sell inventory. Someone is willing to buy my investments, I will sell investments. That order of sale is depending upon the market. Order of payment of liabilities, I decide which liabilities should I pay first. First, I should pay all the outside liabilities. After I pay outside liabilities, I should pay partners. You got the order? First, I should pay outside liabilities, then I should pay partners. Partners, when I pay also, I won't straight away pay partners' capital. First, I will pay anything other than the partners' capital, which is supposed to be paid to partners, like partners' loan. After partners' loan, I will pay partners' capital. Did you get this? I will first sell the assets, take the money, pay my outside liabilities. After outside liabilities, I will pay partners other than capital amounts, and then partners capital. Now, selling the assets is not in my control. When I pay liabilities, what order should I follow to pay liabilities? All the liabilities have same rights. If some liabilities have secured charge, that liability will be paid first using the consideration from the sale of that specific asset. But you don't have such questions here. You can relax. All the liabilities have equal rate. Let's say I have 10,000 rupees from the sale of assets. I have creditors, I have bank overdraft, I have loan. All the three is, let's say, 20, 30, 40. This 10,000 cannot be paid to one single person. 10,000 should be proportionately paid to them in the ratio of outstanding. 20, 30, 40 outstanding. 2:3:4 ratio, I share this 10,000 to them. That you understood? Proportionately I pay. Once all the liabilities are over, then I start paying my partners outstanding balances other than capital. Finally, I pay my partners. When I'm paying my partner, to compute the amount to be paid to partners, I have two methods. To compute the amount to be paid to partner, I have two methods. Two methods are not there at the beginning. Piecemeal distribution beginning, sale of assets, no method. Paying outside liabilities, no method. When you're paying the leftover to partners, then there are two methods. First method, highest relative surplus capital method. Second method, maximum loss method. First method, highest relative surplus capital method. Second method, maximum loss method. This is only method to compute the amount. Whether you follow this method or you follow this method, answer will be same. Just the way we see it, the perspective that we see it from is different, but the end answer is same. You should definitely try solving same question with the same data under both the methods, and then you get one nice holistic understanding of this. Is that okay? Now let's see certain important points with regard to accounting for this. Now we'll do HRCM, little bit of theory also. Before that, I'll finish off one other part of theory that is supposed to be known to all of you people, which is basically Garner versus Murray. Right? This is in the case of insufficiency in firm. Insufficiency means what? You sold all the assets, you got the money. That money, after you pay liabilities, you pay to partners. If you paid all the liabilities, money left over to pay the partners is lesser than capital, then it is realization loss. Then it is realization. But after you sell all the assets, the money that you got is not sufficient to pay liabilities. Then that liability has to be paid by partners. That is insufficiency in firm. Insufficiency is not money not being available to pay partners. It is money not being available to pay liability. In that case, partners would have to bring money. Who should bring? How much should they bring? That's what we're trying to learn here. See, when realization of assets is insufficient to pay firm's liabilities, then partners are liable to pay by bringing additional capital from their private estate, unless it is limited liability partnership. LLP alla andre every partner should bring. So who should bring? Solvent partners should bring. Insolvent partners cannot bring. So there are cases, all the partners are insolvent, all the partners except one partner is insolvent, more than one partner is insolvent. What to do in all of the cases? All the partners are insolvent. Then what? Don't transfer that liability to realization account. Why? You can't settle only, no. If all the partners are insolvent, don't transfer that liability to realization. Usually you go by the rule, no, transfer all the assets, transfer all the liabilities to realization. If you have no intention of settling, don't transfer to realization account. You cannot pay them. What do? You say you sell the assets. Am I right? From that assets, first pay realization expenses, then pay secured creditors, then pay unsecured creditors, then partners loan, and lastly partners capital. But you don't have money to pay, no. At the point at which you can't pay, from that point, whatever the money is supposed to be paid but you can't pay will become deficiency. Total all those liabilities what you can't pay, call it deficiency. Transfer the deficiency to capital account. Capital account will get closed. Liabilities accounts also will get closed. Deficiency means what? So much money you should pay but you can't pay. So it is like profit, not profit. It is like profit. It is like loss because you don't have money to pay. But because you will not pay, it is treated like profit shared to partners capital and then close. Got this? Yeah. Then if all the partners except one partner is insolvent, that's the very big worry. Everyone is among 3-4 of them. No, everyone is bad except one person. That one person who's good will get screwed now. So what should you do? That one person will recover or will bring in money from his private estate. Will bring in money from his. Understood? What if more than one partner is solvent? Then we should apply Garner versus Murray. Garner versus Murray hange haakbardu. For applying Garner versus Murray, you should just check all of this first. When more than one partner is, if only one partner is solvent, he should only bring, no Garner versus Murray. If all of them are insolvent, no one will bring, no Garner versus Murray. Garner versus Murray is applied when all the partners, more than one partner is solvent. More than one partner is. So what is Garner versus Murray? So there were 3 partners, Garner, Murray and Watson. Long ago, 14-15 times. When this is in UK. So no, 1730 or something. So in 17th century. So when these 3 people were doing business, what happens? Partnership firm will go into loss. Watson is the one who will go into loss. So because Watson goes into loss, Walter goes into loss. When Walter goes into loss, the money that they realize from the sale of the assets will be insufficient to pay liabilities. So because of unlimited liability, Garner and Murray were asked to bring in money. In that case, what happens? Murray is actually solvent and Garner is solvent, but Murray had debit balance in his capital account. The partnership firm, his capital was negative. So Murray told his capital is negative, he doesn't have to bring money. Garner told you are having enough private estate, you should bring money. So this Walter's liability, whatever was there, deficiency because he's insolvent, should be borne by Garner or Murray. Garner and Murray were fighting. So Garner and Murray went to court. Court gave judgment. How should Garner and Murray deal with this case? That's Garner versus Murray case. Actually, this is known by the name Garner versus Murray. This should be known by the name Walter. Because of Walter's insolvency, this entire thing happened. Garner, Murray, both of them were solvent. Murray had debit balance in his capital account. Garner had credit balance in his capital account. Court gave the judgment saying that in the case of insolvency of one of the partners, solvent partner should first to bring in their realization loss in cash, and the deficiency of the insolvent partner should be borne by the solvent partners with credit balance in their capital account. With what balance? Credit balance in their capital account. In this case, Murray and Garner, both of them are solvent. Walter became insolvent. Walter's share of loss he cannot bring. That should be borne by Garner and Murray, who are solvent partners. But Murray had debit balance in his capital account. So Murray did not bring anything. He became a safe person. Only Garner had to compensate for Walter's loss. Get what I'm trying to tell? Before you ask someone to get money from outside, you should use the money that is there in the firm. In the firm, Garner's capital is there. No, Garner's capital will be used to write off Walter's loss. Had to be rich here. You got what I'm trying to tell? And in this case, the three partners were there. One person insolvent, one person debit balance. Garner bore the entire thing. Let's say there are four partners. One person became insolvent. One partner had debit balance. So these two should bear the loss of this guy. This guy's loss, this guy will bring. These two people who should bear, no. In what ratio will they bear? Not in PSR. The ratio of capital. In the ratio of what capital ratio? Depends. Are you maintaining fixed capital system or fluctuating capital system? If you're maintaining fixed capital system, fixed capital ratio. If you're maintaining fluctuating capital system, after all the adjustments, but just before making dissolution, after all other adjustments, but just before making dissolution, whatever is the capital in that ratio, those two continuing partners with the credit balance in their P&L account, sorry, capital account will bear. What if there is a partner with credit balance in his capital account but is insolvent? Then he will not bear. Only solvent partner with the credit balance has to bear the loss of the insolvent partner. Did you understand this? And that's with regard to Garner versus Murray. And there is one question on Garner versus Murray in our RTP. So yeah. Current account ratio will not matter. Current account will not impact entire G versus M anyway. Doesn't matter at all. Current account can have credit balance. Current account can have debit balance. It's not taken into consideration. Fixed capital only will be considered. Good question. We will take the ratio of the capital after that. No, when I say solvent partner with credit balance, it's after all the adjustments. After all the adjustments, whatever capital is there, that if it is credit, it should bear. If it is not, then is not going to. Just before dissolution, after all the adjustments. Any other question? Okay. Commission payable to partners for the process of peace in the piecemeal. You do whatever is the amount available. Let's say there is three partners, A, B, and C. A is entitled to commission of 10% on the amount settled to other partners. After you sell all the assets, pay all the liabilities, amount is available to pay partners, don't pay them. Let's say 1 lakh is available. In that 1 lakh, what will be used to pay partners? A is entitled to 10% commission. Don't do 1 lakh into 10%. Why? If you do 1 lakh into 10%, 10,000 will go to partner A. 90,000 is paid to partners. So you should get remuneration on 90, no? So you should do 10 by 110. 1 lakh rupees is there. That will be paid to all the three partners. On that 1 lakh, whatever money we pay to partners, in that you should get 10%. Do 1 lakh into 10 by 110. 9,090 rupees is the commission what he should get. I'll tell you how. 1 lakh is the amount available to pay to partners. Whatever money is paid, you should get 10%. Money available 1 lakh. Am I right? Do 1 lakh minus 9,090. 91,090. 90,000. 90,910 will be paid to partners. On the 10% money into 10%, you get 9,091. He gets that. Into 10 by 110. Amount available into 10 by 110. Commission by 100 plus X. You give it to him just like any other thing. Realization account debit to partner. Realization account because it is expense. Partner because it is supposed to be paid to him. Then partner account debit to bank. Realization account debit to partner, partner account debit to bank. Or right, realization account debit to bank, paid to him. Balance of money shared between the rest of the partners. Understood? The problem is it's 6:30 now. If I do that question, let's say it will take 30 minutes. It will go to 7. I have entire company accounts to revise. So on a later part, if you want, I can try. But for now, I am sorry, I'm saying 12th one from dissolution. No, I can definitely show it to you. 12th one, right? So this is question number 11. Right? 12th one. 12th one is the answer printed in the material. Okay, it's missing. I can solve it to you on a later date, but not right now. I still have to discuss highest relative surplus capital. Is that okay? Okay. Very good. Okay, done. Shall we discuss this? What were we discussing? Piecemeal? No, we should do one question from RTP. Shall we do that question from RTP? Tell ya. Shall we? Please say something, guys. What happened? Why you guys so silent? What happened? Shall we do this dissolution question? Neptune, Jupiter, Venus, Pluto. 3:2:1:1. Say something. Hey, the response positive ಆಗ್ತಾ ಇಲ್ಲ. You guys are so dull and quiet. Sir, ಇಷ್ಟೊತ್ತೆಲ್ಲ ಕ್ಲಾಸ್ ತಗೊಂಡ್ಬಿಟ್ರೆ ಇನ್ನೇನು? Hey, what do I do? I am not teaching CA inter syllabus. I am teaching people foundation syllabus only. Your syllabus, your favorite lovely syllabus. Yeah, can I solve this? Bye bye. How many of you? 2, 3. Bye. Hey, we'll proceed. No, we'll continue this further and then do. I don't think we have any time after today to do it. After this, if we have to do, we'd have to take some time on 24th of December. 24th, okay? Okay, then we'll take 26th of December to do company accounts. Huh? Will 20? Here only, no. Should we extend it slightly? Kashtano, Sukano, we'll do one question on dissolution. Company accounts will do an overview, fatafat, and then finish it. Enu pending it beda. What do you say? What do you guys say? Come on, guys. Let's do this question. Bega. But I will take more time to do that. Not worth the time. I will do it later for you people. You get what I'm trying to tell? I will do it, but not right now. I hope you understand. No? Come on. Shall we start solving this? Let's now solve question number 14 from our RTP January 2025. This question is on dissolution of partnership. It also has an adjustment of Garner versus Murray. Shall we start? Start. Neptune, Jupiter, Venus and Pluto had been carrying on business in the partnership, sharing profits and losses in the ratio 3:2:1:1. They decide to dissolve the partnership on the basis of following balance sheet on 30th of April 2024. So capital account, Neptune and Jupiter have credit balance of 1,60,000. So I'll open my partner's capital account. On the credit side, I will write by balance down. Neptune's capital is 1 lakh. Jupiter's capital is 60,000. Did you understand this? After this, I have general reserve of 56,000. General reserve and capital reserve, 56 and 14. I will share it to both the partners in profit sharing ratio. Shall I? Sorry, all the partners, 4 of them in profit sharing ratio. By general reserve, 56,000. Their profit sharing ratio 3:2:1:1. 3 by 7, 2 by 7, 1 by 7, 1 by 7. 56,000, 3 by 7, 3 by 7, 2 by 7, 1 by 7, 1 by 7. Please tell me how much is it? 24,000, 16,000, 8,000, 8,000. Shared general reserve. Let's also share capital reserve. How much is their capital reserve? Capital reserve is 14,000. 14,000 in the ratio 3:2:1:1. 14,000 into 3 by 7, 14,000 into 2 by 7, 1 by 7, 1 by 7. 6,000, 4,000, 2,000, 2,000. Have I shared both the reserves? Then come to sundry creditors. The sundry creditors and mortgage loan has to be settled, 20 and 80. Liabilities will have credit balance. In order to settle them, I will debit them. I will not give them cash right now because I don't have so much, but I will keep them in line in realization account. Entry is liabilities debit to realization. Liabilities are supposed to be closed, so I will debit them and credit realization. Entry is liability account debit to realization. In realization account, I'll write by sundry creditors, by mortgage. How much sundry creditors? 20,000. How much mortgage loan? 80,000. Did everyone understand this? After this 20 and 80, now let's go to asset side. On the asset side, I have premises, furniture, stock, debtors. All of these assets are to be sold. So I'll close them and transfer them to realization. Anymore, they are no longer assets. They are all items for sale. So asset account will be credited and realization account will be debited. In realization account, I would write 2 premises, 2 furniture, 2 stock, 2 debtors. How much premises? Lakh 20. Furniture 40. Stock 1 lakh. Debtors 40. You all get this? After I write these assets, you might be wondering, sir, why not bank? Bank balance will not be transferred to realization. We'll open a separate account. There we will write the sale consideration from other assets, settlement to liabilities, balance paid to partners, all of it. So I'll open a bank account and there I'll write on the debit side balance brought down 8,000. Observe my bank account. On the debit side balance brought down 8,000. Understood? What's after this? Capital overdrawn. Basically there is debit balance and capital of Venus and Pluto. Got it? So in my capital account, I will write 2 balance down. How much is Venus? How much is Pluto? 10 and 12. Debit balance, negative balance in their capital account. Understood this? What is after this 10 and 12? Assets were realized as under. These monies, whatever we receive, bank balance will increase. Bank account will be debited, crediting debtors, sorry, crediting realization. Because all these assets are already transferred to realization. How much? Bank account debit to realization, add everything. 24 plus 60, 84. 84 plus 16, 1 lakh. 1 lakh plus 90, 1 lakh 90. So in your bank account, you are going to receive money for debtors, stock, furniture, premises. How much? 1 lakh 90. Individually, you can write the assets in the inner column. In bank account, I have written to realization. In realization account, I would write by bank account. What is it for? Debtors, stock, furniture, premises, realized. How much? 24, 60, 16, 90. Everything put together, 1,90,000. You all get this? Very good. What's after this 1,90,000? Expenses of dissolution amounted to 4,000. The journal entry for this is realization account debit to bank. Any expense on realization should be debited to realization. This is paid. 4,000 rupees bank balance will reduce. In my realization account, I would write to bank account expense on dissolution 4,000. In realization, I have written to bank. In bank account, I will write by realization. How much is that? 4,000. Everyone got it? What is after this? Further creditors of rupees 12,000 had to be met. We had to pay 12,000 rupees. When we pay 12,000 to creditors, entry is usually creditors to bank. Here creditors is already transferred to realization. So instead of writing creditors to bank, I will write realization account debit to bank. I would write here to bank account. This creditors paid. How much? 12,000. Got this? In realization account, if I write to bank, in bank account I should write by realization. I paid towards creditors. By inner column, you might have to pay that mortgage loan also. I would write it and then together write it outer column. If you want, you can individually write it and again write to bank. You can choose to do that. Then come to fourth adjustment. General reserve like capital reserve was built up by appropriation of profit. No one cares. So that's it. They have not told anything about mortgage loan. I will assume that it is also paid. Shall I? Tell ya. At what value? Same value. You can write like this separately. Or you can choose to write this mortgage loan here only 80,000 and write 92,000 here. Your choice. In realization account, I have written to bank. In bank account, I'll write by realization mortgage loan of 80,000 paid. 80 and 12. You can write them together 92 also. Are you getting it? Hell yeah. Let's check once if all the assets are sold. Premises, yes. Furniture, yes. Stock, yes. Debtor, yes. Higher price, lower price, doesn't matter. Sold. All the assets have realized money. All the liabilities have realized money. In case there is a asset, but they don't tell anything, to assume that it is sold for 0 rupees. If there is an asset, but they don't tell the value, it is assumed to be sold for 0. Why? Conservatism. However, if there is a liability and if they don't tell it is sold, it is assumed to be settled at book value. Why? Conservatism. Expected to be settled at book value. Expected to be settled at. Understood? Asset not mentioned to be sold is assumed to be sold for 0. Liability not mentioned to be sold is sold at book value. Did you guys get this? Fantastic. By this, we are done with our accounting, whatever question data is provided. You are required to draw realization. Almost ready. Partners capital account. Oh, agide. Bank account. Nice. Assuming that Venus becomes insolvent. Very nice. Good one. Good one. Venus becomes insolvent and nothing was realizable from his private estate. Wow. Apply principles laid down in Garner versus. Shall we do it? First, close our realization account. Identify profit or loss. Obviously, there will be loss. Total is more on debit side. How much? 120 plus 40, 160, 260, 3 lakh 4 plus 12 plus 80. How much? 3 lakh 96 on debit and credit. See, if she sits away from you people, she becomes smart. So 20 plus 80 plus 1 lakh 90. So 2 lakh 90, if you deduct, what do we get? This is realization loss to be shared between partners Neptune, Jupiter, Venus, and one item which was a planet long, long ago. Yeah, what is their ratio? Ratio of sharing their profits is 3:2:1 by 1. Sorry, 3:2:1:1. 3 by 7, 2 by 7, 1 by 7, 1 by 7. Use this to share 1,06,000. 45, 429, 30,286, 15,143, 15,140. Half of this here to do. So in realization account, if you write by partners capital account, in partners capital account, you will write to realization. How much? 45, 429, 30, 286, 15, 143, 15, 140. Which amount? Further, meanings after sale of these assets, creditors were supposed to be met. Yeah, further, do you really think you should take 20, whatever creditors is here to the extent of, what do you say, a trade? No, no, not this question. Sorry, I scrolled too much. You guys have taught me to scroll. Yeah, 20,000. You're saying that after the 20, further 12,000. No, it's 20,000. Sorry, it is 12,000 should be met. Meaning 20,000 is there, no creditors. 12,000 has to be paid. It's not 32,000 to be paid. Okay, further 12,000. It's not further, it's further 12,000 to be met. I am sorry. But further creditors of rupees 12,000 had to be met means not beyond 20,000. Just to make you people feel little nice. Just to make you little nicer. 14. However, I am also a human being. I can also do mistakes. No, let's just check. No, I am not feeling bad at all. It's all good. All in good faith. Let's check. Nothing wrong in checking. No. 14th one, alva. 14th one. See how much is paid towards creditors. Oh, 32,000. So they paid 20 plus 32. So further over and above that 20. Creditors are 20. We further pay 12 over and above that 20. Sorry, I'm not that great with English. No, I am sorry. When if you are wrong, I would have made fun of you. English medium, hey, English, I would have made fun. So I will take this one. Yeah, sorry. Further creditors of 12,000 met in the sense 20,000 creditors plus 12,000. Okay, let us take 32,000 here. So it is 20,000 plus 12,000. Balance sheet 20,000 plus additional 12,000. Is that done? Well, yeah. So then their profit also would be incorrect. No, it will be not 1,26,000. How much is it that they have? They would have had a different amount. 1,26,000 only. But how much did we get? 1,26,000. No, now it's 1,26,000. No, we took different. Let's change it. 1,26,000 into 3 by 7. 1,26,000 into 2 by 7. 1,26,000 into 1 by 7 and into 1 by 7. Is the amounts correct now? 54, 36, 18, 18. Am I right? This 54, 36, 18, 18 I have written in my realization account. Okay. See, they would have also got 54, 36, 18, 18. 54, 36, 18, 18. Yes. Then there is insolvency of whom? Venus. So Venus cannot bring his share of loss. Other partners will bring. So Venus is which partner? The third partner. Neptune, Jupiter and Pluto will bring in their loss on realization in cash. Further, whatever loss is there will be borne by Venus is insolvent. No. Whatever is the balancing figure in Venus column will be borne by Neptune and Jupiter in their capital ratio of 10 is to 6. That is 5 is to 3. Pluto will not bear. Why? Pluto is having debit balance in capital. Venus is the one who is insolvent. So Venus insolvency will be borne by Neptune and Jupiter in PSR. Sorry, in capital ratio. First, let's write their share of capital. Sorry, share of revaluation loss that they bring in cash. Shall we write that? Yes or no? How much is the money that they bring? They will bring their realization loss in cash, no? So I would write here by so I would write here by bank account. By bank account. What is this for? Realization loss brought in cash. This is like additional capital. That much money, though there is sure shortage, alwa. So they will bring so much money. When they bring in so much money, Neptune's realization loss is how much? We had also got the same number, no? How much realization loss? 54, 36, 18. What had we got? 54, 36, 18. Neptune will bring 54,000. Correct? Neptune will bring 54,000. Jupiter will bring 36,000. Venus has to bring, but Venus can't bring. Why? Can't. As he or she, don't know. Why? Okay. Venus cannot bring 54, 36 and 18. In our partner's capital account, we have written by bank. In bank account, what should I write? In bank account, I should write no. I would write it as 2 to partners capital account. How much money would they bring? Whom am I talking about? I'm talking about first partner is Neptune. Jupiter. Who else brings? Pluto. Pluto sounds like a name of a dog. Somewhere it's ringing. I'm not able to catch where. Have you ever come across a dog by name Pluto? Aina. In that, he'll be calling the dog as Pluto, no? Oh, yeah. See, there is there. How much money do they bring? 54, 36, and 18. Shall I write 54, 36, and 18? 54,000, 36,000, 18,000. 1,08,000 they brought in cash. Am I right? So we've also accounted that. Then what do we do? Identify the amount that Venus is in loss with. Amount that Venus can't bring. Are you getting it? So how much is the money in Venus account which is deficit? Check the total in Venus. 10 and 18. Here it is 8 plus 2, 10. Can I say 7,000? Here what do they do? 18 and 10 and 18. 28 and 8 and 2. We also had 10, same no? 28,000. And I'll write 28,000 here is 28,000 minus 10,000 is how much? 18,000. This has to be borne by Neptune and Jupiter in the ratio 1 lakh is to 6. 1 lakh is to 60,000. That is 10 is to 6. Can I say that efficiency borne under G versus M? So I would write here to Venus capital. To here I write Neptune and Jupiter. Here I'll write 2 Venus. How much? That deficiency is how much that we got here? 18,000. So we would have to bear 18,000 in the ratio 10 is to 6. Okay, I have simplified it to 5 is to 3. It's okay. 10 is to 6. 10 is to 6. So can I say it is 18,000 into 10 by 16? It is 18,000 into 6 by 16. $18,000 into 10 by 16. 6 by 16. Understood this? 11,250 and 6,750. Done. Then after this, any balance that is there, it has to be routed through bank account if there is excess money or shortage. By this, Venus capital account will get 0. Adjusted capital just before dissolution means capital, this capital. Let's say plus general reserve or plus capital reserve. Understand, general reserve and capital reserve, whatever you add, it is in PSR. Same amounts in the same ratio are getting added. If you take after addition, it will still come to be the same ratio. We will check. Now, take 1 lakh, it will be. You get what I'm trying to tell? So don't take this plus reserves wala adjustment. If you still want, you can actually take that. I don't think here also they would have done that. Distribution of loss. It will come down to be same. Oh, it's the ratio is different, no? Ratio is different, no? Capitals are not in ratio. Okay, then wait. Then we'll not do this 10 is to 6. Just before dissolution, we'll find. Usually in this kind of questions, they'll give the ratio to be same. So because the ratio is not same, we'd have to compute the ratio. What should we do? Compute the ratio. Shall we compute the ratio? Shall we? Okay. So working note 1. Computation of partners. Okay, who are the partners? Neptune and Venus, no? Venus capital just before dissolution. Sorry, I did not notice that. What is it? Neptune and Jupiter. Sorry. Computation of Neptune and Jupiter capital just before dissolution for the purpose of that ratio. Take your Neptune and take your Jupiter. So help me. What is their capitals? Capital, can I say it is 1 lakh and 60,000? 1 lakh and 60. Then we are going to add general reserve. I was under an impression that the capitals are in PSR. So even if you add, it won't take. Later I'll tell you, see, even if you take, it will come to be same and the. But no, is different. 24, 16, 6 and 4. 24, 16. And then here 6,000, 4,000. What else do we have? Just before dissolution, 24, 16, 6 and 4. That is that realization loss that they bring in. That will not have any impact on the amount. That will be the same. Then what do we have? 54, 36 here, 54, 36 here. If you want, you take this 54, 36 and you take this 54, 36 as minus. You add 54 and 36. You deduct 54 and 36. It will end up becoming the same. See, have they taken? No, they have not taken. So what do we do? If you want, I will add here 54 and 36 additional capital bought in to make that realization loss good, and then deduct 54 and 36 towards that realization loss. So what do I have here? 1 lakh plus 24 plus 6, 1 lakh 30, 60 plus 16 plus 4, 80. So can I say the ratio for sharing Venus or deficiency of Venus? What is the ratio for sharing deficiency of Venus? Don't try to simplify it further. Why? 13 is a prime number. 13 is to 8. Here with 13 is to 8, everyone. So how much is that Venus deficiency? 18,000, no? 18,000 will share it between them in the ratio in between N and Gen in 13 is to 8. So we've done working note on this. Yeah, can I say 13 by 21 and 8 by 21. Thirteen by 21, 11,143 and 6,857. After this, any difference that comes in this ledger will be usually based on bank balance. They should bring so much money. Get it? Only Venus is insolvent. You cannot say, sir, what if Pluto, Jupiter, or Neptune can't bring? That is the reason they're called solvent. That is the reason they're called solvent. If they say, sir, but Neptune can bring only to one extent, then balance money Jupiter only should bring. Sir, Jupiter also can't bring. Then all the partners are insolvent. To the extent they can bring, they'll bring. Balance will be deficiency. Got it? Now we'll close Neptune's column first. Take Neptune's total 1 lakh 24, 6 and 54. 1 lakh 24, 1 lakh 30, 1 lakh 84,000. Right, 1 lakh 84,000 here is well. 2 minus 54 and minus 113. What do we get? 1,18,857. How about Jupiter? 60, 76, 80, 116. 116 minus 42,857. 73, 143. Venus column is already closed. This is only balancing figure in Venus column. Pluto, it is 8 plus 2. 20, 28 here. Here it is 30. See, he will bring money only to make his part of the capital good. He will bring 2,000 rupees. Whereas Neptune and Jupiter will take home 118,857 and 73, 143. After bringing 54 and 36 each. Are you getting it? So let's first write Neptune and Pluto's balance. Okay. It is partners capital account debit to bank. From bank, we are paying money to Neptune and Jupiter. How much money to Neptune? 118,857 and to Jupiter 73, 143. And Pluto is bringing in money. How much money is Pluto bringing? Pluto is bringing 2,000. And if I write Pluto's 2,000 here, so our bank account should get closed. Why? We don't have any payment to do. Partners' capitals are settled. Partners' capital account is closed. Check the balance here. 190 plus 8 plus 1 lakh 8 plus 2. 1 lakh 10, 2 lakh, 3 lakh, 3 lakh 8,000 on the debit side. Take it out on the credit side. 4, 16, 96, 96. I can't do. You guys do it. Had a long day. Calculator. Parta illa. Something is missing. What did we miss? Yeah. Oh, 20,000. Great. Oh, we changed it there. We forgot to change it. 20,000 extra we paid, no? Or I'll write here only. Oh, okay, I'll write here. 20,000. No, old balance is 12. Balance sheet 20. 20,000 plus 12,000. Sorry, I should have done double entry. Balance sheet 20 plus additional 12. Thank you for spotting that. Yeah. 12 together 32. Done. This is end of our bank account. Dissolution. Could do this, and you can straight away take that capital if it is in ratio already. If it is not in ratio, take that capital plus reserves, everything. And realization loss, should we add? It will have no impact. You add realization loss. Sorry, deduct realization loss from capital. They bring in additional capital, same amount. So minus the same amount, add the same amount, it will come to be same. If you would want, still I would write that and show. Okay. That's the reason why we don't take it. Or however, we can say just before dissolution. No, realization loss will happen on dissolution. Got it? Then it is 7 o'clock happening. Go. Should I do little bit on our piecemeal distribution before we go in, or piecemeal distribution pay we did not do any question? There's no question in our RTP also. Or should I stick to company accounts? You don't want me to pay any attention on HRSCM and maximum loss? Video share madla. One question should be there. I will share one on HRSCM, highest relative surplus capital method, and one on maximum loss. What happened? Looking at, say bye to these two before you go there. Missing. Bye, Eli. Also. ಬರೋದಿಲ್ಲ ಅವ್ರು ನಾಳೆ ಮಾಡಿದ್ರೆ ನೀವು ಯಾರಾದ್ರೂ ಹೋದ್ರೆ ಇಲ್ಲಿಂದ ಅಲ್ಲಿಗೆ ಹೋಗೋವರೆಗೂ ನೋಡ್ತಾರೆ. Bye. So company accounts are company accounts. Shall we? Very good. Come on, yeah. Let's start with company accounts. You'll also leave. Come on, please. Okay. Company accounts. So there's one beautiful question which covers issue, application, allotment, call with forfeiture, calls in arrears, and reissue. There's one very beautiful question from our RTP. Once we do that, we'll get one good hold on that company accounts part. If you are okay and ready, we'll do it. Yes, sir. Bye. One second. Who and all wants to leave and getting late? Let's start with company accounts. Company accounts. Company wants to raise money. They have two forms of raising money. One in the form of shares, another in the form of debentures. In the form of shares or in the form of debentures, whenever they raise the money, they can collect the money not all for once, but in installments. That installments is application, allotment, call. At application stage, first we receive the money, then we transfer to capital. At allotment stage, first we transfer to capital, then we receive. At call stage also, first we transfer to capital, then receive. Entries will be bank to application, application to capital, allotment to capital, bank to allotment, call to capital, bank to call. And at any point of time, if in case we decide to collect something more than the nominal value, that will be called as premium. This premium will not be credited to share capital. It should be credited to another account called as security premium. Security premium account will be credited when we credit share capital. If application stage, you write bank account debit to share application, their premium will not be written separately. Credit share application account will include premium. Later, when we write share application account debit to share capital, we write to share capital, we credit to security premium there. However, at allotment stage, we write the entry allotment account debit to share capital. When we write to share capital, there only I write to security premium also. So security premium will be credited when share capital is credited. Did you understand? Then on this we did few problems. Then we understood something called as if in case we call and receive more money than what we actually should be receiving, that will become calls in advance. If we make a call and don't receive the money that we're supposed to receive, will become calls in arrears. From the company's perspective, that excess money received called as calls in advance is a liability. Calls in advance will be recorded as liability. On this calls in advance, company will pay interest of 12% to the shareholder. However, calls in arrears is the money that is called by the company but the shareholder has not yet paid. For the delay, the company will record this money as an asset, and on this asset, company will collect interest at 10% per annum from the shareholder. Got this? Calls in arrears is an asset, calls in advance is a liability. When you make the call and you receive extra, calls in advance, that will be credited. See, bank to share application, we received more money than the applications that we accepted. When you transfer share application to share capital, such excess money should be refunded. If you don't refund, you write it to calls in advance, which is liability. Understood? Now, you make the call, you write share allotment to share capital. Later, when you receive, you should write bank to share allotment. If you don't receive money, instead of writing bank, you write calls in arrears. Did you get it? On this calls in advance, you pay interest. It is expense. Interest account debit to cash, and that will be transferred to P&L. On calls in arrears, you collect interest, cash to interest, interest to P&L. This is at 10%, this is at 12%. This calls in advance, whatever is credited as a liability, it will stay as a liability till the next call. The next time call when you make, you write share call to share capital. Then when you write bank to share call, instead of writing bank to share call, you use that money from calls in advance. Only the excess money over and above calls in advance will be collected. Are you getting it? See, calls in advance can arise in application stage, can be used at allotment and call. Whereas calls in arrears cannot arise in application stage. Only when the money is received, shares will be allotted. At allotment, first call and final call stage, calls in arrears can arise. You get this? Whenever there is calls in arrears, we give them enough warning, we give them time, we give them notice. In spite of that, if they don't pay, then we choose to forfeit the share. What do we choose to do? Forfeiting the share is taking the share back from the shareholder. When you take the share back from the shareholder, such forfeiture will be cancellation of share. Once I take the share back from the shareholder, I have an option of reissuing it to another person. But remember, unlike the primary issue, which will happen only at par and premium and not at discount, reissue can be done at par, reissue can be done at premium, reissue can also be done at discount. Reissue can also be done at, but whenever we reissue the share at discount, such a discount on reissue along with the the money collected should ensure in total that the share is not issued at discount. Meaning what? The old shareholder had paid some money before forfeiture, new shareholder paid some money after forfeiture on reissue. Together, whatever the money we've collected should be equal to nominal value. Should be equal to, it cannot be less than nominal value. If in case it's less than nominal value, then that reissue is invalid. Can it be more? Yeah, it can be more. If it is more, that amount is profit. Other way of saying this is, how much ever money we collected from the old shareholder before forfeiture, such an amount can be allowed as discount on reissue to the new shareholder. Get this? Used to do kuti questions on this, you remember? So you written in the class, you can quickly revise this to get a good hold of it. And such excess money collected will lead to profit, and such profit should be transferred to capital reserve. I'll repeat. From the old shareholder, let's say you collected 6 rupees. On the new share issue, you should collect it minimum 4. How much is the minimum money you should collect? If you collect 5, old shareholder paid 6, new shareholder paid 5, together you collected 11 per share, then the nominal value per share is 10. That 1 rupee which is collected extra will become profit, which will go to capital reserve after the reissue. Got it? Let's say the old shareholder had paid 6, the new shareholder paid 11, together you collected 17. Not entire 17 and 10 comparison you should not do for profit. When the old shareholder was 6 is the maximum discount that can be given. New shareholder, I am collecting 11, nominal value 10 adre 1 rupee security premium, transfer to premium. 10 collected towards the share from new shareholder, 1 towards premium which went to premium, 6 collected from old shareholder, together 16, nominal value 10, 6 rupees is profit which will be transferred to capital reserve. So don't take premium as profit, don't take profit as premium. Money collected over and above nominal value put together is profit. Money collected more than nominal value on reissue is premium. First deduct the premium. balance of money collected from new shareholder plus the balance of plus the money which was collected from the old shareholder. Together, if it exceeds nominal value, that becomes the profit. Are you getting it? If the part of the shares which were forfeited are not reissued, then balance against such shares will remain in share forfeiture account only and will not be transferred to capital. Let's say I forfeited 100 shares, in that I've reissued only 40 shares against 60 shares. Whatever money that I had collected and kept in share forfeiture will remain in share forfeiture, will not be transferred to capital till the date those shares are reissued. Got it? We've done a couple of questions on that also. Please do a question on that also to revise. And I think this is good. We should do that question. Are you ready? Out? What you read? Okay, come on. Let's do Kunal Fortune question. Question number 15 from our material. Sorry, from RTP, Jan 2025. Even I've been doing this 10 hours, 11 hours stretch for long time right now, continuously. So, till before the day I started your class, till then morning regular inter batch 5 hours, 5.5 hours. After that we had fast track batch, inter fast track batch. So tomorrow, day after tomorrow, last 2 days of inter fast track batch, about 7.5 hours, like your class now. So for 2 days we have some 4 chapters we have to do tomorrow and day after fast track exam season. Yeah. Now, so because of the new examination pattern, new year and all is gone. Actually, previously exam is to get over in November. Jolly, jolly. Now nothing jolly. Why? Exam will be in January. December full marathon of fast track or revision or RTP. January will be question paper discussion or analysis. By the time you finish all of that, that's there in the January, May exam. Then, shall we start with this Kunal Fortune question? Come on, guys. Let's now start with question number 15 from our RTP Jan 2025. This question is on company accounts for issue and forfeiture of shares. A very beautiful question. A question of this type is slightly rare. In fact, I would say none of the past examination RTP or MTP questions were of this type. Very unique question. Shall we read this? Read. Kunal Fortune invited applications for issuing 30,000 equity shares of rupees 10 each. They are collecting 1 rupee on application, 2 rupee on allotment, 3 rupee on first call, 4 rupees on final. So nice, no? Never have seen question like this. So unique. 30,000 shares. How much on application? 1 on application, 2 on allotment, 3 on first call, 4 on final call or second call. Okay. What's after that? The issue was fully subscribed. Arun, to whom 300 shares were allotted, failed to pay allotment money. Oh, and his shares were forfeited immediately. So Arun was allotted 300 shares. This boy paid application money. Allotment he did not pay. Call I did not do only. Why? I forfeited his share after that. So it's not that he will not pay first call and final call. I didn't make the first call only. After allotment, before first call, I forfeited the shares. Understood? Then there is another one. Ajit, to whom 450 shares were allotted, failed to pay first call. So Ajit had 450 shares. He paid application, he paid allotment. He did not pay first call. I can forfeit it his share immediately after first call, or I can forfeit it after final call. What is happening here? His shares were forfeited after first call. Oh, final call madle illa. I forfeited his shares here only. Understood? Then after the second call, after that second and final call was made, Mohan, to whom 150 shares were allotted, failed to pay the second and final call. Mohan has 150 shares. He paid application allotment first call. He did not pay final call. His shares were forfeited after final. And that's it. His shares were also forfeited. All the forfeited shares together were reissued at rupees 9 per share, fully paid up. So that reissue is happening after final call. Understood? So we issued how many shares? 30,000. In that, this Arunno, Ajit, Mohan together have 300, 450, 750, 900 shares. Can I say 29,100 shares? Whoever holds, they paid application, allotment, call, first and second, both. At each stage, there is forfeiture. I will write application, I will write allotment, I will do forfeiture. I will do first call, I will do forfeiture. I will do final call, I will do forfeiture. After that, I will do reissue, of all these shares, 900 shares. Are you getting it? I'll give you a minute. Please copy this table. Can we start with accounting entries at each stage? Now, at application stage, how many applications do we receive money for? 30,000. So I would write bank account debit to equity share application account. Bank account debit to equity share application account. How many shares? 30,000 shares into rupees 1 per share. 30,000 into 1 is 30, 30. 30, 30. Entire money I'll transfer to share capital. I will write share application account debit to share capital account 30. Easy. Now let's go to allotment. At allotment stage, I am asking for money for all 30,000 shares. Am I asking how much per share? How much per share? 2 rupees. I would write the entry as equity share allotment account debit. That's the sake of which you need to receive money to increase my capital. 30,000 shares into 2 rupees per share. 60, 60. Everyone understood 60, 60? Pakka. Then I would write for receipt of money. Do I receive on all 30,000 shares? No, Arun doesn't pay. I receive from everyone other than Arun. So don't add them. Deduct 300. 30,000 only 300 shares I don't receive money. So can I say I receive for 29,700 shares? Everyone, 1 second. 29,700 shares into 2 rupees per share is how much? 59,400 rupees will be received. 59,400 rupees will be received. 300 shares into 2, 600 will be calls in arrears. I would write bank account debit, right? Bank account debit 29,700 shares into rupees 2 per share, 59,400. Further, I would debit calls in arrears account. How much? 600 shares into rupees, sorry, 300 shares into rupees 2 per share, 600. Credit our share allotment with the amount that you have debited here, 60. So who doesn't pay? Arun. Arun doesn't pay. Arun shares will be forfeited. They are not going to call stage. They are doing forfeiture. When you do forfeiture, capital will decrease. Debit share capital account. How many shares belongs to Arun? 300. 300 into how much was called? Application 1 rupee, allotment 2 rupees. We had called 3 rupees. 300 into 3, 900. How much had he paid? 1 rupee application money, whatever he had paid, I transferred to share forfeiture. 300 into 1, 300. 2 rupees per share for 300 shares, 600 he did not pay. That will be returned to calls in arrears. So the journal entry is share capital account debit to share forfeiture, 2 calls in arrears. Share capital account debit 900 to share forfeiture 300 to calls in arrears 600. Everyone get this? Hell yeah. Very good. What is after this allotment and forfeiture of the shares allotted? We'll go to call. First call madbekadre call is not made for 300 shares. Why? 300 shares are forfeited. Call is made only for 29,700 shares. So when I write share call account debit to share capital 29,700 shares into 3. Shall I? I will write equity share first call account debit to equity share call account capital account 29,700 shares into 3, 89,100. Now when I am writing bank account debit, we won't receive money for entire 29,700 shares. See, 300 though I didn't make the call. 450 shares, he doesn't pay the first call money. Ajit. So 450 shares into 3 is calls in arrears. How much do I receive it for? I receive it for 29,100 plus 150, which is 29,250 shares I receive money. I would write here 29,250 shares into rupees 3 per share, 87,750 is received. Calls in arrears is against that one shareholder who holds 450 shares. He doesn't pay 3 rupees 1,003. Totally whatever I had debited, no share first and final share first call here 89,100. That I would credit here 89,100. Got this? Being share call money received. Right? Next, after this, shall we forfeit that 450 shares against which money is not received? Right? Equity share capital account. How much was called against this 450 shares? Application 1, allotment 2, share first call 3. So totally 6 rupees. So please do 450 shares into 6 rupees per share. 2,700. I would also debit our, credit our share forfeiture to the extent received. Out of 6 rupees, 1 rupee application, 2 rupees allotment, 3 is received, and then call money of 3 is not received. So I would write share forfeiture 450 into 3,350, calls in arrears 450 into 3,350. Understood this? By this we are done with share first call. By this we are done with. Shall I go to final call? Final call is not made for 300 and 450. Why? Their shares are already forfeited. Mohan and others, I'll make the call. Mohan 150, others 29,100, 29,250. I make call for 29,250, I receive money for 29,100. So I'll write the entry as equity share final call account debit to equity share capital account, 29,250 shares into rupees 4 per share. 1,17,000, 1,17,000. Clear? Everyone? After I write 117, 117, then I would write it as bank account debit. How much money am I actually receiving? Not 29,250. I receive it for 29,100 shares. Am I right? 29,100 shares into rupees 4 per share. 1,16,400 and calls in arrears. How much money that I don't receive? I won't receive, thus 150 shares into 4 per share. 600. Credit will be given to equity share call account, that is 1,17,000. Did you all get this? Okay. Now I will forfeit this 150 shares against which 4 rupees of final call money is due. This when I write forfeiture against share capital account debit, full money is called. Application 1, allotment 2, first call 3 and final call 4. 10 rupees is called against this. 150 shares into 10, 1,500. They did not pay final call of 4. So they paid 6. 1 rupee application, 2 rupees allotment and 3 rupees first call. So they paid 6 rupees. Am I right? So 6 into 150, 900 paid. 4 rupees final call. 150 into 4. 600 not paid will be returned to calls in arrears. Understood? So we forfeited how many shares? 900 shares in total. We are going to reissue all the 900 shares. Bank account debit. How many shares are reissued? 900. At what rupees? 9 rupees per share. 900 into 9 is 8,100. Credit will be given to share capital full amount. Why? Shares are issued at 9 rupees but paid up full. It is issued at discount. So 900 into 10, 9,000 will credit share capital. 1 rupee what I don't collect is discount. Discount on reissue of forfeited shares will not be returned to share discount account or discount on issue account. It will be adjusted against forfeiture balance. So I will write share forfeiture account. How much? 1 rupee for 900 shares. 9. All the shares forfeited are reissued. We forfeited 900 shares. All 900 shares are reissued. Any excess remaining in share forfeiture should be debited to share forfeiture and transferred to capital reserve. Shall we check how much is the balance left? Come on, take your calculator, everyone. Get ready. First one. Do we have share forfeiture here? No. Here? No. Share forfeiture comes here. This is the first forfeiture. 300 minus 300 antane calculate. Minus 300. Credit of 300. We forfeited 300 shares. Sorry. We forfeited 300 shares and we have 300 rupees. Then second time, after the first call when we forfeited, we got 1,350 rupees again. Against the shares forfeited, we had already collected 1,650 minus 1,650 in the calculator. In the final call when you forfeited, another 900. How much do we have? 2,550. Reissually discount bandbittu 900 plus 900 you do. 1,650 is minus in your calculator. That I will plus 1,650. Debit your share forfeiture account to make it 0. Transfer it to capital reserve. And that's the end of issue of shares. Application, allotment, first call, final call, forfeiture at allotment, forfeiture at first call, forfeiture at final call, reissue after final call question from RTP Jan 25. There's never been a question like this so far, but good one, nice one. At one point, the moment you look at the question, oh my god, 4 types of, but it's actually easy. When you start solving it, you find it easy. So don't judge the question when you look at it. Please solve it to understand that it is easy. Everyone's clear and comfortable? Yeah. Fantastic, guys. By this, we are done with question number 15 from our RTP. And so have we finished our issue of shares question. So let's go to the next topic. After issue of shares, we have issue of debentures. What do we have next in our syllabus? Issue of debentures, bonus issue, right issue, redemption of debentures. We can finish it. It's 7:30. We'll try and target our 8:15, 8:30 time. Yeah. Come on, let's see debentures. See, whenever we have debentures, debentures are acknowledgement of debt. Company has borrowed money and company is accepting that yes, I borrowed money, gives it in writing. That document which they give in writing stating that they borrowed money is actually debenture. Am I right? This particular debentures are there. No, there can be several types: fixed charge, floating charge, convertible, non-convertible, first debenture, second debenture. All of this is basically theory. There is no concept of irredeemable debentures. There is no concept of any debenture which is issued should be redeemed. And debentures are always having are always having floating charge on the assets of the company. If they specifically mention an asset, it becomes fixed charge. If there is no asset mentioned, it will become floating charge. And if they have a right to get converted to equity share, convertible. If they have no right, they are non-convertible. What is issued first is first debentures. What is issued after is second debenture. Clear? Debentures comes with a specific percentage tag before their name that promises the rate of interest that they should be paid. If in case the market may competition is high, you want to offer higher rate, but some restrictions are stopping you from offering, then the company might choose to issue such debentures at discount. Meaning, nominal value of the debenture will be 100, but the company will collect only 90 rupees against that debenture. That is called issue of debenture at discount. So debentures, unlike equity shares, can be issued at par, can be issued at premium, can also be issued at discount. I'll repeat, debentures can be issued at par, can be issued at premium, can also be issued at discount. If nominal value and issue price are same, par. If issue price is more, premium. Issue price is less, such discount whatever is there, it is expense to the company. That expense should not be written in 1 year. It should be written over the period of debentures. Why? The logic is very simple. It is in compensation of interest. Now I want to offer higher interest rate, but I'm not allowed to. So what do? I will say you pay 90 rupees, take 100 rupees debentures. I'll give you 10 rupees interest every year. On redemption, I'll pay 100 also. So when I do that, you're getting 10 rupees interest for paying 90. So do 10 by 90. 9% ಅಲ್ಲ 11% ಮೇಲ್ ಬರುತ್ತೆ 12% 11.111. See, I'm offering 11.11%, but on the certificate coupon rate given is 10%. Are you getting it? On maturity, you will get 10 rupees extra again. You get 100, 10 rupees premium on that. After at net interest, if you compute, it will become more than 12%. Are you getting it? Yes, you pay 90 rupees. You're getting interest of 10, and on redemption, you will get 100. So you got 10 rupees more than what you paid. Are you getting it? So that's the logic. And sometimes what do? Maybe you want entire 100. You don't want 90 rupees. So you'll collect 100 rupees from them. But you can promise them that on redemption, you will not pay them 100, but you will pay them 110. Can you do that? Yes. So then again, effective interest rate is not 10. It is much more than 10. So any loss on issue of debentures, that is premium on redemption or discount on issue. I'll repeat, premium on redemption or discount on issue, both will be transferred to P&L account over the debenture period. Both will be transferred to P&L account over the debenture period. It should not be written to P&L account in 1 year. If the debentures are to be redeemed over 5 years, if the debentures are there for 5 years, that loss should be transferred to P&L account over 5 years. Did you understand? What is loss on issue? It is either discount on issue or premium on redemption. Lloyd, loss on issue is equal to discount on issue plus premium on redemption. Add them up together and transfer it to P&L account. How should it be transferred to P&L account? It should be transferred to P&L account over the period of debentures. If the debentures are redeemed at the end of a specific period, 5 years later, equal amount will be transferred. If part of the debentures are redeemed every year, then in the proportion of debentures outstanding every year. Did you understand? Then we saw the accounting entry. Money that we collected, we debit bank. nominal value of debentures will be credited, premium will be credited to premium. If in case there is discount on issue or premium on redemption, it will be debited to loss on issue of debenture. Discount on issue is immediate right now, so no provision. It is right now only adjusted with nominal value. Whatever premium, this is to be paid later. So when you debit it to loss on issue, it should be credited to premium on redemption, creating a provision. Are you getting it? And this premium will be paid later. And like I mentioned, this loss on issue will be transferred to P&L account over the debenture period. We've done several kuti questions. Don't straight away take big questions on discount on issue or anything. Always do the small questions, or at least glance through the small questions that we've done. We've done no in the class. So doing these small questions will actually help you do the bigger ones with ease. So if you don't do small ones and try to save the time, you will spend the same amount of time in bigger ones, and you'll also be frustrated when you do it. Instead, you do the small ones, you get the concepts right, you get that clarity what is supposed to be required. Then you will save time in doing the bigger ones. Got it? Okay, remember this. How do we transfer that loss to P&L? In the outstanding debenture ratio. If the debentures are redeemed at the end of 5 years, equally over 5 years, 1/5 of the debentures are redeemed every year, then outstanding debenture ratio at the beginning of the year. What ratio? Outstanding debenture ratio at the beginning of the year. Let's say first year there are 10,000 debentures, second year 8, third year 6, 4, 2, 0. So the 10 is to 8 is to 6 is to 4 is to 2. In that ratio, we need to transfer that loss on issue of debentures to P&L. Yes, there's no question on this topic in your RTP. RTP has a question only on redemption of preference shares along with issue of debenture. Issue of debentures illa, redemption of debentures anta. Let's check. Question 17. The heading is issue. Okay, it is there. Entire loss on issue of discount is booked in current year itself. We can do this question. But this is having several other small things also. In fact, not a big deal. We can do. Shall we do this 17th one? Well, yeah. Shall we? No, 17th one and 16th one. 16th one is your redemption of preference shares along with bonus issue question. Right issue theory we'll discuss. Right issue is the easiest thing that you can ever do. So don't worry, I'll still finish it by 8:30. I won't take any time after 8:30. We'll finish it well before that. Can we? Yes. So issue of debentures. There's question number 17 from our RTP. Let's see this one. Globex Limited took over assets of rupees 9 lakh and liabilities of 1 lakh 20 of Himalaya Limited for purchase consideration of 8 lakh 80. So you're getting assets worth 9 lakh, liabilities of 1 lakh 20. Do 9 lakh minus 1 lakh 20. 7 lakh 80,000. But you are agreeing to pay them 8 lakh 80. That excess money what you are agreeing to pay, against that you are getting assets what I and you can't see. Why? Because it is goodwill. So when you write the accounting entries for question number 17, this is in the books of Globex Limited. Have they given any information about date in the question? ಕೊಟ್ಟಿದ್ದಾರಾ ತುಂಬಾ? Okay, so let's write the entry for taking over of assets. So we'll write that assets whatever we're taking over, no, whatever the assets we're taking over, let's debit that assets. Assets account debit. Whatever assets we're taking over. What value is the value of the assets? 9 lakh. Okay, we're taking over liabilities also. All right, liabilities. How much is the value of the liabilities that we're taking over? 8 lakh 80,000. No, 1 lakh 20. Sorry, 1 lakh 20,000. Hey, actually, in fact, I can make it nice. Give me a moment. So your purchase business, no, will literally do it like CA inter amalgamation. You're purchasing business purchase account debit. Yeah, you purchase business and you need to pay the liquidator. Liquidators of Globex Limited account. How much is the purchase consideration that you agreed? 8,80,000, 8,80,000. So this is being business purchased and consideration due. What is this? Being business purchased and consideration due against it. And now we'll open the box. We got how much of assets? 9 lakh. And we got how much of liabilities? 1 lakh 20. All this, where did I find it? In that box, no. That business purchase, in that box there is this asset and liabilities. I'm literally throwing that box out. So that asset I'm giving up. Sorry, that business purchase I'm crediting. And in that box there is assets and liabilities. Asset debit, liabilities credit. Box thrown. Now this journal entry is not tallying. There is something missing. That missing figure is goodwill account. Did you understand goodwill? Tell me how much is goodwill? 1 lakh 20 plus 8 lakh 80 minus 9 lakh. 1 lakh is goodwill. Yes or no? Being assets and liabilities taken over, recorded. The assets and liabilities, whatever I took over from Globex Limited, I have recorded it. Now, here I have credited no liquidators of Globex. I have to pay them. So I have credited because it's my liability. Now I am paying them. Liquidators of Globex and account debit. What am I paying them? See, what am I paying them? It paid the purchase consideration by issuing 8% debentures of 100 each at a premium of 10%. So I am giving them debentures. I'll write 8% debentures. 8% debentures account. You can write two debenture application and then write debenture application to debenture account. You can write it that way. But I choose to write it straight away. Shall I write it straight away? To security premium. Bye, study well, may God bless you. 8,80,000. Yeah, next mulaqat I don't think will happen in foundation. Okay, this is being purchase consideration settled. Yeah, how much? That's I was about to tell. It's like people are going out in installments, could not have that one last word at the end, like, are you people happy for the last 2 days that you spent? I was about to ask. Allah, you have 25-30 days left for the exam. Each day is very crucial. I've taken 2 days out of your study schedule for the last 35-40 days. Are you happy and felt worthy about those 2 days? Or do you feel like now manalidre bejan hota hai, you'll want time waste? I was just curious if you would say that. Yeah. Okay. Yeah, I wanted to be sorry if in case you felt like you could have done much more in this. Oh, ನಾನು ನೋಡಿದ್ದೀನಿ. ಅರ್ಧ ಅವರ್ ಓದ್ಬಿಟ್ಟು ನಿದ್ದೆ ಮಾಡ್ಬಿಡ್ತಾರೆ. ಚೆನ್ನಾಗಿ ಅದನ್ನು. How much? 8% debentures of rupees 100 each at 10% premium. So 10% premium means I would take 8,80,000 into 100 divided by 110. Issue price is 110, no? Nominal value is 100. So basically I've issued 8 lakh rupees worth of debentures. 80,000 is the premium on the same. Did you understand what I just did? Very nice. What's after this? XY Limited issued another 6,000 8% debentures of rupees 100 each at a discount of 10%, redeemable at premium of 5% after 5 years. Wow. According to the terms of the issue, rupees 30 is payable on application and balance on allotment. It has been decided to write off the entire loss on issue of discount in current year itself. So full loss we should write into P&L account in current year. Why? They've insisted. It's not correct, but they've insisted, so we will do it. Okay, let's write this issue. Shall we write this issue? 30 rupees on application, balance on allotment. So we don't know whether the discount is on application or discount is on allotment. What do we do? Either of the assumptions are valid. Allotment ali madoda, 30 rupees will collect full. So first write the entry for receipt of application money. Shall I write receipt of application money? Bank account debit to debenture application account. So this is being debenture applications received. If I write money received, then it will become one more line. So adhike. How much? 6,000 rupees. Sorry, 6,000. 6,000 debentures into how much per debenture? Yeah, 30 rupees. 30 per debenture. How much is 6,000 into 30? 1,80,000, and I would credit 1,80,000 to debenture application. Now I would write here debenture. Everything is happening on the same date. They have not given any dates information. Kotidara debenture application to 8% debentures account being applications accepted. I can write discount at this stage, but I'm choosing to postpone it to allotment stage. If you want, later I'll give a note. Alternatively, discount can be assumed on application. I would make you write that. Okay, now shall we do allotment? Allotment, I'm going to ask for money. Debenture allotment account debit. How much money am I going to ask? See, 100 rupees per debenture, 30 rupees collected on application. I should collect 70, but I won't collect 70 because they've told to give 10% discount. Correct? No, how much discount? Issued 8% discount of a discount. Wait. For redeemable at premium 5%, discount 10%. Along common full stop haakbeku. Sarila avaru. Okay, then we'll collect 60. Shall we? Shall I call for 60 rupees? Yeah. I will write here 60, 60, 60. How much is 60? 3,60,000. That 10 rupees what I won't receive will become my loss on issue. Actually, we should not just stop at 10. We should write premium also. How much premium? 5 rupees premium. Did you understand? 6,000 into 5. Sorry, 15. I'll write it as loss on issue of debentures account. So this debentures, whatever is there here, it has a discount on issue, premium on redemption. Both discount on issue 10, premium on redemption 5, together 15. 15 into 6,000. 90. So I'm going to credit to 8% debentures. 8% debentures account. Can I say it is 6,000 debentures into how much per debenture that we're collecting? 70. Why? 30 on application, 70 on allotment. Sir, that would premium Baritini to premium on redemption of debenture. Fault. This will be that 5 rupees. 5 rupees, 5 rupees. You understood? No. This is provision. We have not yet paid. We should pay it later. So this becomes 30,000. This becomes 4,20,000. So being debentures allotted. And amount due. Being debentures allotted and amount due. Then shall I write the entry for receipt of money? Bank account debit. How much money will I receive? 3,60,000. Credit will be being debenture allotment. Being debentures allotted. Being allotment amount received. Done. Ashte, call and all is not there. So we have two phases only losses. Here did we issue at loss? Oh, here we issued at premium. No problem. This loss on issue is there, no 90,000. should be actually transferred to P&L account over the term of debentures. They've told write it off in 1 year. Nimane baraha. Right, profit and loss account, debit to loss on issue of debentures. How much is that? 90,000. 90,000. Being loss on issue of debentures transferred to profit and loss account. Understood? I think that's it. This is the end of this question. Sir, really? Yes, really. So, cute one. Dinner time. Dinner break. When you people plan to go out for dinner, you should not be thinking which restaurant. You should be thinking which city in the next 10 years. In next 20 years, if you have to think, I'm free on weekend, what to do, you should be thinking which country to go to. If you have to do so much of excellence in your life, no. Bag, zip open it. You would have to be careful. Bag zip open it, books with I'm not talking about telling you would have to be concerned about you building. So this is a very crucial time of your career. And remember one thing, there are people of your age working crazily who are preparing for NEET examination, UPSC examination in the future, or trying to crack IIT JEE. And you'd have to live in the same society with them. And society will compare. See, oh no, he's an IAS officer. What are you? See that girl, she's a doctor. What are you? This will, and all will happen. Right now, it's all fun. No one will ask how much time you spent on Instagram, how much time you spent scrolling, how many movies did you see? Everything now trending in Netflix, you finish off watching. Very good, but it doesn't matter. But will you be trending after 4 5 years? So now no one will ask, but 4 5 years later they will get that. So that day you should not be questioned. It's not that you have an answer to substantiate where you stand. That mental peace that you should have, that no one should be able to question you or what did you do in the last 5 years. So work crazily. Don't look at the clock. It's okay if you sleep less. The break time I was getting scolding saying that how are you feeling? I told I was feeling little giddy and dizzy. Like ಹಂಗೆ ಆಗುತ್ತೆ 4 ಮಲ್ಕೊಂಡ್ರೆ ಹೇಳಿಲ್ವಾ ಒಂದಿನ ಫೋನ್ ಬಚ್ಚಿಟ್ಬಿಟ್ಟು ಅಲಾರಾಮ್ ಆಫ್ ಮಾಡ್ಬಿಡ್ತೀನಿ ಯು ಸ್ಲೀಪ್ ಇನ್ ದ ಮಾರ್ನಿಂಗ್ ಟಿಲ್ 10 ಅಂತ ಹೇಳಿ been long since I slept like 6 7 hours continuous. So it's happening. But even I know whatever I'm doing, I have to do this. So you also should not be taking any backseat. Give your 100%. It's okay if you fall sick one day because you work little hard. It's okay to fall sick because you worked hard. Not happen like you fell sick because you did not have money to eat food. Get it? It's okay to have stress. Not okay to have poverty. Because like ಮಾಡಕ್ ಕೆಲಸ ಇಲ್ಲ ಮಾಡಕ್ ಕೆಲಸ ಜಾಸ್ತಿ ಇರಬೇಕು. You should have so much work to do that you don't know how to do so much work. It should not be like I don't have work to do, only give me any work I will do. Get it? Either ways, working hard is there in life. You get this? Living life with 30,000 salary is difficult. Get it? Living life with maybe 2 3 lakhs of salary is also difficult. Maybe it demands so much of money. Working hard is not an option. But in return, what are you getting on the other side of the scale is important. When you work for 30,000 salary also, they will take enough work out of you. Life is not going to be very simple. When you start your own firm or when you work as a CEO, CFO of a company also, they'll take enough work out of you. Just get paid for what you work for. Be able to give yourself all those life experience what you should be getting it, and be that person who is relevant and can make the difference felt. Your presence should be felt, so should be your absence, no matter where you work. So that is always possible when you work without looking at the clock. You always want to look at the clock, look at the calendar when you work, you have to look at the purse when you spend. To work in a way without looking at the clock so that you can spend without looking at the. You're buying something 10 years down the line, you should not look at the price tag. You like it, pack it. Surprise, I'll pay. Pack it, take this card. You don't even have to check if it is within your card limit. That's how you should crazily work. Everything in the planet should be affordable to you. Be able to book a chartered flight for yourself to go one day if you want to. You might choose not to. You might choose to live a simple life, but that should not be because you don't have an option other than to live in a simple. Got it? So don't take a back seat. You're doing it all for yourself. You are selfish, stay selfish. There's a cousin's birthday, tell you won't come. Okay, even if you don't go, they'll cut the cake, they'll celebrate. You think it's going to be less happier? Not at all. Everyone is happy. No one needs you as much as you need yourself. You need your time at most now. Give yourself enough time and everything will fall back in place. So whoever people are meant to be, they will wait for you to do well in life. In fact, they'll be very happy. If people are letting you go because you didn't spend enough time with them, they were never with you. They were never with you. You're banking on someone for wrong reason of giving your time at the stake of your career. Maybe one fine day, if they have to choose between their career, time, and you, they might not pick you. Got it? So be wise. Too young to make wise decisions, but it'll be too late if you make wise decisions later. Make it right now to be actually called wise. Okay. So we're done with issue of debentures. Shall we quickly discuss the topic of our bonus issue? Very good. Yeah. Come on. Bonus issue and right issue. Whenever company has reserves and it wants to capitalize its reserves, can choose to do bonus issue. So what is bonus issue? Bonus issue is capitalization of reserves. Company shifts its reserves from reserves and surplus to share capital. So when we do this shifting of reserves to capital, reserves will be debited, capital will be credited. This bonus issue is allowed only when the shares are fully paid up. If the shares are partly paid up, you cannot issue them fully paid up share as bonus. Instead, you can convert that partly paid up share to fully paid up. For this purpose, we use reserves. What reserves can be used? We can use reserves we should use reserves in the same order. First one, capital redemption reserve. Second one, security premium. Third one, capital reserve. Then general reserve. Lastly, P&L account. First, CRR only when it is completely used up. Security premium. After that, capital reserve. Then general reserve. Then P&L. Very important point. Security premium and capital reserve can be used only if it is realized in cash. If security premium is arising for shares issued on non-cash consideration, you cannot use it. If capital reserve is arising for revaluation of assets, it cannot be used. It should be realized in cash. Forfeited shares, excess money collected, transferred to capital reserve can be used for bonus issue. You getting it? Shares issued for cash, excess money collected in security premium can be used for bonus issue. Are you getting it? However, CRR, security premium, capital reserve, general reserve, P&L, what we discussed, this is for issue of fully paid up share as bonus. Whenever we are converting partly paid up share to fully paid up, we cannot use CRR and security premium. We have to start with capital reserve only. Got this point? Very good. So what is the journal entry for accounting? Very simple. Debit the reserves, credit bonus, which is dummy account. Then debit bonus, credit share capital. This bonus account, credit bonus account debit will get nullified. All the reserves debited is decreasing the reserves. Share capital credited is increasing the reserves. This is if you are issuing a fully paid up share as bonus. You can choose to convert partly paid up share to fully paid up. Then you write the entry share call to share capital. This call being made. After the call is made, what do? You debit the reserves and credit the share call, but through bonus to shareholders account. When you write the reserves, please don't write CRR and security premium. You write capital reserve, general reserve, P&L debit to bonus and bonus to share call. You would have usually written cash to share call. No, here you don't write cash. Why? You don't receive cash from the shareholder. You give the share to them free. Understood? Next comes our disclosure. Whenever shares are issued for non-cash consideration. Whenever shares are issued for non-cash consideration. In the balance sheet, what you prepare after that, in the notes to accounts, in the share capital, very important, disclose out of the above 1 lakh shares, 20,000 shares were issued for non-cash consideration. Just you have to write that. If you don't write that, you lose 2 marks. And in the absence of specific mention, always assume security premium is realized in cash and capital reserve is not realized in cash. Understood? That's it. We did some easy kuti questions on bonus issue. You can practice. You let me know if there is any point that is difficult. Previous RTP, MTP, nally whatever question is there on bonus issue, whatever is there, I will share the link. I'll share you one simple playlist for one for RTP June 24, one for RTP September 24, one for PYQ September 24, one for PYQ June 24. I'll share 4 playlists. Question wise, the videos will be there. whatever topics I've told you to practice, you please do them. Bonus issue, we didn't do a question. Please do one from there. Got it? Then we'll do redemption of preference shares. Sorry, right issue. Shall we do right issue? What is right issue? Unlike the bonus issue, what we discussed here, right issue is not free shares. Right issue is issue of shares for cash consideration. Am I right? Whenever the company issues the share to existing shareholders, it is called right issue. Not to outsiders, to the existing shareholders. Whenever the company issues shares, it is called as right issue. Right issue is done with an intention of letting the existing shareholders hold their percentage in the company. They have percentage of holding. They should continue to have same percentage of holding. How do I let them have that? By right issue. So if they subscribe to right shares, they'll have same percentage of holding in the company. However, right issue is an option, not an obligation. Right issue is not an. So whenever shareholders get shares on rights, they can keep that shares. They can buy and keep. They can sell that right to somebody else, or they can do nothing. It's up to them. They always have this option. Are you getting it? And rights are allowed to the shareholders at a price lesser than the market price. Why? If you give it at market price or more than market price, why will they buy? Why will they buy? They'll buy it from somewhere else only, market only. Why would they buy it from this company? So if the market price is 100, company has to offer the rights at a price lesser than 100. The price in the market after the rights is announced, before the rights is issued, is called cumulative right price. Right price. I'll repeat. The price of the shares in the market after the rights is announced, before the right shares are issued, is called as cumulative right price. And the money that is collected is right issue price. The money that is collected from the shareholder is right issue price. So you understood cumulative right price, you understood right issue price. After the right issue is done, the price prevailing in the market is theoretical X right price. Why is it theoretical? Practically, I don't know, you don't know. It can be any number. Theoretically, we'll find one number telling this should be the price if there is no market condition. Market is not moved by any factors. Market should run based on mathematical formula. Then this should be the price. Theoretical X right price. It is weighted average price. Nominal value, it is 10. It is never in the picture. Ignore nominal value of 10. Let us say in the market, cumulative right price is 100. This cumulative right price, that is the price at which the shares are traded in the market. Companies allowing rights at 90 rupees. Companies allowing rights at 90 rupees. Let's say for every 5 shares they give one right. You had 5 shares at rupees 100. 5 into 100, 500. You got one share at rupees 90. 1 into 90, 90. So 500 rupees is the value of your 5 shares which you had before right issue, cumulative right price. One share you bought at 90 rupees, right issue price. 590 is the price of 6 shares. 590 by 6, 98.33. 98.33 will be the theoretical X right price. Theoretically, after right issue in the market, the price should be 98.33. Price difference between cumulative right price and theoretical X right price is called value of right. You have only this much in CA foundation. You don't have much. You have to write journal entry, bank account debit to share capital to security premium, same entries. Doesn't matter. When you come to CA Inter, we will use this in computation of EPS. We'll use this in computation of several things. It will become very nice. In investment accounting, you'll see how should this be counted from the perspective of the investor. I am an investor. I bought right shares. What is the entry? I sold the rights. What is the entry? Is it profit? Is it loss? How does it affect the cost? You'll see it in CA Inter. AS 13, AS 20. Very interesting. Yeah. Here finding the average to find theoretical X right. It gets averaged. Exactly, that's what I'm trying to tell. It should happen like this, theoretically. It should happen. But I and you can't predict the market. If I and you can predict the market, we both will be gods. Our photos will be there everywhere. Correct? No. We don't have to work. We'll just sit and make money like this. I do like this, money will keep coming from my hand. Yeah, I can predict the price. No. So, unfortunately, I and you, nor anybody in the country has that power. Cancer has to an extent, but yeah, cancer is like very close to that. Yeah, it's like say God among the humans type. Doesn't predict, but gets it right. So there would be a batch of stock market course after your foundation examination. Yeah, before your result. So contact Chancellor. Yeah, fun. It's fun how sir talks. So many facts. To talk to sir for 5 minutes, you'll be like, "Oh, too much." Like you got enough things to talk for next 1 week with anybody else who will talk. So much of statistics. So much of statistics. Too good, man. Okay, nice. So did you understand this? Yeah, sir. Ange subtle promotion mountain. Don't know, man. I just told that no promotion. Huh? There, I don't see, but I am there. Okay, yeah. Done with this. Right issue. Shall we do redemption of preference shares now? Okay, your favorite topic. Redemption of, hey, actually not difficult. Yeah, very easy one. I don't understand why you people are acting slightly weird. Okay, redemption of preference shares. So a company cannot issue irredeemable preference shares. Can you issue irredeemable preference shares? Che, no way, not possible. To always issue redeemable preference shares. Any preference shares issued should be redeemed within a time period. So when you are able to redeem it within a specific time period, we call it redeemable preference shares. On redemption of preference shares, where do you get money from? You can use money from two. One, fresh issue of shares. Two, existing cash reserves or sale of assets. When you use fresh issue of shares, no problem. Why? Preference share capital is decreasing. Ouch. And equity share capital or some other share capital is increasing. Totally, the capital of the company is not decreasing. However, when you use your cash balance or when you sell some investments or assets and use it to pay preference shareholders on redemption, there is a problem. Capital of the company is reducing, which it should not. So what to do? We should create CRR. To what extent? To the extent capital is reducing. To the extent capital is reducing. We did quite a lot of questions. I'll give you just a very brief overview. In depth, if you want, I'll share one quick revision video on preferences. I've already shared. I would recommend you to watch that. That's much more detailed than what we'll do now, because there we'll do it for 20 minutes. Here we're left with 20 minutes. And I would also have to give you a brief overview of redemption of debentures. So please watch redemption of preferences. Drop a message. I'll share the link. I hope you already have it. If not, watch that quick revision video on bonus issue, right issue, and redemption of preference. That is more calm, better animation, and then it has better coverage of the top. But revision will definitely do one quick revision. Got that? So whenever preference shares are to be redeemed, what is the journal entry that we should do? We should debit our preference share capital account. So I would have to debit my preference share capital account and credit the preference share holder. If in case I'm paying any premium to preference shareholder, that has to be from P&L account. Should I open the presentation and then do, or shall I tell? Okay, preference share capital will reduce, debit preference share capital, credit preference shareholder to whom you're supposed to pay. This is at nominal value. If redemption is at premium, along with preference share capital, also debit premium on redemption. Then you credit preference shareholder. Then you write preference shareholder to bank and then pay them. That premium, whatever you pay, has to be transferred to P&L account only. So what if I don't have enough balance in P&L? Then my friend, you can't do redemption of preference. You must have balance in P&L account. You can never do redemption of preference shares without having balance in P&L. Premium has to come from P&L. If not, you should do redemption without premium. Clear? CRR should be created. To what extent? Whatever extent you rate preference share capital debit, no. To that extent, you should create. In the case, some place may have done fresh issue of equity shares. You have credited fresh issue of equity share capital by 60,000. That is a fresh issue made. Preference shares are redeemed to the extent of 1 lakh. 1 lakh preference share capital decrease. 60,000 equity share capital increase. 40,000 is the total decrease in capital. You have to create CRR for 40,000. You have to create CRR for. Did you understand? Very good. Next thing that you should note is that P&L account transfer. What if you don't issue equity shares in this case? You have to create CRR for entire 1 lakh. In certain cases, they will ask you to compute how many preference shares, how many equity shares are supposed to be issued. In that case, should always check where is the shortage. Where is the shortage in the reserves, or is the shortage in the cash? Is the shortage in the reserves, or is the shortage in the cash? So if the shortage is in the reserves, let's see. I don't think I have it here. I would have to open that presentation only. Yeah, theory was there here. I don't think it was there. It's a part of a question. I made you do a lot of small questions. No. So accuse. Huh? No, here also no. It's part of a bigger question. One second. Give me a moment. Should be there. It should be here. If not, let's open the present. Not there. I think if you do these will help. Ah, okay. Let's do it softly only. Observe. In this case, preference share capital is 1 lakh. I have 1,50,000 worth of cash. How much cash do I have? Preference shares are how much? Can I redeem preference shares at par? Yeah, I have enough cash. But how much reserve do I have? I should create CRR for 1 lakh. No, I don't have enough reserves. So, can we redeem preference shares without fresh issue? Answer is no, I cannot. So I have cash of 1,50,000 which can be used to pay preference share capital. If I do that, my capital has reduced by 1 lakh. I have to create CRR for 1 lakh. I don't have enough reserves to create CRR. So the answer is no. To what extent should the shares be issued? I can create CRR only to the extent of 10,000. I can create CRR only to the extent of 10,000. So only 10,000 nominal value of shares can be redeemed using that cash available. Remaining 90,000 nominal value of preference shares has to be redeemed by way of fresh issue. Minimum fresh issue is nominal value 90,000. Issue price I don't care. Minimum nominal value is how much? 90,000. See the answer? CRR can be created to the extent of 10,000. Shortage for creation of CRR is 90,000. So the fresh issue has to be made for how much? 90,000 nominal value. Then if issue price of the equity shares is rupees 12, nominal value 10, then how many shares should be issued? I completely ignore nominal, I completely ignore issue price of 12. I don't care. See, 1 lakh is there, no? If 1 lakh rupees preference share capital decrease, I might have to create CRR for 1 lakh. I have only 10,000 of general reserve. So 90,000 preference share capital is decreasing without CRR creation. Equity share capital has to increase by 90. So 90,000 will be divided by 10, not 12. So 9,000 shares have to be minimum issue. Are you getting it? If you do 90,000 divided by 12, you will issue how many shares? 8,750? How much? 7,500? 9,000 by 12. 7,500. 7,500 into 10. 75,000 equity share capital increase. 1 lakh rupees preference share capital decrease. 25,000 CRR create ಮಾಡಬೇಕು. I have general reserve only to the extent of 10. 15,000 I can't create. Legal, not allowed, invalid as per Companies Act. So I have to issue 90,000 nominal value of equity shares at any cost. Got it? See the second case. I have 1 lakh rupees preference share capital which are supposed to be redeemed. I have 1,50,000 general reserve. So can I create CRR? Oh, CRR in the Justine Madu. I have enough. Can I redeem using internal funds without fresh issue? I can based on reserves, but cash is not there. To preference shareholders, ultimately I have to give cash only, no. So can I redeem without fresh issue? Answer is no, you cannot. You have to make fresh issue. You have to make, how much fresh issue you have to make? 90,000 rupees is required, yeah. 90,000 you need money, cash pay ko. So this 90,000, let's say the issue is at 12. Should I divide 90,000 by 10 or 12? 12. 12. Then ging bandru okay. Money is what I want. However it comes, I don't care. It can come by premium, it can come by nominal value. Now if you do 90,000 by 12, 7,500 shares are issued. 7,500 into 12, 90,000 cash I got. 10,000 cash I already have. I will pay. My equity share capital is increasing to the extent of 75. My preference share capital is decreasing by 1 lakh. Total decrease 25. I can create CRR to the extent of 25. I have reserves. Did you understand shortage in reserves, shortage in cash? In the first case, shortage was in reserves. So we divided only by nominal value. If the shortage is in reserve, should divide by, if the shortage is in reserve, shortage in reserve should be divided by nominal value of fresh issue to find number of shares. If the shortage is in cash, shortage of cash should be divided by issue price to find minimum number of shares to be issued. This is one part where you find difficult. Sometimes they'll issue by nominal value, sometimes they'll issue by disc or say issue price, what to take, when to take. You understood? The shortage is in reserve, shortage will be divided by, if the shortage is in cash, shortage will be divided by issue price. Did you all understand this? Fantastic. Then that's it. Another 2-3 questions we did of similar nature. and this should give you a nice understanding on the topic of redemption of preference shares. There is one last question in our RTP on question number 16. 16 answer. 16 Trinity. It says bonus issue and redemption. Mandlama. What do you say? Come on, observe. Let's now solve question number 16 from our balance sheet of Trinity Limited. This is question number 16 from RTP Jan 2025 on company accounts, which involves both bonus issue as well as redemption of preference shares. Start reading. Trinity Limited's balance sheet is there. What is Trinity Limited doing? For the year ended, profit of 35,000 after providing 20,000 depreciation. Oh, congratulations. The following additional information is available with regard to company's operation. What are they doing? Preference dividend is to be paid. Okay, let's pay preference dividend. How much is preference share capital? 10% redeemable preference share of rupees 1 lakh. 1 lakh into 10%. 10,000 is the preference share dividend that should be paid. Let's write the entry. First, we'll write preference dividend account debit. Payment no, to bank account. How much? Like you told, 1 lakh rupees into 10%, 10,000, 10,000 paid. This dividend has to be deducted from our general reserve or P&L. What do we have in the question? General reserve. Shall I take general reserve of 1 lakh 20? From 1 lakh 20, how much dividend am I giving? 10,000. I will write general reserve to preference dividend 10,000, 10,000. Sir, can I write P&L? Very comfortable. Both are free reserves. You can use either of it. Absolutely fine to use whichever you want. Okay. Dividend done. What's after that? Except cash and bank balance, other current assets and current liabilities are same. So they're telling there is no change in current assets and current liabilities from the beginning of the year till end of the year. The company redeemed preference shares at premium of 10%. First we'll set up the preference shares for redemption. How much is preference share capital? 1 lakh. 10% redeemable preference shares. I will write 10% redeemable preference shares account debit. How much? 1 lakh. Redeemable at premium, no? Premium of how much? I would write here premium on redemption of debentures is 10%, which is 10,000. To preference shareholder account 1 lakh 10,000. Due for redemption, we are about to pay them 1 lakh 10. But should we have? We should have money, no? Do we have enough money? Only 50,000 is there here. Are you getting it? Oh, there's something happening. What are they doing? Come to fourth point. The company issued bonus issue of 2 shares. Adu amele. After redemption of preference shares, you create CRR. Using that CRR, you're doing bonus issue. But for redemption, we should have cash. To meet the cash requirements for redemption, company sold investments. Telling now. And investments are sold at 90% of cost on 31st of March. So how much is investments? Sold at 90%. So 10% loss, yeah. Investments. How much is it? 1 lakh. It is sold at 10% discount, meaning 90,000. I would write bank account debit. How much money will I receive? 90,000. How much money will I receive? 90,000. I would debit P&L account by 10,000 for loss. Correct? Then I will credit my investment accounts for 1 lakh rupees. Investments are sold. Got it? I will shift this entry below that our order will be nice. Now, shall I pay my preference shareholders 1 lakh 10? Sir, do we have enough money? See, we got 90,000 here. We had 50,000 previously. Now we have enough money. Shall I pay? So I would pay my preference shareholder. Preference shareholder account debit 1 lakh 10 to bank account 1 lakh 10. Done. Now I have to do 2 things. Number 1, this premium whatever I paid here has to be debited to P&L account. Second thing, I need to create CRR. Shall I do both of them? Beginning, I'll transfer this to P&L. I would write profit and loss account debit to premium on redemption account 10,000, 10,000. This has to happen to P&L. Here general reserve option is not there. How much money was available in P&L? 2023. P&L account balance was 18,500. How much did we utilize? 10 here. So if I would have used full money 10,000 year for preference dividend, then I would have not had enough money. So here it will be actually general reserve, not P&L. Are you getting it? If I use P&L account for distribution of preference dividend, then I won't have sufficient P&L account balance for premium on redemption. So that was general reserve. This is P&L. Done. Everyone, am I issuing any equity shares in the process? They made loss. Net profit 35,000 idea. Where is it there? Last year idea. It's okay. We'll use it for the next one. But it's okay. We have an option, no, general reserve or P&L. Either ways. I didn't read that yet though. Okay, sorry. The company redeemed preference shares at premium 10% over. Hey, in this process, have they issued any shares? No. How much is the nominal value of preference shares redeemed? 1 lakh. Total nominal value 1 lakh. We have to create CRR for 1 lakh. Shall I create CRR for 1 lakh? I would write general reserve. How much money was there in general reserve? General reserve is 1 lakh 20. I've used how much for our preference dividend? 10,000. We still have full 1 lakh here. I'll take full 1 lakh from here. I'll create CRR. Then CRR is created as per section 69 subsection 1 of Companies Act 2013. After that, what are we doing? They've asked us to do only one thing. Bonus issue. How much is bonus issue? The ratio of 2 for every equity share held. How many equity shares are there in that balance sheet? 10,000 equity shares. Am I right? For every share, we will give 2. So we should give 20,000 shares. How many shares? 20,000 shares of nominal value 10. 20,000 into 10. You need 2 lakh rupees. CRR available is how much? 1 lakh. Balance money will be taken from security premium. Is it there? 70,000 is there. But how much do I need? 1 lakh more. So I'll take 70 from security premium. Next, capital reserve. Is it there? No. There is no capital reserve. There is no capital reserve. So shall I take from P&L? General reserve? 10,000 is there. 1 lakh 20 is there. First I utilized 10. Then I utilized 1 lakh. Still balance left is 10,000. Pakka. Okay. General reserve is 1 lakh 20. Utilize 10. Okay. 10,000. So 1 lakh 80 over. Sorry. 1 lakh 80 over. Still I need 10. 20. I'll take P&L 20. 20 or 10? 1 lakh 70 plus 10. 1 lakh 80. No. 20,000 from P&L. Credit will be given to bonus to shareholders. Then write bonus to shareholders account debit to equity share capital 2 lakh mat dash. You understood? Easy one. We are left with last 5 minutes before 8:30 and we are left with one last unit, redemption of dividend. Very simple one. Actually not difficult. There are only 2 varieties, 3 variety of questions. 4 questions. Let me know if you find that part difficult. I'll tell you how to solve that with ease. Let's quickly do redemption of debentures. Shall we? Whenever we are redeeming debentures, remember we need to arrange for funds not on the date of redemption but well before that. So every year a part of our profit we'll keep it aside to ensure that such cash is not utilized for partying. So that reserve what is created is called DRR, debenture redemption reserve. So from P&L account, general reserve or P&L, profit will be taken away and then kept to DRR. Why? If I don't shift that profit to DRR, that profit will be utilized for bonus issue, dividend, premium or redemption of preference shares. If I transfer it to DRR, though I have cash, I can't use it for dividend. Why? Reserve is not there. I can't use it to redeem preference shares at premium. Why? They don't have P&L. I can't use it for any purpose. Are you getting it? So we create DRR. DRR should be maintained to full extent, but minimum 10% of nominal value of dividend. How much should be minimum maintained? What is the entry to create DRR? Reserve account debit to DRR. General reserve P&L account debit to DRR account. That reserve we kept aside. No, some part of the cash also we should keep aside. Only reserve is there. We might use the cash to buy new assets. We might use the cash to spend expensive advertisements. Then we don't have money to pay debenture holders. So what do? Some part of the cash to take it out from our cash box and keep it in an investment which is secured safe is called as TRR investments. So some mutual funds you can keep or some treasury bonds, everything, all of these types. So risk-free investments or less risk investment. That investment when you make, entry is DRR investment account debit to bank. DRR investment account debit to bank. That should be maintained to the extent of 15% of nominal value of debentures to be redeemed. Got it? Every question, check whether DRR is 10%, DRR investment is 15%. If it is there, very good. If it is not there, create that difference to bring DRR to 10%. Invest so much money to bring it to 1 lakh. On the redemption date, what do you do? Sell DRR investments. Use that cash to redeem debentures. TRR, whatever is there, transfer it back to general. That's your life. Got it? General reserve or P&L account debit to DRR, creation of DRR. DRR investments to bank, investing in DRR investment. When you redeem debentures, you sell your debenture investments. Sorry, you sell your DRR investments. Bank account debit, DRR investment credit. If there is profit, credit P&L. If there is loss, debit P&L. And after that, what do? You debit your debentures, credit your debenture holders. If there is any premium, debit that also. They are due for redemption. Here you received bank, no. Use that and then settle your debenture holders. And after that, that DRR what you had created is no longer required. Reverse it back to general. You get questions on this. Other one is debentures will have right to get converted to equity shares. You would have to compute how much percentage of debentures have the right to get converted to equity shares. How much will be converted? There is one question on this type. Opted for cash, opted for conversion. How many equity shares will be given? Actually, these two only. But questions will become, some items may DRR will be maintained, some items you have to create. You got it? Yeah. If in case you find this difficult, you just drop a text. I'll tell you how to basically go about these two topics, and from there it's quite easy. Actually, very easy topic. Yeah. Not too many times asked, and in fact, if they ask, there is not too many variety of questions also for them to ask. So please don't skip this topic. Very easy. You would spend maximum 1.5 2 hours, 1.5 hour, you can finish off the entire topic of debenture redemption. Okay. It is 8:29. I told I'll finish at 8:30 today. So timing is possible. It is definitely. And you guys also have to keep a very good track of your time. And don't give up on yourself. Stay very confident. Stay focused. And not much of time left. You don't have enough time to feel bad, sad, go low, and then come back up. So think you are a machine. You don't have emotions. So there is nothing like feeling happy, feeling excited, feeling sad, feeling tired, nothing. You are a machine. You eat food, you study. You sleep, you study. You wake up, you study. You bathe, you study. Throughout only one thought, exam. So work like a machine so that you feel like a human after the result. And the only pushing factor that you should keep in mind when you're studying throughout is, right now we're on 17th of December. Exam is on 12th of January. 14 days in December, 12 days in January, 11 days in January. About 25 days before exam, and each exam has one day gap. Let's take another 10 days. 35 days from today, you will be free from this, what to say, entire process of CA foundation. If you would want to take a break at any point of time, you feel like, let me not study, let me go out, take a 10-minute break, enjoy the fresh air, or stop studying for a day, chill for a day, you think of that, no? So if you take that 1 day break, you might have to compensate that with studying in the month of January, February, March, April. So it's 35 days or 4 months, 35 days or 4 months, 35 days or 4 months. Tell yourself, every time you feel like getting up and going, idiot, shut up and sit for 35 days. If you don't study for 35 days, you might have to study for 4 months. You get it? So you're choosing the easier option. You're choosing the simpler option. What is it? Studying for 35 days. If you give your 100% in 35 days, those 4 months you can do something better, CA inter in life. If not, you will be doing the same 35 days work all again. If in case you sit to study for those 4 months, when you open the book, no, it hits you really hard, because the moment you open the book, like, shit, I know this, I've read this. You failed. If you don't know it, you'll be like, shit, I don't know this. So either ways, whether you know it or you don't know it, it is not going to be happy February, March, April. February, March, April will become a very bad phase of your life. You don't do this enough things in December to remember that January is your exam. So remember, December is the key that you have, and this will decide your next 4 or 5 months of your life. How will it be? You're gonna see a very major hit in your life if you don't do enough good things in February. Do it out of fear. Do it out of happiness, do it out of motivation, do it out of being nice in the life, or doing it out of any other reason. Doesn't matter. Don't have to find same reason all of you. It might be whatever is the reason, but do it, and that's the only important thing. So some of you are doing it out of fear, some of you are doing it because you'll be happy later, some of you are doing it because you're motivated. Doesn't matter. Fill that engine with whatever fuel it needs to run. Someday out of fear, someday out of happiness, someday out of anxiety, someday out you don't know what to do. You go your I take okay, tell this, okay. Take help from your parents. Go to your parents and then tell, I didn't study today, scold me. You tell, they are really good at it. They've done it all their life, so they can do. Someday you don't feel like studying, you tell, no, I'm not feeling like studying today. Ask your mom, I'm not able to study today. But they say scold me. She will scold really nice, and she will ensure that you sit and study. They will discipline you enough. Let them do it for you. In case you call, I also don't mind. I can also scold you people. Yeah, and that's it. Hoping you people to have a very nice new year, and we'll be waiting eagerly to see you all on the other side. And that's it. Just a text away, and all I can do is include you in my prayers. I will surely do that. Can't throw the chits in the exam, but can pray for you on the exam day to hope you people will have extra sunshine. So, did you guys learn something new today, as well as yesterday? You guys have a little fun today. Remember, life isn't a battle to be struggling, it's a game to be enjoyed. Till the time you're learning something, you're having fun. It's all good. The day you guys stop learning something new or stop having fun, trust me, you might start struggling because you might be in a battle. So, thumb rule to stay happy is pretty simple. It's to stay in the game. So, for one last time on this day, I have just one simple question for all of you. Are we in the game? Are we in the game? On the top of your voice, are we in the game? That's it, guys. Tata, bye bye. Take care. See you all on the other side. Till then, have a great time. For those watching on YouTube, please do let us know in the comments how you found it helpful. And search for Accounts Man on Telegram and then follow me. I'll share the data, whatever I told, I'll share in the Telegram channel. Okay. Thank you, guys.